its way to around the 20 DMA, while the support comes in at around the 23,100 odd mark, going by the options data. The Nifty Bank as well yesterday, it bounced back in style, but it needs to rally close to around 1.5% from here to hit its 20 DMA, which is going to be the important mark. On the downside, the recent low that serves at a bit of a reference point. There are two stocks that I'm looking at for today's trading session. The sector of the day could probably be the metal index. Yesterday as well, we saw a rally. You have the dollar index that's cooled off. That's always music to the ears because base metal prices, they get a bit of a fillip from there. And Vedanta, because of his exposure to metals and because there's a special situation, I'll keep an eye out on that one. The other one I'm going to look at is Zomato. Yesterday, the last tick was around 230 rupees or thereabouts. It ended at around this 200 DMA. So very, very crucial factor. The shots have got piled into the system. It appears the longer term story is intact, but in the near term, there are some headwinds. So we'll have to see if the stock starts off in the red, whether it bounces from there on, because yesterday the number of shots that got accumulated in the system were very, very large. And, the average price was actually closer to around 240 rupees. The last tick was around 230 rupees. We'll keep an eye out on Zomato. Don't rule out it bouncing from the lows of the day.
Thanks very much, Nigel, for that. Keep an eye out on those names. Well, let's just play out some sound bites, right, of President Trump on those tariffs and a bit about TikTok as well. Listen in.
In terms of 25% on Mexico and Canada because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
When do you think you would enact those?
I think February 1st.
1st of February. Ed Yardeni is with us, President at Yardeni Research. James Knightley is Chief International Economist at ING. Gentlemen, great to have both of you here. Thank you for your time. Ed, how should markets sort of read what we've heard from President Trump on tariffs so far? Are we to make out that he's going to be pragmatic and it's going to be gradual in terms of tariffs and more of a negotiation rather than sort of putting it out there? Or
I think
you think it still could be the former? Go on.
Yeah, no, I think you're right. I think he's going to be pragmatic. He's going to be a negotiator. It's not going to be anything that startles or there's no shock and awe in his inauguration speech. He certainly talked about every issue that he's talked about before. So from that point of view, there's no real surprises. I think the market should just move on to the fundamentals that matter, and that's earnings. We're in a earnings season right now for the fourth quarter of 2024. We're actually raising our number. The market, the analysts are looking for a 9% increase on a year-over-year basis for fourth quarter earnings. We're looking now for 12%. We were thinking 10%, but the bank news was very, very strong. And so we think that earnings are going to carry the day here. That's what's going to drive the market higher from here on, not valuations, but earnings. And the companies that deliver better than expected earnings will be the ones that outperform. And there'll be a lot in the S&P 500, and there'll be a few in the mid-cap and small-cap area.
You think, Ed, there is, I mean, if it is going to be gradual on tariffs, sorry, just to stick with Trump for a bit longer, you think if it is that way, it's going to pan out that way, there is meaningful downside for the dollar, the broader dollar index?
I don't think so, because I think the Fed is on pause. I don't think they're going to be easing. I think one of the reasons the market did better last week is because Fed Governor Christopher Waller started talking about inflation being pretty close to where they want it to be and that there might be several more rate cuts. But that just doesn't make sense to me. I think the economy is going to continue to be strong. I think inflation is going to remain sticky above 2%. So I think the Fed's done. If the Fed's done, then I think the dollar remains strong. And I think what we're continuing to see is a tremendous amount of inflows into our capital markets, into our stock market, and into our bond market. Bond yields are very attractive here relative to what's available overseas. So maybe you get a little better return in the UK, but you get more risk. So all in all, I think the dollar remains solid.
Okay. Got that, Mr. Yardeni. Let's bring in James Knightley as well from ING. James, hi. Do you broadly concur with that view? I mean, where do you see the dollar stabilizing? Of course, yesterday was a big pullback, relief reaction because there's no immediate tariff move. But what do you see ahead for both the US 10-year as well as the dollar?
Yeah, I certainly see the dollar remaining very strong, to be honest. We're seeing, again, a reaction this evening, US time, in terms of those comments, those headlines surrounding 25% tariffs on Mexico and Canada, leading to a bit of concern that that could yet see tariffs ratcheted higher as we progress through the year. There's still a lot of geopolitical uncertainty as well. And of course, you've got a situation whereby the Fed is not in a hurry to cut rates any further, whereas the ECB, the Bank of England, other central banks around the world very much are in rates cutting mode. We've got a situation whereby you've got no real political leadership in Europe right now. We've got German elections coming up in February. French elections aren't happening until the summer. So if you want any support from growth, it's going to have to come from the central banks. And that's that narrative, I think, again, points to more rate cuts coming through from there. And that should, again, help keep the dollar relatively supported.
All right, James, what are you factoring in now? But in terms of Fed rate action, I think the last time we chatted, you were hinting at 2 to 3. But going by the recent commentary and data points, are you trimming down that?
I think, like a lot of banks, we're still going for 2 to 3 rate cuts. I think still 3 rate cuts is our view, but certainly it's going to be later. We have been, for the last 6 months of last year, looking for a March rate cut. We're going to be pushing that probably back to June. So nothing really for the next 6 months or so. And indeed, we've got a Fed meeting next week, and it's likely to be one where the Fed is telling us, again, that they're in no hurry. The growth backdrop's pretty good, and Donald Trump's likely to cut taxes, light tax regulation as well, keep the growth story supportive, and in an environment where we're probably going to see more immigration controls, could be at the margin a little bit inflationary. Tariffs, again, could lift prices a little bit more. I think the Fed will be, again, signaling little inclination to cut rates quickly, but we are still nervous about ongoing rises in US Treasury yields, fiscal sustainability in a relatively high inflation environment.
Okay, all right, got that, James. Ed, coming across to you. The last time we were chatting, we were, talking about maybe because the kind of gains that a lot of investors in the US market are sitting on, we may not rule back some kind of a pullback. But earnings, as you said, have been fairly good, at least the start to the earnings. And it appears the US economy as well is on a firm footing. In this sort of a backdrop, will you now rule out that possibility of maybe a 10-15% cut in the equity markets in the United States? And now, in fact, maybe we could be ending the year with some gains?
Well, I think a week ago, we did have a pullback on stronger than expected economic indicators. And so the market sort of dialed back how many rate cuts the Fed would deliver. And then last week, we had softer than expected, cooler than expected inflation numbers. We also had better than expected bank data. And so the market was very strong. So right now, I think you can chalk it up to volatility. I don't know that we're making a definite trend to the upside to a breakout. But I do think that the market is likely to move higher over the rest of the year. Still using 7,000 as the S&P 500 by the end of the year. I think it could be none and done for the Fed because the more we get into the year, the closer we're going to get to rate cuts, to tax cuts. And then I can't see the Fed stimulating the economy when fiscal policy is doing that.
Just, James, very quickly, come in on this. Take your point, Mr. Yardeni. I mean, you're still thinking that the bulls will have their way on Wall Street. James, I know you're not into sort of managing money or don't call the markets, but generally the way you see all of this tying in together, do you see risk assets like U.S. equities continuing to appreciate, or is there anything on the horizon that makes you think that at some point there is going to be a pullback because the market perhaps is not reading entirely into the full macro signals?
I think in the near term, the risk environment is going to remain pretty positive. As Ed was saying, I think the earnings story for the fourth quarter should be very good, and that should carry momentum through the early part of the year. And again, light touch regulation, lower taxes, again, should be relatively supportive for that. Still a lot of uncertainty about how tariffs get implemented, but my concern is if the Treasury yields do keep marching higher. We've got mortgage rates up above 7%. We've got consumer credit charges up at 25-plus year highs. If those do keep pushing higher in an environment of slightly higher inflation risks, some concerns about it, fiscal sustainability stories, that could be where there is a little bit of vulnerability, I would suggest.
All right. We'll leave it there for now. James, great conversation. Thank you very much. Ed, it's always a pleasure having you here on CNBC-TV18. We'll lean on both of you over the coming days to decipher if we are to hear more on tariffs or otherwise on other topics from President Trump. Well, we'll take a quick commercial break here at this point. We're going to come back with the stock-specific action that you need to watch out for, the special top 10 segment. We're looking at names like Dixon, SBI Cards, Oberoi Realty, Suntec Realty, Paytm and Sugar stocks on the back of positive news flow. And Zomato, L&T Finance, MCX, J&K Bank are stocks on our radar on the back of some negatives, at least to start with, in the red.
Can actually give you a range of 500 kilometers in a single charge. So that is comparable with the Mahindra SUVs, electric SUVs, which have been launched. That will also give a 500 kilometers plus range. Now, there are 10 color options for a customer to choose from. There are changes on the exterior. It's got a more muscular look than the current e-Vitara lineup. It's got a long wheelbase of about 2,700 millimeters on the inside. Well, there is a lot of excitement of what this will offer. It's got a fully digital cockpit. You've got ADAS level 2. You've got over 60 telematic features. You've got a rotary knob to choose normal, eco or sports mode for that matter. You've got a twin deck floating console in the car. You've got ventilated seats. You've got a 360-degree camera. The passengers in the second row get leatherette bucket seats is what we are told. Now, the charging time for this car with a fast charger would be about 40 to 50 minutes. With a slow charger that you would find at your home or in other places such as in your office would take about 5 to 6 hours for that matter. When does this car really hit the market? Well, it'll be exported first. The production begins in March or April. Perhaps by June, you will get it in India. And in terms of pricing, well, that's something that people are really excited about, but disappointing that Maruti did not come out with the pricing. But we're told that considering that the EV SUV price point in India is now around 15 to 20 to 25 lakhs, the company, Maruti Suzuki, will price the e-Vitara also very aggressively. With Veer journalist Akhilesh Singh from the Auto Expo, this is Parikshit Luthra. We're at the Hero MotoCorp Pavilion. The company has launched 4 new products, 2 new scooters, 2 new motorcycles in the range of 86,000 rupees to 1,80,000 rupees. But one of the products that is really catching a lot of eyeballs is the Surge, the Hero MotoCorp Surge vehicle. It looks like a 3-wheeler, but is it? Satyendra, why don't you show us what this vehicle can actually do? Have you ever seen a scooter detaching itself? Satyendra is detaching itself from us. Yes, now you have a 2-wheeler. So if you want to use it as a passenger vehicle to ferry around commuters from one point to another, you can do that. Also, if you want to leave the 3-wheeler at home in the evening, use this as a scooter for your shopping or family time, you can do that as well. And this is not just in the commuter segment. You also have a cargo variant of this. Here you have the Hero Surge in a cargo variant. Here you can keep boxes, any e-commerce delivery items, fruits, vegetables, and you can use this for last mile mobility and delivery. Even this one gets a scooter which you can detach and use independently. So a very interesting concept, a literally 2-in-1 vehicle, so to say. It's called a club.
Welcome back. Here with us on Bazaar Morning Call, and markets across Asia, like I've been saying, are more green than up, which is why the implied open is suggesting that, finally we could actually start off almost 18 to 19 points on the positive side of the screen. So now, what about individual stock? We've discussed the big global headlines. Let's boil this down to the individual names that you need to keep an eye out on, and our research team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Manglam, let's start with Zomato. What drama, high drama towards the end of trade yesterday. So what came through on the call and the notes you've seen?
Well, from the call and the notes that we've seen, it's more of the same. What we saw in the shareholders letter, the company went ahead and reiterated that in the call itself. They are advancing investments in the quick commerce business, and as a result of which, in the very near future, losses in Blinkit will continue. In fact, they say losses in quick commerce are largely on account of pulling forward these growth investments, and heightened quick commerce competition has led to a temporary pause in margin expansion. They said it in no uncertain terms. There is losses which are likely to continue, and there is a temporary pause in margin expansion out there as well. Food delivery revenue growth was slowing down because of weak consumer sentiment, and the EBITDA margins out there can cross and sustain above 5% over the next few quarters. District has crossed about 6.5 million downloads. Going out business, GOV can grow at over 40% for the next couple of years. But the street is still focusing on Blinkit itself. If you look at the trend, Blinkit, the same time last quarter, had done a loss of almost 89 odd crores. And because of the increased investments, losses are at around 103 crores. So the street has cut their EBITDA estimates for this year, though they've increased their revenue estimates for next year because the growth has been increased because of the front loading of investments. A lot of target price cuts that have come by.
Okay, all right, Mangalam going with red on Zomato, so we'll keep an eye out on that stock. But let's hop across to Abhishek. He's here to tell us about L&T Finance. Morning, Abhishek.
Morning, Nigel. It looks like a weak set of numbers coming in for L&T Finance. Net interest margin is at 6-quarter low of 8.5% versus 8.9% in the previous quarter. Asset quality continues to see deterioration, so our gross NP ratio is at 4-quarter high. The AM growth is very low, just 2.3% sequentially, which is one of the lowest growth that you are seeing in the last 5 quarters. And this is on account of the fact that disbursements have slowed down massively. Disbursal growth is just 2.3% YOY, which is one of the weakest growth that you are seeing in the last 7 quarters. And sequentially, disbursals have grown by just 0.3%. Disbursal to AM ratio is also weak, that I've calculated close to 14% versus 28% in the previous quarter, suggesting that the tenure of the book has declined massively. Back to you.
All right, Abhishek, thank you very much for that. That's L&T Finance. Keep an eye out on the stock. We have the management, by the way, joining us at 9:40 this morning to take us through some of those numbers. MCX is the next one we want to address. Vamakshi is here with details. Vamakshi, morning.
Well, good morning, Prashant. The company reported a rather muted set of numbers. When you look at the growth rate, that has slowed down. In fact, in quarter 2, we saw double-digit sort of growth rate throughout, across the board. But this time around, the growth rate has slowed down to single digits. We're seeing a 6% quarter-on-quarter jump in the revenue. EBITDA is up 8%. The EBITDA margin too has improved by 125 basis points. But this is much lower as compared to 600 plus basis points improvement that we saw in quarter 2 of FY25. The net profit also saw a single-digit uptick of almost 4%. When we look at the key internals, nothing much impressive out here as well. Traded clients saw an uptick of 1.5% quarter-on-quarter. They now stand at 6.9 lakhs. ADT in futures and options both combined saw an uptick of 6.9%, and this growth is largely being led by the growth in the options bit. The market share has seen only a marginal improvement, so overall not a great set for MCX. A con call is scheduled later today, so we'll be watching for commentary that comes through from the management, but going with the red for MCX as of now. Apart from that, lots of sugar counters in focus, and we'll talk about that later.
Yes, absolutely, because now sugar exports have been opened up, and we're going to come back to Vamakshi to figure out how that's helpful for the companies. But first, let's go to Sudarshan Dixon. Sudarshan, not bad, right? Stable for Dixon?
Good morning, Survi. So if you compare with the actual numbers year on year, you will see that all the operating numbers have seen a growth in triple digits, but numbers are largely in line with estimates led by mobile segment, which saw a growth of almost 190%. Now the contribution of mobile segment to total revenue has increased to 89% from 67% in the same quarter last year. And company is set to meet or beat the revenue guidance. If you remember, after Q2 earnings, company had spoken to CNBC-TV18, had said that in FY25 revenue will be close to 40,000 crore, and in 9-month FY25 it has done nearly 29,000 crore. On the margin front, it has a guidance of 3.7 to 3.8%, and in 9-month FY25 it has done 3.7%. Talking specifically about Q3 earnings, profit is up 123%, revenue has increased 117%, EBITDA is up 112%, and margin almost flat. It has come in at 3.7% versus 3.8% in the same quarter last year. Brokerages have a mixed views on the stock considering rich valuations, but if you look at the commentary post earnings, it's very strong, especially on the order book, and that's the reason I'm going with green for Dixon Tech.
Okay, all right, and we'll be chatting with the management at 9:40 a.m. to detail the past quarter's numbers and get their sense about how things are shaping up going ahead. Let's go back to Abhishek. He's here to tell us about SBI Card. Abhishek.
Well, Nigel, you were on leave in December, and the December credit card data shows huge spending, especially you might have done on a lighter note. So industry data shows a huge momentum with respect to spends in the month of December. Now, total cards is up 10.5% YOY and about 0.8% month on month, but spends are up close to 14% YOY and more than 11% month on month. So average spends have increased by 3.2% YOY and about 10.24% month on month. SBI card data shows better momentum on a month-on-month basis. Total cards is up 9.5% YOY and about 1% month-on-month. The total spends are down 3.5% YOY, but they are up 12% month-on-month. So average spend is up about 10.8% month-on-month for them. With respect to their market share, in total cards, their market share has increased to 18.74% versus 18.69% in the previous month. Even the spends market share has increased to 15% from 14.88% that they had earlier. Back to you.
All right, Abhishek, thanks a lot for that. And I can confirm to you that in December, my credit card bill is the highest in entire 2024, but I can't say that it was a SBI card. Thanks a lot, Abhishek, for joining in with that. Now let's hop across to Vinny. She's here to tell us about a couple of real estate companies, Oberoi as well as Sunteck. Vinny, take it away.
So both these companies have reported the Q3 FY25 numbers. Oberoi Realty, a strong performance that's coming from the company. Revenue seeing a growth of around 34%. EBITDA also seeing an improvement of 68% on a year-on-year basis. Margin seeing a sharp improvement, and profitability also is seeing a good improvement of more than 70% growth on a year-on-year basis. Now, what's led to this strong performance? One strong performance was across verticals of the company. So whether you look at the hospitality business, that's seeing a good growth of around 20%. EBITDA for the hospitality business is also seen a growth of around 11%. Improved occupancy across its annuity assets, that is also very good, as well as residential business that's reporting a pre-sales growth of around 144%. So that's going to be interesting to watch out for going forward in terms for the company. Margin also has seen a sharp improvement, mainly because of the higher share of the commercial earnings, as well as healthy margins in the residential business and healthy margins in the hospitality business is aiding the margins of the company. So expecting a green here. Sunteck Realty, similarly, we're expecting green here as well. Revenue seeing a good growth of 281%. Profits, company has seen a profit this time versus a loss last year. And EBITDA coming in with a 48 crore EBITDA and an EBITDA loss of in the last year. Margins also seeing an improvement, and it's coming at 29.9%. What's leading to the improvement this time is in terms of the revenue that was aided by the additional units in Naigaon that was there for the project in BKC as well, which is supporting the growth of the company. And Sunteck Realty is expecting a launch coming in Q4 FY25. Keep an eye out on that. They have good numbers coming in terms of going forward. Only thing to watch out for in terms of con-call is the difference that is there in terms of pre-sales as well as the collection. That's lagging a bit, so we'll watch out for commentary on that front going forward.
Right, Vinny, thank you very much for that. Back to Abhishek. Paytm should be in focus, and J&K Bank also on the back of numbers. Abhishek, over to you.
Well, Paytm held its analyst call yesterday post-market, in which they have given their EBITDA break-even guidance to be in line with the earlier guidance. So the company had guided for EBITDA break-even, that is before ESOP cost profitability by the end of financial year, and they have reiterated the same. General guidance, the goal of the company is to have double-digit EBITDA margin soon, and they also want to have substantial PAT for them. Net profit break-even guidance is about 2 to 3 quarters due to steady fall in ESOP expenses, and they have also given another guidance. The company expects continued steady growth in its merchant loans as well. J&K Bank, disappointing set of numbers. They have lost market share, especially on the advances front. Deposit growth is about 9.65% YOY and 2.2% sequentially. The loan growth is very weak at close to 7% YOY and a decline of 0.15% sequentially. Net interest margin, however, improved both YOY and quarter-on-quarter, but their asset quality has deteriorated. Gross NPA ratio has ended up by 13 basis points on a sequential basis. Back to you.
All right, Abhishek, thank you very much for that. And now let's go back to Vamakshi to figure out why sugar companies could be in focus and maybe they could see a bit of green. Vamakshi.
Well, absolutely, Surbi. They could see a bit of green today, and that is because, it is a CNBC-TV18 Newsbreak confirmed the government has gone ahead and decided to allocate export quota of 10 lakh tons for 2024-2025. Keep in mind that this is lower than what ISMA had earlier demanded, which was somewhere around 20 lakh tons for the exports quota. But overall the impact is expected to be positive. In fact, a couple of days ago, when this news was sort of floating around in the market, we were joined by Prashant Biani from Elara Capital, and he had highlighted that this could be beneficial on the balance sheet as the inventory gets cleared up. The working capital could also, it could work out favorable in terms of that as well. But the margins could see only a mild uptick is what he had said. So overall, going with the green for all of these sugar counters.
Okay, all right, got that, Vamakshi. Thank you very much for the details. Let's quickly recap our list of top stocks to watch. Now, the ones that have positive news flow around them are Dixon Tech, SBI Card, Oberoi Realty, Suntech Realty, Paytm, and sugar companies. The ones that could see some negative reactions today are Zomato, L&T Finance, MCX, and JNK Bank, all of them on the back of earnings. Well, that's the equity list for the morning, but how is the commodity market looking at Trump 2.0? We've got Manisha joining in with the latest. Manisha, I hope you managed to get some sleep because there were so many headlines and orders coming through the night, right? Interesting reaction. The crypto markets are a little, maybe a little disappointed, but maybe they know better times are coming. But yeah, tell us what you made of all of it.
Well, absolutely, sir. It's been a very mixed market, and the street is still trying to number crunch, understand event, and digest whatever was said yesterday. And this is just the beginning. Let's get that. So I'll start with the crude oil prices, which have rebounded from its lows. The U.S. crude prices have continued to see further decline, rather. The U.S. president has now repealed 2023 memo that barred oil drilling in 16 million acres in Arctic. Also, there is uncertainty right now on potential adjustments to the U.S. sanctions on Russia. That is yet to come. But two things are very clear when it comes to energy. One, there's going to be a higher use of fossil fuels. Two, there's going to be more oil available. And three, U.S. does want to play a larger role in exports when it comes to crude oil and natural gas. So these are the things to watch out for. When it comes to metals, it also has been about the dollar index, which fell by nearly a percentage point yesterday. That was supportive. But then Trump has refrained from making concrete changes to trade policy, but has also said that the tariffs could be levied against Mexico, China, Canada on 1st of February. So the details of that, and until that happens, we are going to be looking at very choppy markets continuing. So while we have seen the safe havens like gold and silver gain up, the other metals have been slightly under pressure because when the U.S. president has revoked 2021 order that ensured 50% of all new vehicles as EVs by 2030, that would have meant more metal demand as well. Now, with tariffs, EVs, what is going to be going forward is something that will tell you on where the markets are. So until that happens, we're looking at choppy and slightly decline in copper, aluminum, zinc, steel, iron ore. All of these metals actually trading slightly in the negative in Asia right now.
All right, Manisha, thank you very much for that. So that's commodities in focus. We'll take a quick commercial break here. Sayan Mukherjee of Nomura India will be with us to discuss his outlook on the market. Has it changed in the last 12 hours or so a little bit, maybe at the margin after Trump 2.0 and what he said? We'll ask him in just a bit.
Developed by Hero MotoCorp over the last few years. The company may launch this formally in the middle of 2025. While it is an interesting concept, it remains to be seen how the customer and how the e-commerce market actually accepts it. With Veer journalist Akhilesh in New Delhi from the Bharat Expo, this is Parikshit Luthra.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
So you've been playing
international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? How you've matured as a player, your journey, your experience?
Yeah, definitely, yes. The person you are, the confidence levels that you show on court are very important. And I think as a person, when you're right there, you know, when you stand and people, when they look up to you, they also need to understand that, yes, you know, she has done a lot for the country. And that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right.
Yeah.
You know, when you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and what you stand for, whether if it's on or off court. I know people might say that, you know, you've been very successful, what else you need in life? But I think to get till there itself was a tough task. But I have been very fortunate to have people around me have been very, very positive and very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to, you know, work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years and years of hard work to come to a level. But I think coming to a level is one thing, but you know, maintaining that level is a different thing altogether.
Welcome back. So the markets, like we've been saying across Asia, are managing to flash a little bit of green. And for us as well, the implied open is suggesting that we'll at least start off on the positive side, at least 20 points higher. But then what next from here? That is the question. Well, we've got Sayan Mukherjee, MD and Head of India Equity Research at Nomura, joining in. Sayan, we have you on a very interesting morning, right, where the announcements just have been non-stop over the last 12 hours or so. Now, take us through, now that this event, at least the inauguration, is out of the way, where does it leave us here in India? You yourself have been, you know, in your latest note, you've been talking about the slowdown in corporate earnings. Then there is the global, you know, backdrop. We have this flight of dollars, which has been absolutely unstoppable from India. So what do you see ahead next few months?
Yeah, thanks for having me and good morning. So I think, you know, I mean, we will probably see more announcements in the days to come. So look, I know we are in an uncertain world at this point, and I think that's something which we feel is not very comforting. I mean, risk premiums can go high. It's already at a relatively lower level. So, you know, we start the year with a fairly cautious note. As you know, like we have our year-end target, which is, you know, expecting just around a low single-digit returns. So I think our expectations are muted, given that not only we are dealing with uncertainty at a global level, but also domestically, you know, we are facing earnings slowdown, and you know, I think we can see you know, continuous earnings cut at least in the near term. So yeah, it's a bit of a cautious outlook, and you know, one needs to be extremely selective currently.
Sayan, on earnings, let's just quantify that and get that out of the way. You know, how are you looking at Q3? Because the big sort of hope was that, okay, first half was difficult, Q2 was an aberration, there'll be a pickup in the second half. Do you subscribe to that view or not? And for FY25, where are you on the earnings numbers, the targets?
So, you know, FY25, you know, I think we would probably see mid-single-digit earnings growth, somewhere around 5%, which is a substantial slowdown compared to the earnings growth that we had seen between, let's say, fiscal 18 to fiscal 24. I think the expectations now going forward are still elevated. When I look at consensus earnings for fiscal 26, we are looking at almost 17%, and year after it's around 15%. I think we have seen a strong recovery in earnings to GDP ratio, and we are in a cyclical slowdown. as far as that ratio is concerned. So a significant outperformance of earnings growth to, let's say, 10 to 11% nominal GDP looks a bit stretched at this point. So we think we could see at least 3 to 6% earnings cut compared to what the consensus is expecting. And therefore, from the next, let's say, year or 2 years, probably we will see somewhere in the range of low to mid-teens, somewhere around 13% earnings growth is what our expectations would be.
All right. Hi, Sayan. Good morning and good to see you in. But you're expecting the equity markets to at least give positive returns for this year? Because, I'm looking at the range. We're closer to the lower end of the range. I think we're close to 5% away from the lower end. But on the upside, it could get stretched to around 25,000 odd. So are we at the lower end of the range?
So actually, we just have around low single digit kind of an upside if you look at our Nifty target for the end of the year. In fact, we are saying we could see possibly a negative year as well. And on the best case, it could possibly be high single digit kind of a return, depending on how a lot of the stuff globally sort of plays out. So to us it appears that we won't see a sort of a massive outperformance. We will probably see another year of consolidation in 2025.
Okay, all right. Sayan, what about individual stocks and sectors that you like? I see that from the consumption theme, where there is plenty of debate out there, you're sticking to staples and you prefer them in comparison to discretionary. Tell us more about that. Stocks like HUL have done absolutely nothing in the last few years, but maybe now that could be the pocket to hide in. Tell us more.
Yeah, see, I think, as I was mentioning at the start, I think we have to be extremely selective. I mean, and we have already seen that, right? So if you see some of the performances, in the first few weeks of this year, I mean, in banking, in IT services, we have seen massive divergences in stock performance based on what the expectations were and how the results played out. So actually, it's a very, very, stock selective market, I think. But yes, on consumption, we think we had gone through a period of underperformance. I think at the margin, there is realization that consumption needs to get support, because I think from an overall growth perspective, it's important that we see some kind of support to consumption from a policy perspective. It has been largely supported. I mean, it has been largely, policy has been largely supportive of investments. But I think at the margin, we will see that it could come in the form of, let's say, lower taxes. And given the underperformance here and expectations running very low, we think on a relative basis, risk reward is relatively favorable for staples. And that's the reason we kind of gone with the Novobit call, for staples this year, given we don't have a very high expectation from the broader market.
Sayan, you have coverage on quick commerce as a space?
Yeah, we do cover, one stock there, yeah.
Okay, at the margin, what's the view now? I mean, is the best behind for now?
No, see, I think the narrative, on quick commerce has undergone a change. I mean, last year, the expectations were a lot more bullish. Now what we are seeing is rising competitive intensity in that space, right? So to that extent, it just, it hurts the sentiment at the margin. And, the space has done well. So if you look at the, stock performance over the last 1 year, it has significantly outperformed the market. And this is what I was, referring to. I think, expectations and the narratives have been extremely strong. And therefore, though the longer term story, we still remain constructive. We think the incumbents will probably do a good job from a longer term perspective. They have an edge. But the fact is, this incremental negative earnings because of higher competition can have a negative impact in the short term.
All right, Sayan, point taken. Thank you very much for joining us. Thank you for being here on CNBC-TV18 on an important day like today. Appreciate it. We'll take a break here. Mitesh and Sudarshan with us on the other side, and we'll run you through some specific trades. Stay tuned.
even more, time and hard work, and it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion. So I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it. I mean, wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but I think it's not just end of the world. When you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then I just missed it out. But I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember which was very close to your heart and was difficult to get over.
Recently, I think, not recently, but Tokyo, I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course, it was very, very hard, but I had mixed feelings, mixed emotions where, I was feeling bad, where if I have to think, I lost an opportunity, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match next day in the morning, and obviously I just gave my 200% and I got that bronze back. So
right, just come back harder. Just come back
even
harder.
I think the belief is very, very important. Just believe in yourself.
We'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj.
Welcome back. Well, most of the Asian markets have managed to hold on to that green, albeit mostly at a flat line. The Japanese market's absolutely flat. Hong Kong's up. Shanghai is the one that's actually slightly lower. Taiwan's also flattened out. But for us, the good news is that the GIFT Nifty is indicating, I mean, the implied open that is indicating that we'll continue to build on that positive start. Look at that. It was about 18 points when we started the show, then 20, and now 46 points. So it looks like bulls will be off to the green side today. Let's take a very quick break. We'll come back on the other side and then we'll discuss the technical setup as well as the trades with Sudarshan and Mitesh.
Want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, how many hours ever it is. I would say it needs to be useful, and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play, is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times, but whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, What do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom or from bottom up?
I think it's very important that you have a very good system. That is very important, and I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, you know, we need support or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening, so that, you know, there are a lot of youngsters who are doing really well, but, you know, not able to prove themselves. I think leagues, now if you see there've been Coco, and then there've been tennis and pickleball, a lot of leagues are coming up, and I hope there will be a lot more in every sport, because these kinds of leagues, you know, a lot of people get a recognition in terms of, you know, they get to see a lot of athletes who take them as an inspiration and prove themselves and have that confidence that yes, even we can do it. Because a lot of people are doing really well, are working hard, but they're not getting that opportunity or not able to have that platform where they can prove themselves. So leagues that like these will definitely help them to come up and you know, think that yes, you know, we also have something to actually look up to.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters, as we've done for the
Welcome back. Well, as promised, we have our technical experts with us, Mitesh as well as Sudarshan. Good morning, gentlemen. Thanks a lot for joining in. In a few seconds from now, we'll get the pre-open rates. But Mitesh, you go first. You know, the dollar index has cooled off, and factoring that in, the GIFT 50 suggesting maybe we start off anything between 20 to 50 points higher. What's your take? Is it going to be a good day?
Good morning, Nigel. So I think, you know, there is a good chance of this being a positively biased day. One, we've closed right below 23,350, 360 zones. I think today could see some continuation and break beyond that. That's also the average of the 10-day exponential, that's also the area of the 10-day exponential moving average. So I think once we cross these levels convincingly, I think another upside of 150, 200 point kind of opens up. So I would be slightly positively biased unless until we see that the market fails to sustain the gap and immediately starts coming and trading below 23,340. So in case we start declining, then I think you're back to the range.
Okay, got it. Sudarshan, what about you? Mitesh is hinting at a mildly positive, day. He's leaning towards a positive day. What's your take?
Yeah, good morning. Well, yesterday I suggested going long in the Nifty with a tight stop at 23,100. That view continues. And you know, that's good news because it means that a trend started, and that trend is likely, at least as of now, is likely to continue today. So once we have a theme, that means that there is more confidence in the trend. I would suggest just raising your stops from 23,100 to 23,200. Keep a very tight stop loss. If you are long, stay long with that stop. If you are not long, look for a minor dip to buy. It is possible that we may be beginning, I mean, it's just a hope and some chart action, we may be beginning that pre-budget rally.
We may be beginning the pre-budget rally. Look at the rupee also. That is substantially higher. I mean, substantial strength on the currency coming through. I think that flash came and then disappeared. We'll have it back on. But I think opening much higher as compared to about 1/3% higher as compared to the dollar this morning. So 86.31 on the dollar rupee rate at this point in time. Gentlemen, good morning. In terms of specific, there you go, 86.28 compared to 86.57. So the dollar is broadly lower everywhere, and emerging market currencies, etc., are seeing some of that pressure come off. Sudarshan, specific stock trades?
Well, it's all, again, a buy list. Markets do go up. UPL is a buy with a stop under 545. Divi's Lab, which has already been in a strong uptrend, has a minor dip and a sideways move. Buy it there with a stop under 58.70. Similar pattern for Granules, decent up move, now a minor correction and sideways, sort of move, apparent imminent uptrend. Buy Granules with a stop under 585, and National Aluminium is a buy with a stop under 205. So all four are buy ideas.
Mitesh, what about you?
So I have a majority calls on the buy side except one sell. On the buying side is Kotak. Now, yesterday, we had a very massive move over there. So buying at such a high level could be slightly risky, but look at the overall pattern, and getting past this 1900 mark was a very important thing on the short, medium, as well as long-term chart. So Kotak, I would recommend buying with a stop at about 1895, or just maybe a rupee or 2 rupee below it, and a target of 1970 to begin with. Bajaj Finserv is a buy with a stop at 1712 for targets of 1790, and Divi's is a buy with a stop at 5944 for targets of 6150 in the short term. One sell call though, that's Infosys. Keep a stop at 1835, look for targets of 1755.
Okay, we'll come back to both of you in a bit from now for more trades, but thank you for joining us now, Mitesh and Sudarshan, with that. Well, one of the world's foremost macro investors who's got an extremely successful track record of making big macro calls is Stanley Druckenmiller. He spoke with our sort of sister channel, CNBC, in New York, and these are his comments around Trump, tariffs, inflation, the Fed, and of course, market positioning. Listen in.
We're probably going from the most anti-business administration to the opposite. So we do a lot of talking to CEOs and companies on the ground, and I'd say CEOs are somewhere between relieved and giddy. So we're a believer in animal spirits. Paul Ryan was on your show last week talking about a 32% increase in business confidence over the last 12 months. I think that's probably a record in terms of change. So the economy looks very, very strong, at least for the next 6 months, which is about as far out as one can see with any degree of confidence. I would say it's complicated. Despite what I just said about all the wonderful things about the economy, we have an earnings yield to bond yield, probably the most unattractive level, not probably the most unattractive level in 20 years. So you're going to have this push of a strong economy versus bond yields rising in response to that strong economy. And that kind of makes me not have a strong opinion one way or the other on the market. I will say this. In my business, every change creates change in security prices, and having this kind of radical change from one administration to the other, in addition to what's going on in the private sector with innovation, then you got deregulation from the government, disruption. I think there's going to be plenty of change and plenty for your viewers to do. I wouldn't worry about the market. I'd focus on individual stocks. I still have a short in treasuries. I know a lot of people have been surprised by interest rates rising after the cut. Of course, we weren't, because I thought the Fed was making a mistake. And I was worried about the same animal spirits we've been talking about, and of course, our horrendous fiscal situation. Having said that, we've come quite a ways. I think we're probably in the 7th inning, but sometimes you can make a lot of money from the 7th inning to the 9th inning. And who knows if the Fed stimulus into a melt-up in asset prices with the kind of animal spirits I talked about give you upward inflation, which is not our forecast, but we're definitely open-minded to it, and we're not expecting lower inflation. That could tip the bond market and create a problem. So we're still short treasuries, but we're certainly not pressing the size of that position now. As you know, we have a big fiscal problem, mandatory spending, plus interest expense is literally 100% of revenues right now. and both sides of the aisle have said they are not about to cut entitlements, which is the elephant in the room. Having said that, because of that, we need pay-fors. So our main choices are an income tax and a consumption tax like tariff. So when I say tariffs are the lesser of the two evils in terms of those two, because we have a fiscal problem, we need revenues. Tariffs will generate revenues. We also have a private savings problem in this country. They're far too low. So I think a lot of economists who are out raising the alarm bells about tariffs would probably be fine with a consumption tax. Scott's extremely capable, big brain, very thoughtful. He's in the unique position that I don't think any other Treasury Secretary has been in, where he's been an active participant in markets, as he said in his confirmation hearing. He's been to 40 countries. I know he's been involved in markets in at least 40 countries. So he's extremely capable. He understands the fiscal situation. I think he understands that the biggest risk to this administration is both fiscal and inflation. Having said that, he's not in charge. He's extremely persuasive. He had no problem persuading me many times when we worked together, but I just don't know how it's going to work out. This is a huge, huge problem he inherits. The deficit is currently at 6.7% of GDP. It's $1.9 trillion.
Okay, by the way, the pre-open rates are in, so let's do a quick check on this. The Nifty in the pre-open is up about 76 points, so it's looking good. And leadership is pretty much across the board, actually. I mean, you've got the likes of L&T doing well. There's SBI that's doing quite okay. Some of the metal counters are up and about. Remember, because of this pullback in the dollar, there's a bit of a global trade, risk-on trade that's built across different asset classes, including metals. And that seems to be showing up. Hindalco, JSW Steel, these are stocks on the upside. I must, however, add, look at Zomato in the pre-open. Not sure if this is how severe it's going to be. But in the pre-open, Zomato is down another 7% after yesterday's about 3.5% decline adjusted. The concern is very much out there, and the company has said it upfront that Blinkit is going to be suffering losses for now because of the store rollout, accelerated store rollout, and the fact that there is competitive intensity, and the price cuts, I think, are now beginning to get that reality is sinking in, and there's about a 7% drop. Let's see if the buyers come in at some point in time. Like Science said, in the medium term, for instance, Nomura is still constructive on the space. But for the time being, let's move on. From the US, let's head to Davos, where we've been getting lots and lots of insights from the top business leaders and political leaders as well. Now, this is an exclusive conversation that Shireen had with the TVS Motors management. The company aims to outpace industry growth in 2025. That's the word coming in from Managing Director Sudarshan Venu, speaking to Shireen from the sidelines of the World Economic Forum. He says the company is broadening its EV portfolio, and that remains a key focus area.
Absolutely, we are seeing signs of improvement in the first 3 weeks of January. I think because of the election and things, certain government capex had to be slowed down. But post the monsoon, there is a pickup. And the first 3 weeks of January are very exciting. And this sets a very optimistic tone for 2025. I think we are definitely looking for double-digit industry growth this year. Okay. And TVS will aim to continue to grow ahead of the industry. I think we committed a few years ago that we would invest 250 million. We have made that investment. You are seeing the products. You're seeing the growth. There are more products this year, and with that, we'll share more capex plans as well. We're a global company. We cater to so many markets, and we will further that in EVs as well. We have launched iQube in some markets outside India. The electric scooter for BMW is designed, developed by us, and is selling in European markets. We will make more launches as well, including a premium off-road motorcycle and some other vehicles as well in the coming year. So this is something that is exciting, and it continues to grow, and you are seeing greater premiumization of vehicles as well. I think it is a sign of the Indian consumer having a little extra disposable income, and also sort of with that and the technology that is now available in terms of connectivity, in terms of safety systems. These are all very exciting.
Okay, all right. Well, let's get back to markets. Then we have Sudarshan, who joins us to help us out with his 9-10 call. Sudarshan?
Well, consider buying Granules. Granules is a buy with a stop under 585.
Got it. Mitesh, what about you?
I recommend a buy on Bajaj Finserv for targets of 1790.
Got it. Thanks a lot for that, Mitesh. Well, let's hop across to Abhishek. He's here to revise a couple of stocks for us. SBI Cards is top of the list. Abhishek, take it away.
Well, it looks like there was huge spending done by people in India with respect to spends on credit cards in the month of December 24 versus November 24. So total cards were up 10.5% YOY and about 0.8% month on month. In that, the spends were up 13.9% YOY but 11.1% month on month. So average spends were up 10.2% on a month on month basis. SBI Card also saw strong momentum, total cards being up 1% month on month versus industry average of 0.76% month on month. The total spends were down 3.5% YOY, but it increased 12% month on month. So average spends per card actually grew by 10.8% month on month. So with respect to the market share, the total cards market share increased to 18.74% versus 18.69% on a month basis, and the spends market share increased to 15% versus 14.88% in the previous month. Back to you.
Okay, all right, got that. Thanks for that, Abhishek. Let's revisit Dixon as well, because Dixon's numbers are looking really good. I mean, at least year on year, there's a growth of over 100% on most parameters. Let's go back to Sudarshan and get the highlights. Sudarshan.
So that's right. So all the operating numbers have seen a triple-digit growth, but if you compare with the estimates, numbers are largely in line. And brokerages too have a mixed views on the stock. First, Goldman Sachs has a sell call with a target of 10,240 per share. It says earnings upgrade cycle may have halted for time being. CLSA has an outperform call. It says triple-digit growth continues, but focus would be on ROCE expansion. Jefferies has an underperform call and target is rupees 12,600. It says Q3 was a beat against its estimate. Now taking some lines from the con call, company continues to focus on 2 to 3 things. First is capacity addition. Second, adding more products. And one segment that is company is bullish on is telecom product. It says this segment will be the key growth driver going forward. Lastly, company's performance against the guidance in 9-month FY25. Company's margin is 3.7% against its FY25 guidance of 3.7 to 3.8%. Revenue in 9-month FY25 is 28,568 crore against company's actual guidance of rupees 32,000 crore. But need to remember is post Q2 FY25 earnings. Talking to CNBC-TV18, company had said in FY25, it will do revenue that will be close to 40,000 crore. So numbers were in line, but just on the commentary basis, it looks largely positive.
All right, and we'll have the management join us a little later on the program to talk to us about the numbers and the outlook as they stand right now. Just about a minute to go for the market open. Dixon, of course, in the pre-open is down 1.7, but the Nifty is up 75 points. 23,420 is where we are at right now. Let's just look at, the other indices as well, because that's what we'll do to begin the day. And then, of course, we'll, as always, look at individual names, etc. So it's going to be a higher start, but it's also going to be a little tentative with everything which is happening. I think we've got the first rates because the prices are changing. And making up their mind, right? I mean, what's happening? So 23,420, about 1/3% higher, and kind of flattish to slightly up. The bias is up. Nifty Bank is up about 1/3%, 49,500 or so is where we are at. The Sensex is now flattish as well. The mid-cap index has slipped into the red, but again, it's not got very much on it. So about 90 points lower on the Nifty mid-cap index. Look at the Nifty heat map. Most stocks, about 40 odd names, are higher. So predominantly, the tinge is green, although it may not be by very much if you look at individual names and how much they're doing on the upside. But lots of other stocks in the broader market, etc., as well in focus. Surabhi.
Okay, let's start with the big news maker. Zomato is down 8.5% at the open. There are a lot of target price cuts that have come in. But for me, the CLSA call stood out. They are still at 400 on the stock, and they're saying that while they've cut some of the estimates, but they're overall looking at the better GOV as the glass half full rather than half empty. Anyway, the market's big debate is on this one. 8%. It's the stock of the morning. Let's move on and look at what's happening with the Nifty. The gains about 45 odd points at this point in time. Apollo Hospitals, Ultratech Cement, Tech Mahindra, Cipla, Hindalco. So it's mixed across sectors. There's some buying on tech. TCS is up about 0.5% as well. There's Eicher Motors, there's Lever, there's ITC. So it's all over the place. No real clear sectoral trends. But yes, overall technology stocks are doing quite okay this morning. Infosys, HCL Tech, Tech Mahindra. There's a tinge of green on most of them. On the downside, Trent losing about 1%. There's ONGC, which is down about 0.7%. NTPC is lower. Kotak Mahindra Bank, after yesterday's blockbuster, is cooling off just a little bit, just 0.5% lower on Kotak. Let's see what Wipro is doing, considering Wipro had a great day yesterday. Wipro is building on those gains, about 1% higher on Wipro. So not too bad. But yes, the mid-cap index has already slipped into negative territory, about 0.2% lower. And the headline of the morning is Zomato and even Dixon. Nigel, look at this one. 7.5% gone from Dixon, though the numbers like Sudarshan saying up, 100% growth.
Well, on Dixon, I think one of the brokerages had made this very, very pertinent point. Jeffries, I think, that Dixon is a non-branded B2B EMS player. They have 85% of their sales as OEM with lower margins. Even so, it trades at a higher multiple than some of the B2C companies. So because of the valuation aspect, I think that's the reason why the stock has pulled back today, because the valuations now of Dixon are more than some of the clientele. So that's the reason why, in fact, that's when we'll discuss that in greater detail. The stock of the morning from the real estate pack is Sunteck Realty. Take a look at that stock. It's flying away. It's up close to around 10%. If I'm not mistaken, this has been a relative underperformer actually from the real estate basket. But this morning, it's a stock of the morning. So big move is what we're seeing on that particular name. AGI Greenpack, that's another stock that's opened up with a gain of close to around 6%. I'm not sure whether or not we have some news flow on that one. I think it came out of that set of numbers. So AGI Greenpack is another one that's opened up well in the green. Zomato, the low of the day, it's around 218. Now that's very, very important that it defends that mark. Otherwise, we could see a further slide. As of now, it's at around 220 rupees. Newgen Software is down close to around 5%. So that stock as well is pulling back. And Oberoi Realty, it's at the opposite end of the spectrum. So Oberoi Realty, that's been an outperformer, that's pulled back close to 5%. While Sunteck Realty, that's been an underperformer, that's up close to around 10%. Prashant.
Well, you got 50 points now on the Nifty, just to kind of summarize the action. But this is the initial first couple of minutes of trade and how we are starting the day. Biggest volume-led gainers are Lakshmi Dental. I think 5%. It's number one in terms of volumes. I think listed yesterday, and 577. Yeah, there you go. 1 million plus shares on it, and 5% higher. KRN. I think this is also recent listing. KRN Energy, the heat exchanger company. I think 7.5% higher. 890 on that one. So it's got very large volumes. Apollo Hospitals is up 2%. I think we mentioned Sunteck. APL Apollo reported numbers yesterday. Stock's up 3%. It's got very large volumes. Ola Electric is coming up with a 3% pop. 79 on decent sized volumes. HPCL is up 2%. So maybe look at IOC and BP as well. Lower oil possibility ahead. Reddington is up 2.5% odd. NetWeb is up 2%. NetWeb sold off 5% yesterday after results. I mean, that's it. That's the big volume-led list so far. At least Zomato and Dixon are the two big casualties. Both are down 2%, 7%, beg your pardon. 7.25% on Zomato and about 8% on Dixon right now. Kalyan Jewellers, which after about 10 days of losses saw about a 6-7% pop, is back down about 2%. There is Paytm, which is down 2%. And look at something like a MCX. MCX is starting 4% in the red at about 5,800. Najib?
Well, just 2 points, Prashant. One is on Kalyan. They put out a release yesterday. The promoter entity had some pledge on the shares that they held. They've increased the pledge out there. So that's what's causing some nervousness. So that's point number one. The other stock I'm looking at is Welspun Corp. It's close to a 52-week high. And we've been making this point. We had the management a couple of times as well. Trump is talking about drill, baby, drill. Yeah. And in fact, if he's going to drill more, then he'll require pipes to transport it. And this is one of the companies that could be a potential beneficiary because they have their facility in the United States. So it seems, otherwise you would normally see a bit of a pullback on some of these stocks when the markets are weak. But given the mid-cap index has pulled back and this is closer to around 52-week high, this could be one of the potential beneficiaries if Trump does what he says, that is drill more and make US, more self-sufficient with regard to oil and gas.
All right. Let's take it to Nilesh Shah now. He's Managing Director and CEO at Envision Capital. Nilesh, good morning. Great to have you with us here on the program. Thank you very much. So we are still kind of in the phase of finding out what will happen. And I'm not sure if we will remain in that state for some time to come, a state of expectation and not knowing. So a headline watch in that sense. But for bottom-up investors, I mean, it's I guess any other day with some entertainment added for people like you, Nilesh, in that sense. Your thoughts as you look at this new phase in markets? Maybe I'm exaggerating it with Trump 2.0, but your thoughts? Nilesh, you'll have to unmute yourself, please.
Hi, Prashant. Sorry for that. Yeah, I guess it's one more year, one more day, and one more event. Eventually, like what you rightly said, a fundamental bottom-up approach always holds you in good stead, and I think that kind of an approach even remains even now. Yes, 2025, we are going to have a bit more of macro headwinds, global macro headwinds. There is a new presidency in the United States, and policy initiatives, especially on the tariff side, will have significant implications. But having said that, I believe what's going to be even more important is what the central bankers do in terms of interest rates. I believe interest rates will be a bigger trigger and a bigger catalyst to watch out for in 2025. And that, to me, remains the biggest kind of variable as far as markets are concerned. So clearly, from a global macro perspective, I clearly believe that what the central bankers will do in 25 will be way more important than what the new presidency does in terms of policy initiatives.
Okay, Nilesh, hi. Good to have you on the show. So I think markets are just trying to figure out what this means. We spoke to a couple of international experts, and I think the view seems to be that for the US equity market, at least the party is intact. Now that boils us down to here, what we're doing at home. So what's the sense? I mean, the immigration policies will become clearer, I think, in the coming few weeks. But as we await that, let's talk tech and what you've seen and heard from the companies so far. What would your view be? Would you buy large cap or niche mid cap? I mean, how would you look at taking exposure given all the uncertainties at hand?
Survi, I believe that, this whole issue around immigration is probably just overly debated. And I think the impact of that is a little exaggerated. The Indian IT has moved on, and as there is more automation, more around robotics, I think the growth potential is not going to be really a function of more the kind of hiring or the kind of more people that you can send on an on-site basis. So I believe that the whole challenge or the issue around immigration is probably a bit overestimated. I honestly don't think it's going to move the needle. What's I think we need to realize is that for the large cap IT, it's going to be essentially the US GDP growth rate and the spending on technology. Even if you look at the last decade, which has been clearly a landmark decade in terms of adoption of technology, digitization, our Indian IT companies have at best grown at 10% in rupee terms. You strip out 3% of depreciation of the rupee. In dollar terms, the growth is 6-7%. And that's essentially what is the sustainable growth rate. So my view is that for growth investors, the large cap IT space doesn't make sense unless you are a benchmark driven investor. And there are plenty of opportunities in the tier 2 IT space, companies which are essentially going to be AI developers or going to create solutions around AI for global companies. Those are the kind of companies which will probably kind of be the better place to be. They are going to be the growth frontiers.
Nilesh, I remember when we've spoken about playing the new side of technology in the past. I remember our conversations. You've been fairly optimistic on some of the platform plays as well, right? I mean, it's consumer tech. And now we're in the midst of a very interesting debate. I mean, Zomato's triggered that debate yesterday by saying that as they invest more in growth and they accelerate their store rollout plan, there's also intense competition, which is why their margin expansion, at least in quick commerce, is on a temporary pause. What do you make of this? I mean, there's pretty dramatic reactions playing out on the stock even this morning. Not just Zomato, I'm just saying general quick commerce and consumer tech.
Yes, Surbi, we own a bunch of these platform companies. Yeah. We really have been in this space now for a while, and we continue to like it. We clearly believe that these are going to remain the wealth creators and the winners for a very, very long period of time. In between, there could be challenges for a quarter or two as companies essentially either accelerate or tweak their growth strategies. There will be competitive intensity. And in some of the cases, maybe some of the growth strategies may not work for a short while. We've seen, for example, like what the Zomato management itself has said, and we own the stock, itself said that, look, they saw a similar thing playing out in the case of food delivery, where they went in aggressively and then had to pull back later. It's quite possible that quick commerce will also witness a similar situation. So it's honestly not going to be for the faint-hearted or for the more short-term oriented investors. So if you're looking at the next 1 or 2 quarters or maybe 4 quarters, it may not be the right place to be. But if you have a 3-year, 5-year, or 10-year view on this whole digitization opportunity, we have to use these weaknesses to essentially continue to buy and load up on the space. So I would still continue to be a long-term believer on some of these companies.
Okay, a very valid point there, Nilesh. For the longer term, they still have plenty of headway over there. But otherwise, in the near term, that could have some challenges. Got that in terms of these players. But Nilesh, let's talk about another set of stocks that the street has been very excited about. The EMS plays, so much of potential, big runway for them, but valuations are something that's worrying. Dixon Technologies today, very, very good numbers, much better than what the street was working with. But the stock is down 6%, telling you clearly that these valuations now are weighing on some of these names. Your take on the space?
EMS continues to be high potential, but clearly believe that at these kind of valuation, the valuations don't make sense around this time. When stocks are trading at whatever, 120, 150 times trailing earnings, the reality is that these are B2B businesses at some point of time. Clearly, the growth outlook will catch up. These are businesses which will not keep growing at very, very high rates. We've seen this kind of movie really play out. 20 years ago when it was IT services, or maybe a few years ago, we had the chemical companies. We had so many companies coming out in the chemical space with IPOs, and we saw clearly that after a few quarters, growth didn't sustain, and therefore valuations essentially moderated. The stock prices didn't go anywhere. It's quite possible that the EMS space will face similar challenges at some point of time. Hard to really take a call when that will happen, but at these valuations, I don't think they really make sense.
Okay, so valuations are a concern. Got that. By the way, just a quick glance back on the screen, and it's still the same picture. The bank Nifty is slightly lower, flatline with a bit of a negative bias. The mid-cap index is also absolutely at the flat line. The Nifty is retaining a bulk of its gain. It's the best performing index right now with an up move of about 60 to 70 odd points. That's the market picture. Nilesh, so there's so many uncertain moving parts. There is Trump and tariffs and policies. There is the earnings slowdown here in India. Everybody agrees that earnings downgrades will happen even for FY26. There is trying to second guess what the Fed and the RBI will do. In the midst of all of this, let's talk buying ideas. So you've mentioned your views on IT and, of course, the platform companies. What else? What else to buy in this uncertain time?
So clearly, we saw last year that there was a bit of a kind of a slowdown for some of the capex kind of companies, companies which were essentially supplying equipment or components to the capital goods sector, or companies which were essentially part of the entire railway opportunity or the defense opportunity. And that was on the back of a slowdown in the government's expenditure. Clearly believe that is likely to resume in terms of the growth and the allocations. We'll get to know that on 1st of February in terms of the government's allocation for the new year. I clearly believe that opportunities around railways, around defense, around renewable energy, and companies which provide equipment and components or consumables to that space, clearly I think it's a good time to kind of start looking at them. In many cases, the valuations have come off, P multiples have come off. It might just be an interesting space to watch out for. So clearly believe that I wouldn't be surprised if by the end of this year, they end up being essentially the winners.
All right. Nilesh, I want to ask you about these gold jewelry themes. In the last 1 year, if I look at it, Kalyan was the one that zoomed ahead, and Titan actually was the underperformer. But now, in the last couple of weeks or so, we have got back to hearing that Titan is equal to trust, and that's the only one that's done well in the jewelry space. And for a longer term investor, Titan does well. Keep in mind, it doesn't trade cheap at all. But at least, if I pull up a couple of charts, last 1 year chart, if I pull up a last 1 month chart, it appears again, Titan could be finding, its way, because in the past, you've seen PC Jewelers, Gitanjali, Tara, and the list goes on. But only this one has actually stood out and made some money. Your take on this space and the themes?
the space it continues to be very interesting. I clearly believe that the opportunity around premiumization, the opportunity around aspiring middle class, these are long-term themes. And so clearly believe that the tier 2 jewelry companies essentially are a good place to be. This is a space which has corrected. Obviously, for the year 24, this was a space which did extremely well in terms of stock prices. So clearly believe that, yes, there is some bit of correction, there has been a fair bit of correction which has happened. Maybe there's some bit of correction to happen as there's some pressure on the mid and the small cap space. But my sense is post maybe, the March quarter, post the June quarter, these will again kind of come out as meaningful long-term opportunities. So clearly believe there's lots of room to grow. The big difference between, what happened maybe a few years ago with some of the emerging jewelry companies, I think their big challenges were around cash flows. These were some of the companies which had huge amount of debt. They didn't have the cash flows. But the bunch of tier 2 companies that we are seeing in the jewelry space, these are companies which essentially have a calibrated growth strategy. They don't have too much of debt. Maybe some of them don't even have debt. They have been able to successfully raise capital and capitalize with themselves. So they have the growth capital to grow. And I think that's the big differentiator. Some of them, their franchisee strategy is working out to kind of do well in early days, but it's working out well. So overall, in terms of the space, the strategy, and the balance sheet, I think are very, very different from some of the earlier emerging names that we had seen a few years ago. So I would be constructive on this space.
Okay, all right. And Nilesh, got that. Thanks a lot for joining in. Always good to hear your thoughts and looking forward to chatting up with you in the coming weeks as well. By the way, when we were having that chat with Nilesh, take a look at what happened to the markets. The Nifty from trading with a gain of around 50 points. That's now flat. In fact, it briefly moved into the red as well. I think the Sensex actually is already in the red. So just pull up that. And a few stocks that have come in for profit taking. I think the big boy Reliance Industries, that's been the driver for the last few trading sessions. It just moved down a little bit, 0.5% odd, but it has a huge weight on the index. So that's why we're feeling the weight of that. Kotak Mahindra Bank is cooling off a little bit. And Trent as well, now on the verge of breaking 6,000 rupees odd. Conflicting brokerage reports we have in the last 1 week or so. But for the time being, Trent is moved closer to around 6,000 rupees or so. Well, time for another corporate interaction then. L&T Finance, that's the stock on our radar for Q3. The dispersals were weak, margins saw a sharp decline, while the gross NPA ratio is at a 4-quarter high. To speak about the past quarter and the way ahead, we're joined by Sudipta Roy, the Managing Director, as well as the CEO at L&T. Good morning, Mr. Roy. Thanks a lot for joining in. Well, you were sounding quite optimistic about Q3, but dispersals, well, they were quite tepid. What happened in the past quarter? If you could explain to us what is the run rate you're looking at in terms of dispersals for the fourth quarter? And what does it mean in terms of AUM growth for FY25 and FY26? Please go ahead.
Yeah, so if you see the disbursements that we did in Q3 at 15,210 crores were actually the highest ever for L&T Finance. So in a way, but what we have done actually is that if you look at the sectoral disbursements, obviously we have done adjustments within the sectoral disbursements. We tapered down our disbursements in our rural business finance, which is our JLG segment, microfinance JLG segment. And we sort of calibrated it, obviously, in view of the current macro situations in the microfinance industry. In terms of our tractor disbursements, our actual tractor disbursements were actually very, very good. In fact, our highest ever tractor disbursements we saw in the month of October. So overall, on the back of good monsoons, we had a very good quarter in terms of tractor disbursements. In terms of two-wheeler, yes, two-wheeler was a little bit of a range-bound disbursement, primarily because we focused more on quality customer, onboarding quality customers in the two-wheeler business. And as you can see, what we put out in an analyst report is that a prime share of our two-wheelers is close to about 65 to 70% in terms of onboarding. In terms of personal loans, actually our personal loans disbursement did quite well. You will see on a year-on-year basis, our personal loans disbursement has grown by almost close to 94%, albeit on a lower base. Okay. And in our SME disbursements also remain on a sort of range-bound pattern. So overall, yes, the disbursements from a sequential point of view did not move much, primarily because of the conscious call to temper down our disbursements in the JLG microfinance sector, primarily because of the ongoing credit challenges in this sector. However, we remain hopeful that as and when we see signs of tempering down of the sort of the credit stress in the microfinance sector, we will be able to resume our risk-calibrated growth pattern going forward.
But what is the run rate then? 15,000 crores of quarterly run rate. You seem quite satisfied with the performance in quarter 3. For quarter 4, what kind of disbursals should we look at? And what does it mean in AUM growth? If you could help us out in percentage terms.
See, right now, this quarter-on-quarter basis, our AUM growth has been around 23% odd. So the fact is that, again, the critical thing is that what is the pace of the microfinance and the JLG disbursement in the next quarter as well. Given the fact that we do not expect full resolution of
Mr. Roy, the 23% you're talking about is in the farm equipment business, right? The year-on-year growth.
No, so overall retail book, we are talking about a 23% growth rate on a year-on-year basis, and the console book grew by about 16%. But the retail book, if I talk about a year-on-year basis between quarter 3 of this quarter 3 and the quarter 3 of the previous year, there's been a 23% growth in terms of the retail book. In terms of disbursement trajectory, we expect, typically quarter 4 is a strong quarter in BFSI. Typically, BFSI exhibits a strong quarter trends. However, one thing we would like to point out is that our disbursement trajectory in quarter 4 will be risk calibrated. We will not take any unnecessary risks during this quarter, and we are not chasing any sort of headline number during this quarter. We are very, very clear that whatever disbursements that we do will be risk calibrated, such that the risk outcome is positive. So we are hopeful that we should be able to maintain the same trajectory as we saw in Q3 FY25. However, as I said again, I will reiterate that point again, that we are not chasing any numbers, and all our disbursement will be risk calibrated. So we will disburse according to the market risk perception as we see.
Which is why, Mr. Roy, if you could just give us some more color, and let's dive a little deeper. Rural, JLG, rural, these are big segments for you, and you've gone slow, both quarter on quarter and year on year. If the same trend plays out, because you're saying that you're going to be very, very risk calibrated, if the same plays out in Q4 and you go slow on these segments, then what should we expect in terms of total AUM growth for FY25? And within these segments, what is the qualitative input on stress? I mean, overall, the gross NPA has gone up a little bit. But within rural, within micro, are you expecting more stress to build up in the coming quarter?
See, I'll take your last portion of the question first. In the site is that we have seen some green shoots of recovery in this quarter. If you look at the collection efficiency numbers that we put out, our collection efficiency improved to about 99.49% in December. And in January also, we remain in a holding pattern. So given the fact that we have seen good monsoons, we have seen good Kharif arrivals, and the Rabi sowing has also been good, we are hopeful that the rural liquidities will improve in Q4 FY25, and such that our collections efficiencies will probably be on a improvement trajectory. However, the exact improvement trajectory needs to be seen. Overall, though we have guided as part of the Lakshya targets to have a 25% year-on-year growth target, what we'll try to do is try to see as to whether we are able to sort of close the year at an overall AUM growth on a year-on-year basis of above 20%. That is what we will try to look at. Some of the lines of businesses are growing well, though we have purposefully downward calibrated the disbursements in the RBF segment. Some of the segments, even in the RBF segment, we are sort of focusing on disbursing to non-leveraged customers, sort of expanding in the non-leveraged markets like AP and Telangana, where our collection efficiency continued to be 100%, Western UP, where our collection efficiency continued to be 100%, Western Maharashtra. So certain non-leveraged markets, we are trying to penetrate a little more, as well as try to improve our focus on even in the markets that we operate in, focused on customers that have lower leverage. So we're trying to see as to whether we can keep our disbursement momentum even in RBF risk calibrated, but still on a forward trajectory. We are growing the personal loans business. Most of our digital partnerships are firing up well. You can see on a year-on-year basis, our personal loans business has grown by almost close to 94%, albeit on a lower base. And again, the two-wheeler business, again, we are seeing a resumption of, we saw a dip in the two-wheeler disbursements in the month of December after a reasonably good October and
Mr. Roy.
We are seeing again the disbursement momentum coming in back in the month of. January.
So
Overall, 20% plus on a year-on-year basis is what we are targeting.
Yeah, Mr. Roy got that point, 20% growth in business. But if you could just elaborate on that, you said you're seeing some green shoots. You mentioned collection efficiency looking good in some markets. But tell us about the gross NPA levels at company-wide level. How do you see the gross NPA figure trending? And also specifically for MFI, what can you guide on in terms of the NPA levels?
So see, if you see our GS3 numbers, are currently at about 3.23%, has gone up marginally from 3.19% in last quarter. But obviously, we have used about 100 crores of macroprudential provisions this quarter. Next quarter, and this is primarily focused on our rural business finance book, as some of the sort of the stress assets have keep on flowing and sort of finally come into the provisioning status. We expect that some of our credit costs will remain elevated also next quarter. So next quarter we expect that our GS3 numbers and our NS3 numbers will go up again sequentially slightly more. And that is why we have sort of kept a provision, and we have said that we have used 100 crores of the macroprudential provisions this quarter, and next quarter we have kept provision for about 300 to 350 crores of macroprudential provision usage next quarter. If you see on a quarter-on-quarter basis, our GS3 has gone up by about 100 crores odd, and on a year-on-year basis, our GS3 has gone up by about 450 crores odd. I expect similar about 100 to 150 crores addition to the GS3 number next quarter as well.
Got it. We'll leave it there. Thank you very much for joining us, sir. Good luck, and we'll speak again soon. Thank you. Well, the next company I want to address is Dixon Technologies. Stock is under pressure, largely, of course, on the back of rich valuations. Numbers were in line with expectations, so they reported a very strong growth, largely led by the mobile segment, which has really pushed the overall numbers to where it is. Mr. Atul Lal is Managing Director at Dixon. He's joining us now to take some questions. Mr. Lal, good morning. Great to have you with us here, sir. Thank you very much for your time. Prashant this side, it's been a while, so good to see you back on the channel. So just the basic hygiene numbers out of the way to confirm more than anything else. For the full year, at this current run rate, you should be at 40,000 crores in top line and about close to 900 crores in profits?
Somewhere close to that, Prashant. Yeah, you're almost there. There can be small delta here and there, but largely we are going to be close to the number that you're mentioning.
Okay. Got that. Now, before we, and there are always lots of things to talk about with Dixon, because you're backward integrating, you're getting new customers on board, and there are other newer segments, etc., which you're building out as well. But the main bread and butter, the mobile sort of segment, Mr. Lal, if you can tell us, I mean, this particular quarter has seen tremendous growth. I mean, actually, maybe at the expense of some of the other segments which have not grown as much. The share of mobile within the overall pie has actually increased quite a bit. At the margin, as we look at 2025, are you seeing any slowdown at all from a demand perspective? I was reading this report from Counterpoint Research, which essentially was, I mean, they put out the big numbers. They said that, this is the total mobile manufacturing capacity at the end of 2024. And as of now, only about 50% is utilized. 50% remains unutilized. And they were sort of pointing to sort of slower demand, etc., which they think will pick up in 25. Just wanted your thoughts, sir.
So, Prashant, undoubtedly, mobile is the largest category in our industry, and strategically we started positioning ourselves in a key position there. So that is the biggest growth factor for us. We have grown from 5 million odd smartphones last year to almost 30 million this year. Practically all the brands in the Android ecosystem are our customers. With the latest acquisition that we have, in next 6 to 8 months, we should be almost just 70 million. Please appreciate the Indian market is around 150 million, and Android ecosystem is going to be around 135 to 140 million. So we have a very large play in this. So we have grown from 5 to almost 30 million. We feel that next year we should be at somewhere around 45 million. So that's the way it's going to be. Now, as far as the demand is concerned, we feel, demand has been normal, not exceedingly buoyant, but we feel that in the coming quarters and the next fiscal demand should. The new technology, new product models are being launched. Also, as far as the margin is concerned, smartphones is a lower margin business globally, and so is the case in India. And that is the reason, in our case, we are going to be deploying a lot of resources and capital in a backward integration play, in the components play, which is more margin accretive. And also, we are expecting the rollout the government PLI for the electronic components in non-semiconductor category. Yeah. So, once those projects are rolled out in the next 2 years, it should be able to restore margins to normal level. So that's the way it looks for the mobile business for us.
Absolutely, Mr. Lal. Hi, morning. Great to have you with us. And I think, right now, the stock's down about 9.5%. I guess the ask is always very high from a company like Dixon, right? Which is, stock is a great wealth creator. But now, as we say in the market, they'll always mange more. On the point of margins, sir, I think, and that's something that a lot of brokerage notes are also pointing out. Your mobile business is doing fantastically well. Volumes are fantastic. And now it's almost 90% of your revenue. Tell us how the mix will change, because some of the other segments like consumer electronics, that's where you get higher margins. While you backward integrate in mobiles and bring the margin profile up, what about the other segments? And in the near term, do you see yourself going above 4% on the margin in FY26?
So margin, we feel there is going to be in the range of around 4% in 26. Beyond 26, it should start inching up. Now, as far as other categories are concerned, we are focusing a lot on our appliances category. So we have set up a refrigerator plant. We are already acquired almost 8% share of the Indian market. We are further expanding the capacity, first from 1.2 million to 1.5 million, then from 1.5 million to 2.2 million. That's almost 8 to 9% EBITDA margin business. In other appliances, we are exploring addition to our product portfolio. We are expanding our IT product business, which would also be in a similar range of 4%, but is going to generate an operating leverage because of the scale. Then we are looking at expanding into the electronic component business. So we've already started work on our display module plant, which is much more margin accretive. So this is what we are pursuing. So as I shared with you, I feel that in 25-26, margin is going to be in the similar range of around 4%. However, once all these action points are fructified, then there would be an up of the margins.
And it will go up to how much?
It should go up another 30-40 bips. It's around 4.5.
4.5 odd. All right. Hi, Mr. Lal. Good morning. I want to focus on your plan to foray into display fabrication business. The total capex I think you're talking about is roughly around $2.5 to $3 billion. So a few points out here. From Dixon, the company, how much will the outgo be? Because there will obviously be some support coming in from the government. So how much are you factoring in out of this $3 billion odd? Point number one, so funding. Point number two is what is the asset turnover? And point number three is the margins as well as ROCE, purely on this business that you're looking at.
So for Dixon to get into the display fab business is extremely important, because if we are able to execute this project, it gives us a very, very significant moat. And it's required for Dixon, it's required for industry, it's required for the country. We are still awaiting the guidelines of ISM2 of the Government of India. As per the earlier scheme, the central government was supporting all 50% of the capex on a pari passu basis, and the various state governments are offering almost 20%. So here we are talking about around 30%. This is a high margin business. This is in high double digits, the margins.
Okay.
So on a blended basis, it's going to have a significant impact on our margins. Let's say what the government guidelines are.
Yes.
And then we will be able to determine the ROC. This is not highly working intensive. in Dixon, we have adequate cash flows. We generate significant EBITDAs. We don't have significant working capital.
Mr. Lal, we're just running a little short on time. So just to clear the air, out of this $3 billion, back of the envelope calculations and going by the past precedent, it appears that from Dixon, you'll have to come up with only around 6 to around 700 million. Is that correct?
That also,
very roughly?
If we are able to bring in the equity from a joint venture partner,
then it'll be even less.
That's right.
So it'll be $7 million at peak, point number one. Point number two is you're saying on this particular investment, you'll do margins of double digits and ROCE will be more or less in line with what you're doing. It could be a little bit lower, I'm guessing, because of the kind of capital intensity. Is that correct?
The ROC is going to be slightly lower, but the payback period is going to be very, very fast. On the blended basis, the margins are going to go up significantly. Strategically, is going to build a huge moat in the company.
And the asset turn will be close to around what? 1:1 or a little lower than that? From this $3 billion of capex, you can generate revenues of roughly around $2 billion. Would that be a fair estimate?
So let's say we are putting around $900 million from the partner side and our side, then it's going to be generating a revenue of almost 1:2, 1.8 to 1.
Got it. $2 billion, approximately 1.8 to $2 billion. Got that.
Okay, all right. Mr. Lal, thank you very much for joining us. Short on time, but not on questions. So we'll have you back on, sir, for a more detailed chat. But thank you very much for joining us with some of that perspective. We'll take a quick commercial break here. And we'll come back and put the spotlight on the FMCG space. Kunal Vora of BNP Paribas will be joining in expectations from the FMCG sector in just a bit from now.
Okay, big stock reactions playing out. You just heard the Dixon management there. Stock still down about 10%. The other one, Zomato, which is still not recovered. Recovered slightly, to be fair. I mean, about 7% down, but it was down over 8% at one point in time. There you go. That's Zomato. So the result disappointments playing out on some of these stocks. Not so much results, maybe more to do with the commentary in case of Zomato. So let's get to that commentary and what the company is really saying. Here's a CNBC-TV18 exclusive. Blinkit CEO Albinder Dhinsa has said that the company will not enter the price war to drive growth. Speaking to us, he added that the company will grow at a faster pace in the near future and will continue to bet on new businesses like the ambulance service that they're now talking about, as well as fresh food delivery to boost its position. Take a look.
What's the visibility that you have on potential growth from here on, and do you believe that it's going to continue to be the kind of accelerated pace we've seen in the last 2 years, or do you believe that there is going to be, because of the base effect, etc., will also be a little bit of a slower pace of growth?
No, I think we will be able to maintain that pace of growth for the near future at least, and I think that's going to be powered by two things. One is obviously the geographic expansion as well, expansion within our existing cities, because we are still seeing that the cities are still underpenetrated, and there is also going to be expansion of the kind of products and the kind of use cases that customers use us for, right? And I think this is going to make sure that for the near future we would be still growing at a fairly fast clip. Most of our growth is more usually constrained by our ability to invest ahead of time in infrastructure, right? Yeah. So if you look at warehousing, the timeline for that investment is usually a year before we need it. When you look at stores, that timeline is about 6 months before we need it, right? So I think whenever we sort of look at growth, the challenge that it always gets cut off is not what we see where the potential market is going, but sort of where our supply chain capabilities will be. And I think with more competition, we expect the overall market size to also grow faster because now there are more people out there talking about awareness.
Yeah.
Of course, that creates its own issues, but
so let's talk about the issues that it's creating. I mean, the obvious one that everybody is talking about is that there is going to be a discounting war, and what does that mean as far as profitability is concerned, including for the likes of you? What does it mean in terms of market share? How do you retain the kind of market share that you have? I mean, how are you looking at competition? What are you trying to do to create differentiation? What are you trying to do to create the moat around you so that you can take it on?
See, our point of view on this is not actually driven by competition, but more by what do we mean to the end customer, like what we were talking about, right? We are a way to sort of for the customers to live a better life, which also means that they should feel smart about their financial decisions as well. So we can't be gouging them for pricing, like we said, right? We can't be like, hey, you pay 20% extra just because I'm coming to your house in 10 minutes. I think customers want us to be fair, right? But I don't think that discounting necessarily is something that we have indulged in or being involved in outside of what the brands are happy to do on their own, right? And I think we will maintain that way because we don't want to lose our North Star, which is that service quality for the end customers, for solving for their actual use cases. And our ability to invest in better service quality is actually dependent on good economics, right? We can't be actually like burning a ton of money and then say that, hey, we will still continue investing in service. Then, why not do that first and everything else comes later? So I think we have sort of maintained that as a North Star and we will continue to operate it that way.
Well, let's move on then. It's time for our special segment, Quarter Se Quarter Tak, where we get you expectations from each sector. Today, Mangalam joins us to help us out with what are the expectations from the FMCG sector. Mangalam, take it away.
Well, for the FMCG sector in the third quarter, let's first look at the demand environment, or rather the entire environment from either a demand input and even a cost and category perspective. From a demand standpoint, there's been no major change in conditions since the second quarter itself. Yes, there has been a gradual rural recovery, but urban demand is still sticky and struggling. Even as the festive season may support QOQ growth, there are a bunch of categories that may be impacted because of delayed winter. The kinds of skincare products or healthcare products that we've seen with the likes of Dabur, etc. as well. The third quarter also saw the return of inflation in some key raw materials like palm, PFAD as well as leaf tea, key inputs for some of the companies like Hindustan Unilever and some of the soap companies as well. However, there was some support coming in from crude and VAM that is used by paint companies, but then again, they're seeing competition. Pidilite as well uses VAM. Speaking of paints itself, there is high competitive intensity in the sector along with beverages where Campa has garnered 10% market share in some of the key states. The growth of quick commerce has far outpaced that of general and modern trade, which may impact some channel inventory for a few companies as well. There has been a good pickup in sales of apparel retail companies. That's what we've seen from the numbers that have come so far and from the results that have been reported so far in terms of updates. What we know is there have been weak updates coming in from Godrej Consumer, Dabur. There has been some margin compression for Marico, even though the revenues out there have grown in mid-teens. And at the same time, we are seeing, some of the others that have come by. The jewelry space, for instance, that did well in a seasonally strong quarter on account of higher gold prices and the festive season, with Titan reporting 26% growth and Kalyan Jewellers 41% growth in their India jewelry business itself. What are some of the key expectations then from companies like HUL, Tata Consumer, Britannia, Nestle, Trent? Middling sort of growth seen for HUL and Britannia, as well as Nestle, low single digits to about mid-single digits. Good growth seen for Tata Consumer on the revenue front, but then again, margins are likely to compress. And for Trent as well, it's likely to do extremely well, 38 to 40% in terms of revenue, 30-35% in terms of EBITDA. But the important part is that how much of that is in the price already. For the third quarter, jewelry sector will outperform, whereas staples, F&B and paints will underperform. There is likely to be some recovery in QSR after 8 muted quarters. And in terms of stocks, Pidilite may outperform because other paint companies are facing stiff competition. And finally, we're looking at Honasa, the accident of the second quarter. That'll be key to track in the third quarter itself. And apart from the numbers, the management commentary is something that we'll keep an eye out on, especially on expected pickup. And even we expect some impact coming in from government support schemes, the likes of Latki Bahin, etc., to aid consumption. all eyes will be on the budget. We're less than a fortnight away from the union budget. So announcements there, especially for sectors like tobacco, etc., will be important. From a valuation perspective, FMCG has not particularly been cheap, but the relative underperformance of FMCG stocks have made their multiples a lot more palatable than their historic valuations. Recovery in growth and earnings would be the key trigger for a lot of investors and analysts who are still on the sidelines when it comes to their stance on this space.
Okay, all right, got that. Mangalam, thank you very much for that. So that's the expectation from the consumer space, specifically from FMCG in this quarter. To talk about this and to take the conversation forward, we have with us Kunal Vora, Head of Equity Research at BNP Paribas. Kunal, great to have you on the show. So, I think the expectations are running high considering the market's kind of starved of ideas now in this, mixed environment. You tell us, can we look out for growth? Let's start with the staple companies and tell us, average volume growth, can it inch above, low single digits to, mid single digits? That's been the kind of range for the better part of this year so far.
Yeah, great to be on the show. Thanks for having me. So, like Mangalam covered it well. What we've seen is fairly stable demand trends. No real excitement which is coming in. We've had FMCG go through a rough patch in the last few quarters with low single-digit volume growth. There is some pickup in rural at the same time, nothing really exciting. If I look at the agri GVA, it was like 1% in first quarter, 2% in second quarter, about 3.5% expected in third quarter. So nothing really changing dramatically. While there is some pickup in rural, nothing big. On the urban side, the mass consumption clearly did slow down in the previous quarter. This quarter, the commentary which has come in from the companies so far does not really indicate that there is any meaningful improvement in demand trends. So you will expect most companies to deliver like say low to mid single digit volume growth. And at the same time, there is some pressure which is coming in on the margins. So last few quarters, we did see while the revenue growth was muted, margins were well supported because of lower commodity prices. But that's changed since the previous quarter, last quarter. As Mangalam highlighted, like many of the FMCG key raw materials, especially the agro-driven, which are like wheat, sugar, milk, you got palm oil. All of these are seeing some inflation now. So the trends in terms of margins are reversing. So while we are expecting the revenue growth to be about 5-6% on aggregate, we expect EBITDA growth to be lower at about 3%. The sector is going through like a weak growth phase. There were expectations that second half will be better, but so far the management commentary does not really indicate that. And we believe that the modest growth will continue. Pricing is moved up, inching up a little bit. That should take the revenue growth up a bit compared to what we saw in the last two quarters. But on volume front, we don't really expect much of an improvement.
Let me reiterate that number. That was a really sobering number. Nothing great. You said, if I heard you right, you said about 4 to 5%. And was it top line growth or volume growth? And then you said EBITDA growth is going to be even lower at about 3%. Can you just repeat the numbers?
Yeah. So about 5% revenue growth and 3% EBITDA growth for the companies which we cover on aggregate. So yeah, nothing really exciting there.
Okay, so let's try and pick a silver lining here in this rather sort of somber cloud. Relatively speaking, which are the companies which you think can unleash their operational efficiency and kind of tied against this rise in raw material inflation, maybe have some price elasticity at all? I don't know if anyone's thinking of price hikes, but relatively speaking, who do you think can manage this the best?
Unfortunately, there is no silver lining, at least which I see this quarter. So the EBITDA growth expectation which I have is anywhere between -5 to +5. So even the best of the lot will be more about like mid-single digit EBITDA growth. So while there is some pickup in revenue, like say if I look at revenue growth, there will be some companies like Marico which have had like a commodity price increase, will like deliver like say low teens kind of revenue growth. But even there, the margin pressure will be fairly elevated. So when it comes to the EBITDA line, we don't expect any company getting to double-digit EBITDA improvement.
Okay, slightly longer-term question, not just Q3. This change in the channel mix, right, with quick commerce becoming such a huge sort of part and parcel of life now. What impact do you think this is having, if at all? I mean, Dabur, we all know, we all remember that they called it out. But are other companies going through this? And does it cause any disruption in your overall projections as this channel grows in scale and size?
Yeah, in fact, this is one of the themes of our 25 outlook. that disruption is visible across consumer businesses. These businesses get the kind of multiples which they get because they are expected to report moderate growth, which can be low double digit and with minimal disruption risk. But as I see right now, like you highlighted quick commerce, but like there is disruption visible in various consumer businesses. So if I look at like consumer staples, both branding and distribution. On branding, consumer companies had a complete control through television. Today, through digital, branding can be done by anybody.
Yeah.
On distribution front, what we are seeing is earlier they had a very strong hold on distribution, which was extremely fragmented. Today, distribution again is going through a consolidation. You have modern trade, e-commerce, quick commerce, and in top cities, these are almost 50%. As they become larger and larger, they will be more and more demanding. And we are at a stage where the growth has been slow. If I look at last decade, revenue growth has been 7-8%. But the consumer companies managed to report decent earning growth through margin expansion. But as we are right now, where we are right now, margins are at a fairly elevated level. There is competition coming in from the unorganized at the bottom end, and at the top end, there are niche brands which are coming and competing. So the setup is not really great. So you have margins which might be very close to the peak, and the growth which remains fairly muted, and with additional risk coming in from the various disruptions.
Absolutely, Kunal. That's a point very well made and very well taken as well, that it's not just the change in the channel mix, but yes, branding and marketing. I mean, nowadays you don't buy whatever the ad tells you. Consumers are buying whatever is most convincing on their Instagram algorithms, right, in the feed. So absolutely, digital has changed the rules of the game. Thank you very much. Good conversation. We look forward to more as we go forward. But now, of course, we do have to take a quick break.
So we just a quick look at the market, which has sold off very aggressively. I mean, now it's not gains have come off. We're down actually on the day now. So 80 points lower on the Nifty. So this is a complete reversal actually, which means we're down almost 160, 190 points from the day's high, which was basically right after open. So 23,264. Let's just quickly look at the Nifty Bank as well, where I think there is a significant reversal which is underway as we speak. I think you got about 300-point cut, about 0.6% lower. 49,040 is where we stand at. So that's markets for you. We'll take a break here. We are back and we talk about oil prices and other commodities. Manisha with us with what's top of mind for commodities. Stay tuned.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com.
Welcome back. So yes, there is a cool-off underway in the Indian market, not so much across Asia. In fact, even US futures are in the green now, but our market is dealing with its own situation. That's equities. Let's find out what's happening in the world of commodities. We have Manisha joining in. Manisha, I'm sure you have your hands full today with so much to track. So what have you chosen right now?
Oh, well, I'm looking at sugar right now because the non-agriculture commodities are way too volatile right now. But so is the case with sugar as well, where we have seen very volatile price moves. So when you look at the raw sugar prices in the international markets, we are trading at a 5-month lows right now. This is after the Indian government has allowed 1 million ton of export for the season 2024-25. Well, if you look at the numbers right now, in sense of exports, we have allowed 1 million ton right now. Last year was nil. It was prohibited to export by the sugar industry. 2022-23, the Indian exports were at 6.1 million ton. And then back then in 2021-22, it was a record 11.1 million ton. So as you can see, it has been a very choppy last few years when it comes to Indian sugar exports there. And that is exactly what we have seen in sense of prices. So last year, the raw sugar prices fell by 8%, and in 2025, already down by 5.5%. Well, our supplies outlook is quite favorable. India exporting to the international markets is one part of it, but the Brazil crop, Thailand, which is the third largest sugar producer, also is looking at a bigger production this time around. Well, actually, USDA also says that the US sugar production this time around is also expected at a record 9.4 million tons. So you have enough and more sugar in the global markets right now. Thailand, as I said, is looking at an estimated 18% jump in its sugar production as compared to last year. So enough and more sugar in the international markets, and that is bringing the prices down. So while the export as one thing in sense of policy has already been done, what the Indian markets are now looking at is the minimum selling price for sugar, which hasn't been changed since 2019. And the other thing is the ethanol made from sugarcane juice in India, that pricing also has not changed since 2022-23. These are the couple of things that the markets feel are yet to come by. When you look at the Indian markets itself, when 10 lakh tons of sugar that has been allowed, within that, the notification says that the government has debarred mills that violated the domestic sales quota from exporting. So those, they cannot export. There actually is a full list of 4 pages on which mills can export, which mills are debarred, etc. The other thing is that when you look at the overall calculation, the 3 major states, and this is how the allocation for exports have been put out, Maharashtra clearly stands to gain a lot. Maharashtra sugar mills, that is, at 3.75 lakh tons, and then you have UP and Karnataka getting it at 1.75. The expectation is that much of this sugar perhaps could also move into Maharashtra, and Maharashtra, as in that sense, will stand to gain. Now, mills with an export quota are given at 3.2% of their average production in last 3 years. The new sugar mills also are eligible to export if their estimated production stands strong. The export is permitted until September 2025. And more interestingly, when you look at the numbers on what the sugar mills stand to gain is interesting. And this clearly comes in from various industry guys that I have spoken to. So if in domestic markets, you are selling sugar at 3,500 rupees per quintal, if you look at exports, all the calculations done with 3,900 is the realization there. So clearly, sugar mills here stand to gain.
All right, Manisha, thank you very much for that. So that's basically the picture on sugar and commodities overall. 80 points lower on the Nifty is what we have, 23,261. We'll take a quick commercial break here. We'll come back with our special segment. It's the economy. My colleague Lata in conversation with Chetan Iyer of Morgan Stanley on the possible impact of Trump administration and its policies on Asia and India specifically. Stay tuned.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Republicans are actually becoming the mainstream party, and which is unheard of, especially, I shouldn't say this for a Republican. The Republicans are actually becoming the mainstream party, and very important.
Welcome to It's the Economy. Contrary to fears, President Trump did not announce tariffs on day one of his presidency, which pushed the dollar index at 1 point below 108. But it came up because he did threaten tariffs on Mexico, in Canada, and in Europe. Also threatened a possible universal tariff. What does all this mean for the dollar, for inflation, Fed rate action, and how will all this impact Asia and India? I have with me Chetan Ahya, Morgan Stanley's chief Asia economist. Chetan, thank you very much for spending time for us on what is definitely a busy morning for you. Well, first up, from the lack of any concrete announcements on day one, should we assume it will be a slow grind up in terms of tariffs? Nothing big and immediate.
Yeah, Lata, so that before the inauguration speech, this is the message we had, and essentially this is coming from our head of U.S. public policy, Michael Zezas, who basically said that, you will hear the announcements fast, but the implementation of tariffs will be slow. And I think what we heard from the president seemed pretty much similar to that expectation that our team had.
Okay. So if it is a slow phased manner, how would you look at, Asia getting impacted in 2025, including India?
So right now, what we have assumed is that tariffs will be largely focused on China within the region. And for China, we are assuming that the weighted average tariff will go from current 10.5% to 25.5% by end of 25. And this will begin to go up from second quarter of 2025. And we'll see another 10% weighted average increase in 2026 to eventually take the number to 35 or 36% by end of 2026. So that's sort of path we are looking at.
Okay.
And with this, we think that the impact will be much more muted compared to what you saw in 2018-19. Now, mind you, the critical assumption that we are making is that there will not be universal tariffs. And there will not be tariffs on all the countries in the region, because if that happens, then the corporate confidence impact will be much more than what we are assuming in our base case. So I think that's sort of the broad summary.
Okay.
In terms of the growth implications, currently we have regions growth going down from 4.5% to 4.1% in 2025. In large part, this is because of tariff and the negative impact on the region because of the trade tensions.
Okay, but this doesn't take into impact possibility of universal tariffs and a steep fall in business confidence.
Yeah, so that's the risk scenario. So we are saying two risk scenarios effectively. One, where there is a universal tariff. The other scenario would be that it's not universal tariff, but the bilateral disputes are so many that they kind of effectively bring the same effect on corporate confidence as a universal tariff would do.
Fair enough. Before I come to India, a bit more about the global macro. The fear is that higher tariffed goods imports into the US will mean higher inflation and therefore possibly no cuts from the Fed. Your thoughts on Fed and on inflation in the US?
So right now, we are expecting in our base case inflation to head a bit lower, and therefore we are expecting the Fed to cut rates twice in 2025. But at the same time, the US team has been highlighting that, look, if the tariff and immigration policies do impose upside risk to the US inflation, then the Fed will accordingly have to alter its path. But just on the tariff impact on inflation, I would also like to highlight one other important fact, that the way currency behaves will be important to look at, because that will have the final implications for the inflation story. So in 2018-19, what happened is that US weighted average tariff went up by 2.7%, but the trade-weighted dollar appreciated by 10.3%. So in the end, if you look at the actual facts, US core goods inflation went down, US import price index went down after the imposed tariffs on China. So that will be another important variable to look at as to what happens to the currency dynamics.
Oh, that's very important what you're saying, that, actually last time around, in spite of the tariffs, the import price index actually went down for the US. So we mustn't run away with expectations of no Fed hikes, no Fed cuts. But therefore, what is your currency expert telling you? We've already seen the yuan appreciate actually after the lack of any announcement from 7.3. It's come up to 7.27. How much does your team expect yuan to depreciate? And therefore, how much may the rupee depreciate?
So, look, I think at this point of time, as I mentioned, our base case is that the tariffs will go up on China. Right now, of course, there is no clear clarity on when those tariffs will go up. But in our base case, assuming the tariff path which I just mentioned to you earlier, we are assuming that yuan will depreciate to 7.6 by end of 2025. And that would sort of be very much the fate we are expecting for other currencies in the region, because China is a big economy in the region. It has a lot of trade relationship with the various countries in the region. And so we expect the whole group to see currency depreciation. INR will see less depreciation than CNY, but it will also see some depreciation in sympathy with what happens to yuan.
Okay. Well, actually, I was looking at the rupee yuan chart, and the rupee, which used to be about 10.5 rupees about 3-4 years ago, is now almost 11.8 rupees to buy a yuan. So actually, the rupee has depreciated versus the yuan. But separately, I wanted your views on India as well. Do you still stick by that 6.5% growth forecast that you all gave us earlier this month? Or do you think, both global headwinds and an Indian slowdown consumption story can make 2025 less, growth, can lead to less growth than you earlier estimated?
So, well, Lata, as I mentioned, if the base case is that there are no aggressive universal tariffs across the region, then in that scenario, you will probably not see a big impact on global corporate confidence, global growth, global trade, which means that there is definitely some downside to India from the external environment, because there will be some tariff increase on China. But, because there is no broader trade tension, that will help India from an external environment perspective, not being so bad as 2018-19. So I think with that assumption, we think India can still achieve its 6.5% GDP growth. And, while we are talking about this trade tensions and its implications for goods exports for India, if you look at services exports, they have accelerated quite nicely. And services exports have become quite meaningful in size. Annualized, it's about $375 billion. And those exports are growing at the average rate of about 15% in the last 3 months. That used to be much lower. So in the last 3-4 months, we've seen a big acceleration in service exports. So that's one of the factors that is making us feel that the external environment may not be all that bad for India. And then we are expecting fiscal easing, effectively government capital expenditure picking up. We are expecting that the RBI will ease on monetary policy, on regulatory front, injecting liquidity and cutting rates. So these three factors, services exports, fiscal easing, and monetary easing, makes us feel that that 6.5% GDP growth target for India is still achievable.
Okay, well, that is good to hear. So the current slowdown in urban consumption that we heard in the second quarter, and again, we had Zomato numbers and they were also indicating some slowdown. It could be other reasons specific to the company, but at the moment, you're not worried about consumption dragging down GDP below your estimate.
We would say that is a risk, Lata, but at the same time, I would say that the bigger reason for growth slowdown was the government capital expenditure.
Okay.
And at the same time, the lagged effect of regulatory tightening on the monetary front. So if we were to identify, these were the two big reasons for downside to GDP growth. And now we see those actually coming to help the growth outlook.
Okay, fair point. Actually, the Reserve Bank has also announced daily repos, something they were, so against. So clearly, there is they are on the front foot to mend liquidity or make it a little
and
easier.
And you've seen the announcements on the regulatory front as well. More and more NBFCs have got the ability to go and lend back again.
Yes, yes. The strictness of prior months of 2024 has abated. Chetan, what would you therefore expect from the budget? Is it likely to give a leg up in any form or fashion?
Well, I think if the budget continues to take that approach that the government took in the first budget announcement after the elections were done, I think that message of trying to boost investment and jobs would be my most important thing to watch in the budget. It looks like the government is doubling down on that plan. We are hearing more and more from the government in that direction. So my biggest ask, and I don't know, Lata, if you saw the report that we just put out on what is needed to solve India's jobs problem. The most important ask in that report that we have laid down is it's not something that the government is not aware and it's not taking up actions. But we want more on that front, which is to invest in infrastructure, to push policies that drives manufacturing exports. These two will be very important in terms of actions to be taken. And one specific ask, if I may be to be able to put it out to the government through your channel, is to work out a plan on how to incentivize states to improve their business environment. Because I think what happens now is if you think of a businessman, whether a domestic entrepreneur or an international entrepreneur, whenever they go and try and set up a factory and a business, they go through a number of challenges in terms of the bureaucratic hesitation or bureaucratic issues. And I think that needs to be addressed. And the central government, if it can work out an innovative plan to incentivize the state governments to change their policies and deregulate. Look what we are seeing in the US. It's something similar. They are focused on deregulation. And I think India also needs to focus a lot more on deregulation and make that business environment far more friendlier for the corporate sector, whether it is international or domestic.
Okay, thank you very much, Chetan. Certainly, this will be broadcast and brought to the notice of policymakers. Thank you very much for summarizing very nicely what we should expect from the US, could expect from the US, as well from the Indian budget and the Reserve Bank. Well, have a great 2025. Thank you for joining us.
Thank you.
Okay, so that's the word from Morgan Stanley. They are expecting a slow increase in tariffs and that to be nullified by currency depreciation. It looks like a positive set actually for India. 6.5, we could take it with both hands, that kind of GDP growth. That's it on this edition of It's the Economy. Thanks for watching. Chartbusters coming up.
mainstream party. And which is unheard of, especially, I shouldn't say this, for a Republican. The Republicans are actually becoming the mainstream party. And
global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to US inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos.
Zomato slips another 10% in today's trading session after cautious management commentary on the quick commerce business. Jefferies cuts its target price from 275 to 255, while CLSA cuts its FY 25-26 earnings estimates by 25 to 34%.
Dixon Technologies hits 10% lower circuit post its Q3 earnings. Goldman Sachs believes that the earnings upgrade cycle for the company must have halted for the time being. The management tells CNBC-TV18 that the demand in the mobile segment remains steady, but not very healthy.
MCX slips in trade following its third quarter earnings. The company's growth rate slowed down on a sequential basis while it missed its profit estimates that the street was working with as well.
Oberoi Realty slips close to 6% in early trade on the back of its Q3 earnings. The company's collections have risen on a year-on-year basis, however remained lower versus the street estimates.
Street gives a thumbs up to Suntec Realty third quarter earnings as the stock rallies over 7%. The company posted a net profit against the loss last year, and its pre-sales too surged by 40% year on year. Well, it's another day. You're watching us here on Chartbusters. I'm Mangla Malu. With me, Nigel D'Souza. Typically, we see some green on the screen, but today there has been a very deep shade of red. Not too different from the shirt that you're wearing, Nigel. 200 points down on the Nifty. And from the highs itself, it's a lot more than that. We're, holding around that 23,150 mark. The Nifty Bank is down by almost 500 points. And where the mid-cap index, the portfolios are feeling a lot worse today. Nearly 1,800 stocks which are declining for 650 stocks which are advancing today.
Well, that's right, Manglam. Let's go straight to our first management on the show. We have the Karur Vysya Bank. The bank reported a solid third quarter result marked by a strong rise in net profit and improvement in some asset quality as well. We're joined by Mr. B. Ramesh Babu, the MD and CEO of Karur Vysya Bank. Hi, Mr. Babu. Good morning, and always good to see you win. Well, your gross NPAs is, the ratio is the lowest in the banking sector itself. Give us some clarity. Did you sell any NPA to an ARC? And will we continue to see asset quality improvement from here on as well?
Yeah. Good morning to both of you. Now, first of all, thank you very much for the opportunity. Regarding the gross NPA, I can just clarify saying that for the last 4 years, we didn't sell any of our asset to any ARC. So everything has been done internally. What we did is we formed a collection team internally in the bank, and we understood these are the issues which can come up and all. So there we started focusing on our SMA 1 and 2 starting, and later we move to SMA 0. So that way, if you can find, our SMA 30 plus for the whole portfolio is 0.38%. So that is the reason we ensured saying that the slippages have to come down. Secondly, we started working very seriously on the recovery front also. We formed the legal team, we have strengthened it, and disposal teams also we have formed. With all these things, the recovery started. You can find that rate of recovery also. It has come out so well. All these have supported us in bringing down the gross NPA to 0.83.
That's incredible. You know, Mr. Babu, you had earlier said that gross NPAs won't cross that 1% mark. Not only they have not crossed that 1% mark, they're stabilizing around that 8.3% mark, 0.83% mark as well. So what we're trying to understand from you is what is the kind of further improvement that we can see from here on? Is there room for that, or do you think it's, you know, around stable levels right now? That's as far as the asset quality is concerned. And on the loan growth as well, you had guided for over 15%. Do you maintain that, and what's your prognosis for the next year?
Absolutely. Now, asset quality is concerned, more or less we can maintain at these levels, if at all, because our efforts will continue to further actually accelerate the process, and in the process we will be able to do something more better. But otherwise we can treat in the new normal. This is the way normal we can think of. Coming to the credit growth also, if you can look at divide the entire issue into two parts. Our focus for the last 1.5 years, we have shifted on the RAM vertical, because there its majority is collateralized and the yields are also pretty good for us. That is the reason, if you can see our presentation, it has grown by 20%. And whereas the corporate, consciously we have brought it down because the yields are low there. When the liability side, we have some sort of a stress, particularly on the CASA, the cost of deposits have gone up. We need to make it up overall on the profitability front. That is the reason we focused on RAM. So I'm not saying that 20% growth will come up here and there and all, but maybe I can think 16 to 17% we can think of under the RAM segment. Overall, we can think around 14% for the assets growth. That's what we can think, even after the shortfall in the corporate.
All right, so RAM you're saying will grow 16 to 17% and overall will be growing at 14%. Corporate, you know, which at one point was over 40% of your book, you've brought it down to sub 20% as well. That's your target.
16, so 16 now, 16%.
16%. So from here on, what is your prognosis on the corporate front as well? I mean, at some point you will have to, you know, start giving loans there as well. It will bottom out, right? So what will the product mix and then steady state loan growth look like?
Mangalam, the logic is very simple. When the money is there, just like a businessman, if we think, so where we can get the maximum yield and the risk wise lower, naturally we will try to put the money there. Currently, there are other opportunities available on the RAM sector. As and when we find some sort of a freedom as far as the liabilities are concerned, and the CASA also position improves. So we will go back to corporate. It will be around 20-25%. That way we can take it forward. But it's a tactical decision taken for the time being to continue with the RAM.
Right, Mr. Babu, what about NIMs? You know, I remember you had told us that worst case scenario, it will go down to around 3.8% or thereabouts. Do you think the risk is on the downside, or do you think it will hold at current 4% odd?
No, I'll tell you, because it's a one-way traffic now. Yields cannot go up from here because above all, RBI may cut the rates also. So that way that is blunted. And second side, deposits cost is there. Every time it has been going up because the repricing is happening when the renewals are there. Automatically it will go up. So that way, if there is a rate cut, we can think of around 3.85 to 3.9, we can think of the NIM. Suppose if the rate cut is not there, it can be around 3.95, that's what we can think of.
All right, so 3.8 to 3.9 if there is a cut.
3.85.
3.8 to 3.85, very specific there.
If the rate cut is there, if rate cut is there.
If the rate cut is there. And final question then, you know, when it comes to deposits and fundraising, what's your strategy on increasing your deposits from here on? And do you have any fundraising plans in the near future?
Fundraising as it is, we don't require because we have sufficiently capitalized. So that way the earnings, what all we have, if we plow it back, that will be quite sufficient to take care of our growth, because you would have seen our risk-weighted assets is also around 56%. Even if it goes to 60, 65 also, so we will be well within this CRAR, and that's why there is no need. Now coming to the deposits is concerned, we have taken many measures within the bank. We have formed the sales vertical. So under the different types of sub-verticals we have started there and all, focusing on the institutions, NRI and corporate salary. That way we have started working. Around 1,200 people we have taken from the market to take care of this for the acquisition. And likewise, for the deepening also, we have taken the resources within the branches, around another 1,500 people we have taken. These people, they'll be engaging with the customers for the retention, because both acquisition as well as retention, both are important to fill the hole. So that is the reason we are actively working on the deposits, because there's the resources which we need to deploy for the assets. So we are abreast of the situation.
All right, we take that point, Mr. Babu. Thank you so much for joining in. As always, it's a pleasure speaking with you. You've been candid with and forthcoming with your answers on loan growth, on asset quality, on credit costs, as well as increasing deposits as well. We wish you good luck, not just for the fourth quarter, but the remainder of the next financial year as well. A mild green tinge is what we're seeing in Karur Vysya Bank in an otherwise very red market. Let's talk about Growth Code now. It's an initiative with CNBC-TV18 and Grow. It offers valuable insight strategies that may help you make well-informed trading decisions. This week, pro trader Rajesh Baheti, who's the managing director, Cross Seas Capital Services, gave his insights on the new SEBI guidelines for algorithmic trading.
Currently, there is no real regulation as such that debars anybody from trading in algorithms or using algorithmic trading. What is happening is there are two kinds of algorithmic trading strategies that are being deployed today. On the professional or prop side, as what we do, all of our algorithms are approved by the exchange. The trades are entered as algorithmic trades. There's an identifier in the order sequence that identifies the trade as an algorithm. What is happening with the discount brokerages is that they are giving and exposing their APIs, and anybody with access to that API can either write their own code, or there are some pre-authorized vendors who have already matched their trading strategies to these APIs, and they are farming it out to the retail public. And these trades typically don't get registered in terms of an order identified as an algo trade, but rather as a standard internet trade. And I think SEBI has a problem with that. They don't want the algo trades to be identified as standard internet-based trades. They want the algo trades to be identified as algo trades even for this retail segment who are currently coming in using the APIs exposed by the brokers. What SEBI wants to do is that if you want to run an algorithmic strategy and you want to write your own code, then you've got to get that thing certified with the exchange. The strategy has to be approved. And in case you are outsourcing it from certain vendors, those vendors will need to get registered as some kind of investment advisors.
Take a short break then. On the other side, we have the management of Indian Overseas Bank joining in to discuss their third quarter numbers and the outlook going ahead. Stay with us.
Is it? This is the first India Pavilion, so to speak, India Bharat, and as I pointed out, this is the first time that we have India putting its states together, technically under two roofs. And what we've seen happen over the last several years is that states have come out here in Davos. So it's of course been the central government, but also increasingly the number of states being represented here in Davos has gone up quite significantly. It used to be Chandrababu Naidu. He was the original Davos man from a state's point of view, but now we've seen Maharashtra, Telangana, in fact even UP now here in Davos as well. Of course, the Chief Minister is not going to be here, but we do have ministers from the UP government who will be here. So this is the first India House, so to speak, and this is going to be home to UP, Telangana and Kerala. So Telangana, Kerala and UP are going to be part of the India House together, and it's also going to be interesting because this is the federal story. This is the beauty of India's federal story, and it's also its strength, so showcasing its diversity and its unity here in Davos will be something to watch out for. With the next India Pavilion, India, which is going to be home to Andhra Pradesh. Remember, Chandrababu Naidu is going to be here. It is home to Tamil Nadu and Maharashtra. So 3 states, so total 6 states here in Davos, 3 in the house that we just saw, which was Telangana, UP and Kerala. And here we have Maharashtra, Tamil Nadu and Promenade and Andhra Pradesh. Devendra Fadnavis, the Chief Minister of Maharashtra, will also be here in Davos, as will Revant Reddy, the Chief Minister of Telangana. So 3 Chief Ministers will be here in Davos. Let me show you what we are saying to the world here. And of course, all of this has been set up by Invest India. So let's take a look at the themes that India is going to be showcasing. We're going to go right inside. The themes that India is showcasing: the Indian semiconductor market is set to triple by 2032. So semiconductors will be part of the story that India is pitching, from silicon to success. And again, we've got Semicon, the mission that the government has announced. We've already started to see investments coming in there. So semiconductors, electric mobility, EVs to account for over 40% of India's automotive market. EVs will be the other big theme that will be discussed here as part of the India story. So this is India, the roadmap to a $32 trillion GDP by 2047. India's economic overview, so some data and numbers and statistics here being highlighted here at the India Pavilion.
Welcome back. Well, the markets are under pressure. We've recovered a little bit from the lows, and one heavyweight that's trying to put its hand up and get counted is ITC. Remember, post that corporate action that took place, the stock actually has moved a little bit lower. It went down to around 430. But from there, as we speak, it's moved up a little bit. I think Nuvama had come up with a note overnight, and they believe that the risks are now on the upside because they are not expecting anything that will be so negative for them in the upcoming budget. So that's one view that came out. And for the time being, the stock has moved to the high point of the day. Yes, Mugla.
I was just wanting to point out Swiggy. If you look at Zomato is down about 11%. Swiggy, if you look at it, it's fallen as much. Swiggy is currently at the low point of trade. In fact, nearly 10.5%. So Zomato and Swiggy, both of them, if they come up for you on the screen, you realize that there's been a big cut because of Zomato's valuation weakness. Because when they went up, it was always, about narrowing the valuation gap. Now the valuation gap maintains, but at the same time, if Zomato has fallen 10%, then Swiggy falls as well. So we'll just keep an eye out on this trend as it moves.
Well, that's right. Well, let's focus on Indian Overseas Bank. The lender also reported a good set of numbers in the third quarter. That's backed by improvement in the cost to deposit ratio, driving margin expansion. We're now joined by Mr. Ajay Kumar Srivastava, the MD and CEO of the bank. Hi, Mr. Srivastava. Good morning. Thanks a lot for joining in. Well, I just wanted to focus on the deposit momentum. It appears a little bit softish on a quarter-to-quarter basis. That's clearly visible. There are indications that deposits, well, they're hard to come by. Your take on it, and what are you doing with regard to shoring up some deposits?
Yeah, exactly. For IOB, I can give you the details of deposit growth. See, the total deposit consists of 3 things. That is CASA plus retail term deposit plus bulk deposit. If you look at the numbers, our CASA has improved by almost 9% year on year. Our retail term deposit has increased by 8%. The bulk deposit, which is hot money and which is for short term and the cost is high, that we have as a strategy, as part of a strategy, we have allowed it to go. On a number basis, I can tell you as of 30th September, we are having around 23,000 crores of bulk deposit, and almost 7,000 crores of that we shed in this quarter, Q3. And because of that setting of bulk deposit, which was part of the strategy, the deposit growth is visible as muted. But as a matter of fact, CASA, which is 43% of the total deposit, the retail, which is almost 51% of the total deposit, in those 2 sectors, we have grown.
All right, and that shows, on your NIMs as well. So let's talk about the NIMs itself. We saw them expand year on year as well as quarter on quarter. And with you focusing more on CASA, Do you see more upside for NIMs from here on, or do you think that maybe they've topped out here?
There will be some challenge going forward because as for the expectation of the market, this repo rate is going to be reduced. So almost 55% of my credit portfolio is linked to EBLR. So
Yes.
there will be hit on income going forward. And that is why the focus on CASA is there. And I would like to share a number with you that during last almost 21 months, 7 quarters, we have onboarded 5.2 million new CASA customers. And through that, we have faced almost 17,000 crores of fresh CASA business. So focus is, of course, on low-cost deposit, that is CASA. And whatever impact will be there by way of reduction in repo, we will be able to compensate that. So overall, NIM, we are looking at maintaining at the same level of around 3.3 to 3.4.
All right, 3.3 to 3.4 on the NIMs. And finally, before we let you go, just give us 3 numbers, sir. Your growth expectations on the loan front and your expectations on gross NPA and credit cost.
Yes, in the beginning of the financial year, we gave guidance that deposit and credit both will be growing by around 13 to 14%. If you look at the numbers, we have grown in first 9 months of this financial year, we have grown by almost 9 to 10%. And Q4 being the busiest season, we are pretty sure that the guidance of 13% on both sides, deposit as well as credit, we are going to surpass. That is one point. Regarding NPA, you can see quarter on quarter, year on year, this is coming down. GNPA stands at 2.55, that is the lowest. And net NPA, we are standing at 0.42, that is also one of the lowest in the system. And in this Q4 also, we are looking forward to reduce it further to maybe by 5, 6, 7 bips more.
Okay, all right. Thanks a lot, sir, for joining in. A short but crisp chat. Wishing you all the best, and we look forward to touching base with you sometime during this quarter yet again. For the time being, we slip into a short break, come back, continue our focus on markets and stocks that are moving around.
The Republicans are actually becoming the mainstream party. And which is unheard of, especially, I shouldn't say this, for a Republican. The Republicans are actually becoming the mainstream party. And
global growth, what's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to US inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. Is it? This is the first India.
Welcome back. You're watching us here on Chartbusters on CNBC-TV18. As you can see at the top of the screen, the Nifty is still down about 140 points, though Nigel and I, as always, take credit. We'll take credit for about 40 points of recovery from when we started the show. The Nifty was down almost 180 points, still down about 150 points. We have the mid-cap index, which is struggling. 1,800 stocks declining for about 700 stocks, which are in the green. So tough trade ahead for bulls. We'll take a short break, come back on the other side. Trading hour will take the market action forward.
India, Bharat, and as I pointed out, this is the first time that we have India putting its states together, technically under two roofs. And what we've seen happen over the last several years is that states have come out here in Davos. So it's of course been the central government, but also increasingly the number of states being represented here in Davos has gone up quite significantly. It used to be Chandrababu Naidu. He was the original Davos man from a state's point of view, but now we've seen Maharashtra, Telangana, in fact even UP now here in Davos as well. Of course, the Chief Minister is not going to be here, but we do have ministers from the UP government who will be here. So this is the first India House, so to speak, and this is going to be home to UP, Telangana and Kerala. So Telangana, Kerala and UP are going to be part of the India House together, and it's also going to be interesting because this is the federal story. This is the beauty of India's federal story, and it's also its strength. So showcasing its diversity and its unity here in Davos will be something to watch out for. With the next India Pavilion, India, which is going to be home to Andhra Pradesh. Remember, Chandrababu Naidu is going to be here. It is home to Tamil Nadu and Maharashtra. So 3 states, so total 6 states here in Davos, 3 in the house that we just saw, which was Telangana, UP and Kerala. And here we have Maharashtra, Tamil Nadu and Promenade and Andhra Pradesh. Devendra Fadnavis, the Chief Minister of Maharashtra, will also be here in Davos, as will Revanth Reddy, the Chief Minister of Telangana. So 3 Chief Ministers will be here in Davos. Let me show you what we are saying to the world here. And of course, all of this has been set up by Invest India. So let's take a look at the themes that India is going to be showcasing. We're going to go right inside. The themes that India is showcasing: the Indian semiconductor market is set to triple by 2032. So semiconductors will be part of the story that India is pitching, from silicon to success. And again, we've got Semicon, the mission that the government has announced. We've already started to see investments coming in there. So semiconductors, electric mobility, EVs to account for over 40% of India's automotive market. EVs will be the other big theme that will be discussed here as part of the India story. So this is India, the roadmap to a $32 trillion GDP by 2047. India's economic overview, so some data and numbers and statistics here being highlighted here at the India Pavilion.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Vivek Iyer. Vivek, call it Trump tantrum, but markets are selling off, right? After a positive start and positive global markets, even right now, the Hang Seng is up more than 1%, and you've got a little bit of green on the other Asian markets. The Indian markets are at the day's low. The only thing you could say is, by way of a little bit of a relief or respite, is that at least in the last 30 minutes, there hasn't been a recovery, but at least the selling pressure has not accelerated. So we're still down close to about 170 points lower on the Nifty. The Sensex is down 750 points. We're staring at a cut of about 0.8, 0.9%. Banks are under pressure. Mid-caps are bearing the brunt of the weakness. The mid-cap index down 1.8%, small-cap index down 1.5%. And the advanced decline ratio stands at 1:3. And just going by the earnings reaction that we've seen in Zomato, Dixon, it tells you that even if there is growth, perhaps the markets have just run ahead of themselves in terms of overvaluing these companies, and now those trades are unwinding.
Right, like you mentioned, overvaluation, very punchy valuations for some of these stocks, and that is something that's led to very sharp cuts, despite names like Dixon, etc., actually meeting market expectations, and even the commentary and the kind of interaction that we had with the management not indicating towards any extended or exaggerated slowdown. But a few stocks on the radar, and the ones that we're highlighting, have to be the ones that are seeing very sharp reactions to earnings that have come through. Like you can see on your screen, Zomato, Dixon, very sharp reactions. MCX is another name, good set of results, but again, Morgan Stanley has highlighted that there could be some derating in case, volumes continue to trend lower. And also have a look at names like Newgen Software came out with its numbers during market hours yesterday, down almost 13% today. Obura Realty, that's another name that's seeing a very sharp sell-off. All of this are post Q3 results. The other stock on the radar, one stock that's managing to hold out in the green is actually Apollo Hospitals. An upgrade coming in on this particular name from Kotak Institutional Equity, and that particular stock has managed to hold out in the green today. On the other hand, Mankind Pharma, seeing a downgrade from Macquarie, and that particular stock also under pressure today. Overall, market breadth, Reema, very, very weak, very much in favor of the declines, and very sharp reactions to even slight earnings misses or punchy valuations is what we are seeing on the screen today.
Okay, let's straight away get then to the first corporate on our show, and that's Jammu and Kashmir Bank. The bank's slippages and gross NPAs rose sequentially in Q3. We have Amitav Chatterjee, MD and CEO of J&K Bank, now joining us on the show. Thank you very much, sir, for joining in. Before we get to the asset quality, first, if you could talk about the loan growth of the company. It's been on the weaker side in Q3. What was the reason for that, and what can you guide for Q4 and even FY26 in terms of a loan growth guidance?
Good morning, and thank you for this opportunity. Honestly, I would not read much into the muted loan growth during the third quarter. Overall, there has been a growth in the YOY side. And I believe looking at the kind of pipeline that we have in both the J&K, because we have a unique structure of the presence, very strong presence in Jammu and Kashmir, Ladakh, as well as the rest of India. So looking at the pipeline that we have at both places, I believe that fourth quarter would be much better than the third quarter as far as the loan growth is concerned. I wouldn't look much into the muted growth during the third quarter. There were quite a few reasons: the hard winters, the fallout of the state elections, all those things. In the entire banking machinery was involved in that. So it's okay, maybe for a quarter not having a big growth, but I still stand by the guidance given by the bank at the beginning of the year.
So your guidance was 15% that you shared at the beginning of the year. So you're saying for FY25 and FY26, you still hold on to this guidance, with retail being 70% and corporate being 30%.
Yeah, we will stand by the guidance, primarily because I believe that the appetite in this geography is very strong, and the developmental activities which are coming up in these areas, in the states of Jammu and Kashmir, Ladakh, is substantial. And being the most important bank in this geography, we will have a major share in all those developmental activities that are going to come up in the infrastructure space, as well as the railway line coming up gives a huge opportunity in the business area also. And also being present in the rest of the country gives us a huge opportunity growing outside the state as well. So I will stick to the guidance.
Understood that. Mr. Chatterjee, this is the first quarterly results that's come about, after you've taken over the bank, and you've also managed to hold on to the guidance. Number one, what is your view as far as FY26 is concerned? What is the targets that you've set internally, especially in terms of loan growth? And also, what is the outlook, number one, on slippages? Do you expect it to, get further deteriorate from here on? And subsequently, what are the kind of recoveries you anticipate?
See, I believe that the recoveries would be better. I would also see the slippages the slippages have been below 1%. So it will still be low, I believe. I am not expecting further slippages in a major way at all in the entire bank as a whole. And we would also like to concentrate on the existing NPAs that are there in the rest of the country outside J&K. Primarily the NPA levels in this geography is lower than the rest of the rest of the country. So we will be focusing on those. So as NPA is concerned, I believe 26, if you ask me, I would say that we can be well in line to bring the gross NPA levels to 3%. Okay. So that is what I believe. And loan growth, definitely 15% going forward next year also. Definitely we will be able to achieve.
Okay, 15% loan growth and gross NPAs, which are now at 4%, should come down to below 3% or 3% by the end of FY26, and slippages are under control. What about net interest margins? Your NIMs were at 4% and they've picked up a bit. Can you maintain NIMs at 4%, sir?
See, the strength of this bank is the market share in this geography, and we have a substantial CASA, although it has come down over a period of time, but still this geography, we still have a 50% of CASA. So that gives us a better opportunity to retain our NIMs, and definitely going forward, I think we'll be able to at least maintain the NIMs at this level, if not slightly improve them.
Okay, so last question from our end. How would you look at the NIM trajectory from here on in case there is a rate cut that does come about? And also a word on credit costs. How do you expect it to trend in Q4 and FY26?
See, if you look at the history of credit costs this year, it has been negligible, nil. So we will continue with that. The provisioning done by this bank over the last 2 to 3 years has made it quite stable that way. NIMs, as I said, we would like to maintain the NIMs at around 4% going forward, even after the rate cuts, because we know that, as I said, we have a fair share of CASA in this geography. So I believe that we'll be able to maintain the NIMs and in spite of the rate cuts.
Okay, thank you so much, sir, for joining us, giving us a view on how Q3 panned about, and wish you all the best for Q4 and FY26. Well, we'll now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.
Good morning. How are you? Good morning. How are you? Are you enjoying your time in Davos?
Yes, we are going to work.
And what are you looking forward to the most?
Meet everyone and for the betterment of the economic.
For the betterment of the economy.
Of the world.
So what?
You come from India?
Yes, from India. Where are you from?
Punjab, India.
Punjab, India. आप कहाँ से? पंजाब में कहाँ से?
पंजाब से मैं वैसे तो हरियाणा से हूँ, अम्बाला से.
अच्छा, तो आप यहाँ पे कैसे आए?
वैसे घूमते फिरते आ गए.
घूमते फिरते आ गए. बड़ी लंबी घूमते फिरते आ गए आप. तो कब आए आप यहाँ पे?
में रहता हूँ.
आप ज्यूरिख में रहते हैं. अच्छा.
20 years living here.
और तो आप ये डावोस में वर्ल्ड इकोनॉमिक फोरम के लिए पहली बार आ रहे हैं कि?
नहीं, हम तीसरी बार आ रहे हैं.
तीसरी बार आ रहे हैं.
हमारे एक रेस्टोरेंट है खान्स तारा के नाम से.
जी.
तारा रेस्टोरेंट इंडियन.
हाँ.
तो उसकी कैटरिंग करते हैं हम.
अच्छा, तो क्या खिला रहे हैं आज आप डावोस में? क्या है मेन्यू पे, क्या है?
आप आए.
Well, that's lovely.
ये हमारे शेफ हैं जी दोनों.
नमस्ते जी. बहुत आपको शुभकामनाएं. आप कुकिंग करने वाले हैं और काफी लोगों को खाना खिलाने वाले हैं. तो
हम लोग
शुरू हो गए. तो
आपको काफी फॉलो करता था मैं. लास्ट ईयर का गीता गोपीनाथ का इंटरव्यू पढ़ा.
Thank you जी. Thank you so much. It's very nice to hear that you're watching CNBC TV18.
कभी इंटरेस्टिंग होता है आपका 2-3 काफी
नहीं, बहुत अच्छा लगा आप लोगों से मिलके. एंड वी विश यू ऑल द वेरी बेस्ट. बिल्कुल जी. इंडिया वालों को अब नमस्ते, सत श्री अकाल.
हमें कुछ सक्सेस हो जाए.
जरूर होगी. आपको बहुत सक्सेस मिले और बहुत शुभकामनाएं.
मैं ऑलरेडी किया कि promenade is captured by the
Indians. Yes. हम पहुंच ही गए. आप बिल्कुल भारत के सामने. और आप लोग को भी डावोस के लिए बहुत शुभकामनाएं. थैंक यू. बिल्कुल खाएंगे जी, बिल्कुल खाएंगे. थैंक यू इंडिया की तरफ से. थैंक यू सो मच. It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From Discover.
Welcome back to Trading Hour. Well, we are now shifting focus to the commodity space. Manisha joins in, and today we are focusing on crude and natural gas.
Thank you for that, Vivek. Well, absolutely. We're looking at high volatile moves coming in for this one. The crude oil prices yesterday saw a decline as the US President Trump was talking. But since then, we've seen a bit of a gain coming in from those kind of levels. Well, flat on your screens at this point in time. As far as the natural gas prices go, we did see a 2-year high onto this one. And there is a bit of a decline for this one as well. Well, one thing that led to some support initially was the decline in US dollar index from 2-year highs. And that one continues to trade on a weaker trend right now. But there is just so much that has happened in last 24 hours, which the markets are reacting to. Well, one, the US president has repealed 2023 memo that the banned oil drilling in 16 million acres of Arctic. So that tells you that there is going to be more crude availability going forward. And that is the reason that the Brent prices are slightly higher. And there's a big discount that we have seen come in for the US crude oil prices, almost to around $3 to $4 of a gap at this point in time. The second thing that the US president did was revoking the 2021 order that ensured 50% of oil vehicles sold in 2030 were EV. So that means that the fossil fuel demand is going to be stronger going forward. The third thing is uncertainty on potential adjustments that we have in sense of US sanctions on Russia. The fourth thing really the markets are looking at is that while the the US president refrained from making any concrete changes to trade policy, but then he's put forth a date of 1st of Feb. That is when you will see additional tariffs coming in countries like Mexico and Canada. So that is still in the limbo there. And then the markets also are looking at a stronger demand going forward because very soon you will see the holiday season, the March break come in, and that demand will start picking up into the markets as well. So as you can see, it's very divided in sense of fundamentals right now. Choppiness continues, but we are holding on the higher side at around $80 for the Brent prices.
Okay, thank you very much for that. By the way, HAL, Hindustan Aeronautics, is a stock we should look at. There were negotiations on between General Electric GE and Hindustan Aeronautics for the local manufacturing of F414, but that has encountered a significant hurdle. There are sources which have been quoted to a particular website which focuses and gives you the updates on defense. They have revealed that GE, that's General Electric, has demanded an increase in the contract price to incorporate 80% transfer of technology for the engines. So the earlier deal was agreed upon. The earlier contract size was $1 billion. And now we understand, according to the report-based information, that contract value size could have been escalated to $1.5 billion. So that deal has hit a bit of a hurdle right now, and the stock is reacting negatively. CNBC-TV18 has not independently verified of the deal, but the news report, the article, website goes on to say, despite this, HAL remains optimistic about concluding the engine deal with GE before the end of March 2025. However, the ongoing discussions over the revised pricing could extend the timeline as both parties work towards reaching a mutually acceptable agreement. Stock is down close to about 3%. It's time now for the Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. This week, pro trader Rajesh Baheti, Managing Director at Cross Seas Capital Services, gave his insights on the new SEBI guidelines for algorithmic trading.
So currently, there is no real regulation as such that debars anybody from trading in algorithms or using algorithmic trading. What is happening is there are two kinds of algorithmic trading strategies that are being deployed today. On the professional or prop side, as what we do, all of our algorithms are approved by the exchange. The trades are entered as algorithmic trades. There's an identifier in the order sequence that identifies the trade as an algorithm. What is happening with the discount brokerages is that they are exposing their APIs, and anybody with access to that API can either write their own code, or there are some pre-authorized vendors who have already matched their trading strategies to these APIs, and they are farming it out to the retail public. And these trades typically don't get registered in terms of an order identified as an algo trade, but rather as a standard internet trade. And I think SEBI has a problem with that. They don't want the algo trades to be identified as standard internet-based trades. They want the algo trades to be identified as algo trades even for this retail segment who are currently coming in using the APIs exposed by the brokers. What SEBI wants to do is that if you want to run an algorithmic strategy and you want to write your own code, then you've got to get that thing certified with the exchange. The strategy has to be approved. And in case you are outsourcing it from certain vendors, those vendors will need to get registered as some kind of investment advisors.
Get into a break. On the other side, we'll discuss market technicals. Mitesh Thakkar joins in with his top trading bets.
Finding ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18. From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen. stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18.
Welcome back. Mitesh is now with us on the trading show for a quick technical check on the markets. Mitesh, it started off pretty okay, stable, but then the slide. What have you made of it?
So, I was highlighting this importance of 23, 350, 360 and an hourly close about that. That's not happened. We were yesterday at the upper end of the range. I think we are just going back towards the lower end of the range, which is 23,100 to about 23,080. I hope the lower end holds. That would, possibly suggest that the market is still trying to build a base and try to give a reversal. But otherwise, it's a market, which will not turn positive or strong unless until we see a closing about 23, 350, 370 area.
Understood. Mitesh, what are your individual picks for the day?
So I have a sell on Coforge, keep a stop about 85.20, look for targets around 81.50, and a buy on Reliance with a stop at about levels of 12.65 and a target of roughly around 13.20.
Thank you so much, Mitesh, for joining us and giving us both your views on the indices as well as your individual picks. Well, let's now get you some more from Davos. Serum Institute of India CEO Adar Poonawalla says the turnaround at Poonawalla FinCorp has already begun and is confident that Poonawalla FinCorp will achieve an AUM of rupees 1 lakh crore in the next 5 to 7 years. Let's listen in to excerpts from that conversation.
What I would say is that with the new team in place and the new investments, the OPEX, which is there to incubate some of these new businesses, I think you're going to see a huge turnaround in the figures in the coming year. This financial year obviously is not going to be what it was last year because we've written off a lot of the old legacy books. We've got a AUM now of 30,000 crores and we're hoping to grow at 35-40%. That's the guidance we've given. And I think, yeah, and I think, we can easily reach, a lakh crores in the next 5 to 7 years of AUM, and we want to do it very sensibly, carefully, and again more on the secured side, and have like a 60-40 mix of secured and unsecured lending. I think as people realize, and they've been investing a lot in the stock market, as we've seen. I think once that slows down a little bit, if at all. And there's been a lot of leveraging for that activity. let's see what happens. But right now, one needs to be quite careful and calibrated in the unsecured space. And RBI is absolutely correct in putting all these warning signs and measures. So we're complying to that and fully, are aligned to, their way of thinking.
Well, time now for a short break. Management of Sterlite Technology joins us next to discuss the quarter gone by and the way forward.
CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Republicans are actually becoming the mainstream party. And which is unheard of, especially, I shouldn't say this, for a Republican. The Republicans are actually becoming the mainstream party. And
Welcome back to Trading Hour. Well, let's listen in to another exclusive conversation from Davos. Shireen caught up with Cognizant CEO Ravi Kumar S and spoke to him about the Trump administration's impact on tech and also explains the AI opportunity for tech services company. Let's listen in.
I'm hoping there's going to be less regulation that will help financial services. I'm hoping there's going to be a significant relook at taxes. So all of it which the Trump administration has spoken about. So it's in general good for businesses. So let's see how it goes. I mean, the economy is on a high in the US with just 2%, less than 2% unemployment. Yeah. Less than 3% inflation. Yeah. But
and consumer confidence
consumer confidence is pretty good. So I'm very, very hopeful that things are going to look up.
In terms of spends at this point in time, and again, without talking specifics, what's the outlook in terms of spending now that, some of the big ticket events are out of the way? We had spoken about how there was a pause, but is there now a pickup?
I mentioned this before. We are in this unique phase of navigation where there's a period of change and a period of uncertainty. And the uncertainty is a little bit now, in some ways, calming down. but the period of change around us is significant.
Yeah.
I mean, the AI wave is just, the opportunity is just out of the world for enterprises. And the kind of work which needs to be done to take the raw power of AI and make it enterprise grade there's so much heavy lift needed that I'm excited about the future of tech services. I'm excited about India. I mean, India has a very significant role to play. So I'm excited about the fact that Cognizant has this unique confluence of having a big presence in India and leverage upon it. And equally, the future of tech services. There are CEOs who will tell you that AI will actually make tech services a loser, and some will tell you that it will be a winner. I'm a big believer that it is going to be a winner. I mean, and that's why I'm excited about the future of IT services.
Well, let's talk about the future of IT services, because how do you see the model changing in an AI world? You know, you walk down this promenade and everyone has an AI slogan, including you. And I just met with your AI head, and you know, ChatGPT provided that breakout moment in terms of mainstreaming AI. But from an IT services perspective, how does it change your operating model?
The work we do. I mean, writing software and software development cycles, that's going to be run by machines. And because it's going to be run by machines, people think, what are people going to do if software is going to be written by machines? Uniquely, writing code is one of the biggest use cases for AI. So 30% of my code is written by machines. So what are people going to do? So on that vector, I believe the elasticity for spend for technology is so high that every time something like this has happened, we have actually seen more technology spent, the backlog getting cleared, and more importantly, we have tech debt on balance sheets which will actually come out.
Okay, he's a firm believer that AI will make tech companies a winner in the future. Get into a break. On the other side, we'll get chatting with the management of Sterlite Technologies. They'll join in to discuss the quarter gone by and the way forward.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to US inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. This is the first India pavilion, so to speak, India Bharat, and as I pointed out, this is the first time that we have India putting its states together, technically under two roofs. And what we've seen happen over the last several years is that states have come out here in Davos. So it's of course been the central government, but also increasingly the number of states being represented here in Davos has gone up quite significantly. It used to be Chandrababu Naidu. He was the original Davos man from a state's point of view, but now we've seen Maharashtra, Telangana, in fact even UP now here in Davos as well. Of course, the Chief Minister is not going to be here, but we do have ministers from the UP government who will be here. So this is the first India House, so to speak, and this is going to be home to UP, Telangana and Kerala. So Telangana, Kerala and UP are going to be part of the India House together, and it's also going to be interesting because this is the federal story. This is the beauty of India's federal story, and it's also its strength, so showcasing its diversity and its unity here in Davos will be something to watch out for. With the next India Pavilion, India, which is going to be home to Andhra Pradesh. Remember, Chandrababu Naidu is going to be here. It is home to Tamil Nadu and Maharashtra. So 3 states, so total 6 states here in Davos, 3 in the house that we just saw, which was Telangana, UP and Kerala. And here we have Maharashtra, Tamil Nadu and Promenade. Andhra Pradesh, Devendra Fadnavis, the Chief Minister of Maharashtra, will also be here in Davos, as will Revant Reddy, the Chief Minister of Telangana. So 3 Chief Ministers will be here in Davos. Let me show you what we are saying to the world here. And of course, all of this has been set up by Invest India. So let's take a look at the themes that India is going to be showcasing. We're going to go right inside.
Welcome back. Turning our attention now to Sterlite Technology. It's been a weak Q3 for the company. In fact, the last couple of quarters have been subdued. For the last 6 quarters, the company has been reporting a negative revenue growth on a year-on-year basis. In Q3, revenues were down 10% quarter-on-quarter and down 4.5% on a year-on-year basis. Ankit Agarwal, Managing Director at Sterlite Technologies, is with us on the show. Ankit, thank you very much for joining in. First, just zooming out for the benefit of our viewers, it's been tough for the last 1.5 years. What are the top 3 pain points for you?
Hi, Rima. Thank you for having me on the show. So I think as we've been guiding the market, I think principally we've been focused on creating our innovations and taking our products, especially into Europe and North America. Particularly in North America, we've seen a huge amount of inventory, excess inventory with our customers on the telecom operators and fiber operators. That has definitely been reducing quarter on quarter, and we've seen that now meaningfully come down over the last 6 quarters. And I definitely believe that where we stand now in the next 1 or 2 quarters, we will see a strong return in demand in terms of the optic fiber cable and the connectivity requirements. So I think this has been the primary driver for the demand. As a result of this, our factory utilizations have been in that 50% range. And we have definitely seen that we have a very strong operating leverage. So this 10-12% EBITDA margins that we are running currently will move towards 20% very, very quickly as we move towards around 70% utilization. So I think we're just at that tipping point where as we see this demand coming back and we see growth in our cable and connectivity on the back of 5G, data center and everything else, we're quite confident that we'll move back towards the 20% EBITDA margins.
By when, Ankit? And do you think in FY26 margins get back to 20% and on the top line there is growth? When does the recovery kickstart?
Absolutely. So I think we're just 1 or 2 quarters away from that. We're already seeing increased interest from our customers. Our pipeline is strong, both on the cable business as well as on the services business. So I think from a pipeline perspective, we are confident. We've been focusing on 2 or 3 things. One is working very, very closely with our customers and innovating. We've actually increased our patent count to north of 700 patents now. On the second part, we've been focused on our cost structure. And if you look at our fixed costs, people costs, admin costs, all of that has come down steadily. And that is also further contributing to our profitability. So I think with all of this coming in, we do believe our revenues will be higher in the coming year, and also our profitability will improve. Most importantly, we're also working on cash generation. And post QIP, we had a meaningful reduction in our debt. But now we're also looking at how do we generate more cash from the business and then reduce our debt further in the coming year.
Ankit, you've been quite selective in the services business, which has actually impacted your top line, but margins have been stable or improving, especially in that particular segment. How much would you like to scale up this particular business to, and what are your margin aspirations here?
Yeah, absolutely. You're spot on. I think we've been guiding that we're going to be very, very selective in the kinds of projects we take up. Broadly, we've been saying that, look, we want to look at opportunities in the PSU, in the private space, but more and more on the system integration and value-added services. That's really where we're focusing. You will see us winning more and more of data centers / system integration projects going forward. I must say that our pipeline is stronger than it's ever been in this services business. So we're very excited with the kind of opportunities coming up. And as we've been guiding, we broadly want to move from about 6-7% margin towards 10 to 12% margin, which I'm confident that we'll move coming into the new year.
Okay, so for services, the pipeline is better than it ever was, and margin should get up to 10 to 12%. by FY26, the middle of FY26?
No, I won't be able to give a specific timeline, but I think directionally, when you look at the projects that we have, for example, we won a 2,600 crore project in Jammu Kashmir. We do expect the APO for that to come into us in the next few weeks. We look at new system integration projects that we should be winning and announcing soon. I think directionally, we should start moving in that 10 to 12% range.
Okay. And what about digital? It's the first ever positive EBITDA quarter for you. What led to that, and is it sustainable?
Yes, absolutely. So I think that's been the target and the focus for the team. We've been very clear that, yes, we want top line growth, but it has to be profitable growth. So far, we've got to our first EBITDA profitability, and eventually the whole thought process is we should have cash profit in the business. So I think, again, we are broadly running at about 70-75 crores revenue per quarter. As that moves towards, say, 90 to 100 crores, we're confident that we should have cash profit as well. So that's really the focus. We have some marquee customers in the US and globally, and we're very confident that as we keep scaling that up, we should move to cash profitability in that business.
Ankit, give us a sense of how you expect order book trends to pan out. On a year-on-year basis, it's down, but sequentially it's up. So Q4, what is the executable order book? FY26, where does it stand at? And how is the pipeline looking, if you could give us a sense of both domestic as well as international?
Yes, absolutely. So just to give you a background, this is kind of 3 or 4 trends that are happening in parallel. We've clearly got massive rollouts still going on for 5G globally, where you've got to connect all your tower sites, 70-80% of them to fiber. The second major trend you have is fiber to the home, both urban and rural. On the rural side, you've got massive government projects going on in the US, in India, etc., like BharatNet. And then the third major trend that we're seeing is because of this advent of AI, you're seeing far more fibers required within the data centers and to connect the data centers to the scale of 5 to 10 times. So as we get more and more of these AI-built DCs, we're going to see more and more of fiber requirements. One very important trend we're seeing in our own business is that our data center plus enterprise segment, which is a customer segment for us, contributed to more than 20% of our revenue. So that's a very interesting and fast-growing segment for us that will pan out over the next 3 to 5 years as well. So when I look at all of these 3 trends combined, I really believe that we're at that tipping point where things should start improving. As I said earlier, our pipeline is already growing both for our cable and our connectivity. Our attach rate is north of 20%. So really from us now is about really making sure the pipeline pans out. We execute on this and our factories get utilized from north of 70%. At that level, we've proven in the past that we can clearly get 20% EBITDA margins.
Ankit, one last question. The global services business, it was supposed to be demerged, listed. What is the timeline for that? Are you on track?
Yes, absolutely. So I think broadly we're looking at end of Q4 or early Q1. And again, I think that's a tremendous opportunity to create value. As I said, we really see the services business looking to scale up and scale up profitably from here. So post the demerger, I think there can be very good value creation for shareholders.
Thank you so much, Ankit, for joining us, giving us a sense of how Q3 panned out, how Q4 is looking, and we wish you all the best for FY26 as well. Let's now take a short break. Up next, we'll discuss market fundamentals with Anirudh Garg from Invaset PMS.
Showcasing the Indian semiconductor market is set to triple by 2032. So semiconductors will be part of the story that India is pitching, from silicon to success. And again, we've got Semicon, the mission that the government has announced. We've already started to see investments coming in there. So semiconductors, electric mobility, EVs to account for over 40% of India's automotive market. EVs will be the other big theme that will be discussed here as part of the India story. So this is India, the roadmap to a $32 trillion GDP by 2047. India's economic overview, so some data and numbers and statistics here being highlighted here at the India Pavilion.
happily.
Welcome back to Trading Hour. Well, in the last 15 to 20 minutes of the session, what we've seen is we've seen a very sharp recovery as far as markets are concerned. As you can see, the Nifty on your screen now, it's almost in the green territory right now, trading near the flat line. There's also been a very sharp recovery in the Nifty Bank Index, as well as the mid cap and small cap index. They are still trading with cuts, but given the fact that they have seen quite a bit of buying, especially in the last 15 minutes of the session, quite a few of the large cap index stocks are actually recovered quite significantly in the trade. Any of the stocks that hit
it's changing so rapidly. Like literally when we were in the break, the Nifty was up 50 points from being down 170 points. And as soon as the break, ended, the Nifty went down flat again. So it's just changing very, very fast. Individual stocks on the way up. You've got an HDFC Bank that deserves mention. Bajaj Finance, let's get that up for you on your screen. It's flat now, but from the day's low, it's recovered close to about 1.5%. L&T has seen a vertical rise. Maruti Suzuki is seeing buying. Bharti Airtel is on the way up. Adani Ports is trying to erase some of its losses. But the screen is looking a lot better now. Back in the green now, 25 points up on the Nifty. As we said, at the session lows, we were down close to about 170, 180 points on the Nifty. Anirudh Garg from Inva Asset PMS is now with us on the show. Anirudh, I remember our last conversation, you were very, very cautious in the markets. You had, liquidated all your holdings and you were 100% in cash. It's since then, it's not that things have recovered. We're down 12% from our peak levels. How would you approach the market now? Because we've spent some time correcting and we've seen a bit of a price correction too. I think you're on mute.
Oh, sorry. Okay. So thank you for having me. A very good morning to all the viewers of CNBC-TV18. Yeah, we have been, as you rightly said, we have been sitting for cash for quite a long period of time. And I think the status quo still remains. We are still sitting on cash, though we see a lot of interesting opportunities now arising, especially today. And yes, but we still feel that there is a little bit more pain to go. I think this market has transformed its, way of functioning all the way from June 2022 to, we can say, end September or October 2024. We were seeing a market which was, buy on dips. And I believe now this market has transformed into sell on rises. And I think the valuation and the growth prospects in the market are still not supporting the valuations out there.
How much lower at an index level do we need to go for you to be more comfortable at a headline in the broader sense?
See, I believe at least sub 22K is where we should look at the indexes. And all these indexes the Nifty mid cap, small cap, even the Nifty, they have a tendency to approach 500-day moving averages, be it simple or exponential during a bull market correction. And we clearly are in a bull market correction. We may have periods where we may rise, but I believe, as I said earlier, all these rises should be an opportunity to book profits. We have earned wonderful profits in the last 2 years. And somewhere this correction, you can, relook at your stocks wherever the excesses are. You can shift to those stocks where the valuation is now in a comfort zone, or you expect them to be in comfort zone. The valuations where the valuations are higher, you can just wait a bit, not jump into the momentum that is going on into the market.
Anirudh, we got that point. Anirudh, help us sift through various sectors. Where is it that you continue to see excessive valuation? And like you mentioned at the start, today especially, you do see a few pockets of opportunity. So which are the sectors you like currently, and which are the sectors that you will continue to avoid?
See, if we look at the overall context, we are seeing economic slowdown in India. So whenever this happens, the worst hit are the financial institutions. That is clearly being reflected in the bank Nifty. Now, the big boys, HDFCs and the Kotaks and all, are somewhere we believe that the earliest shoots of recovery should come from, because these are the people who do the good lending. And whenever the economy recovers, these will be the people who will, lead the recovery. So going forward, some value is seen in this sector. Also, I believe you have to look at from the other point of view, where the sectors which are okay but were highly inflated, something like say maybe a Zomato, or something like say a Dixon Technologies. All these sectors which are the new age sectors of India, which are I connect them to the consumer side of it, and very expensive. Somewhere the correction has started in these names as well. And I believe a good opportunity in coming times in the next couple of months should be seen in such stocks. They had become the darlings of the market, and now they are due for their rightful correction. So you have to make sure that you have a balance of both stocks which are expensive but are the stocks which are growing. On the other hand, stocks which are fundamentally very strong but did not perform that well. So yeah, these are the sectors that we are looking at.
But would you go out there and buy a Dixon, a Zomato, a Swiggy, a Paytm after the correction, or would you wait for lower levels?
I believe we would start nibbling into something like a Zomato, if that is the right way to say it. And still, I believe the valuations at something like a Dixon Technologies are very high. And I think there'll be more negative surprises than positive going forward. So we are still waiting for them to correct.
How do you like the metals and mining space in the current scenario, especially given the kind of a cool-off that the dollar index saw? Do you think that's one particular space that investors can once again look at?
I think it's too early for us to, say that the dollar index has topped out. I personally, I do not believe so. I think whatever rally a little bit, if we can say that, or a dead cat bounce, if we can say that, is happening in metals is just because of the China growth that has come in. The dollar index, I still believe, is in a dangerous territory, and one should keep a very close watch at it. I think nothing has changed. Things will take some time. Just Donald Trump swearing in does not change anything in the market. The US inflation problem is still there. He recognized it yesterday in his inaugural speech as well. And out of every, I believe, all the UN cry out there, the reality is the US inflation and the lack of global growth. This is something that you will have to, fight out in the real world. Rest all is like a Bollywood film where you're talking too much and not delivering that much, is what I could make out of Donald Trump's speech yesterday. So the US inflation is still a problem, and until this US inflation problem solves, I don't think that the dollar index is gonna come down. We see higher levels for the dollar index, and then automatically lower levels for developing market equity indexes.
Anirudh, thank you very much for joining in. Day one of the Trump administration, and already unpredictability and volatility is evident in our markets. The mid-cap index has recovered. The mid-cap index was down 1.7% when we started the show. It's now down 1%, but still under pressure. Its names like Paytm managed to recover 4.5% from the day's low. RBL Bank is now back in the green. And then some of the PSUs like Hutco, RVNL, SAIL, have seen a little bit of buying in the last 10-15 minutes, but it's back in the green now for the Nifty and the Sensex. A very sharp recovery seen in the last 10-15 minutes. Don't go anywhere. On the other side of the short break is Halftime Report.
Good morning. How are you? Good morning. How are you? Are you enjoying your time in Davos?
Yes, we are going to work.
And what are you looking forward to the most?
Meet everyone and for the betterment of the economic.
For the betterment of the economy.
Of the world.
So what?
You come from India?
Yes, from India. Where are you from?
Punjab, India.
Punjab, India. आप कहाँ से? पंजाब में कहाँ से?
पंजाब से मैं वैसे तो हरियाणा से हूँ, अम्बाला से.
अच्छा, तो आप यहाँ पे कैसे आए?
वैसे घूमते फिरते आ गए.
घूमते फिरते आ गए. बड़ी लंबी घूमते फिरते आ गए आप. तो कब आए आप यहाँ पे?
में रहता हूँ.
आप ज्यूरिख में रहते हैं. अच्छा.
20 years living here.
और तो आप ये डावोस में वर्ल्ड इकोनॉमिक फोरम के लिए पहली बार आ रहे हैं कि?
नहीं, हम तीसरी बार आ रहे हैं.
तीसरी बार आ रहे हैं.
हमारी एक रेस्टोरेंट है खान तारा के नाम से.
जी.
तारा रेस्टोरेंट इंडियन.
हाँ.
तो उसकी कैटरिंग करते हैं हम।
अच्छा, तो क्या खिला रहे हैं आज आप डावोस में? क्या है मेन्यू पे, क्या है?
आप आए?
Well, that's lovely.
ये हमारे शेफ हैं जी दोनों।
नमस्ते जी, बहुत आपको शुभकामनाएं। आप कुकिंग करने वाले हैं और काफी लोगों को खाना खिलाने वाले हैं, तो
हम लोग
शुरू हो गए। तो
आपको काफी फॉलो करता था मैं। लास्ट ईयर का गीता गोपीनाथ का इंटरव्यू पढ़ा।
Thank you जी, thank you so much. It's very nice to hear that you're watching CNBC-TV18.
कभी इंटरेस्टिंग होता है आपका 2-3 काफी
नहीं, बहुत अच्छा लगा आप लोगों से मिलके, एंड वी विश यू ऑल द वेरी बेस्ट। बिल्कुल जी, इंडिया वालों को अब नमस्ते, सत श्री अकाल।
कुछ सक्सेस हो जाए।
जरूर होगी। आपको बहुत सक्सेस मिले और बहुत शुभकामनाएं।
ऑलरेडी किया कि promenade is captured by the
Indians. Yes. हम पहुंच ही गए। आप बिल्कुल भारत के सामने, और आप लोग को भी डावोस के लिए बहुत शुभकामनाएं, एंड थैंक यू। बिल्कुल खाएंगे जी, बिल्कुल खाएंगे। थैंक यू इंडिया की तरफ से, थैंक यू सो मच। It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC TV18.
A sharp recovery in the market after a tepid start following fears over possible tariff hikes by the US after Trump takes charge. Consumer durables and realty are the big drags, even as FMCG and energy manage some gains. The mid-caps are underperforming.
Zomato slips as rising competition in quick commerce pushes back margin expansion and drives a faster network rollout. Swiggy too feels the heat.
Dixon Technology slides on profit-taking after an in-line quarter, and with growth expected to taper off, the managing director tells CNBC-TV18 that the FY25 revenue will top 40,000 crore and margins will start rising after FY26.
US President Donald Trump signs a flurry of executive orders after assuming office. He declares national emergency for energy and revokes the EV mandate, establishes DOGE and External Revenue Service, as well as pardons capital rioters. Also plans to impose tariffs of up to 25% for imports from Canada and Mexico. It's just the first half of trade, and we've had nearly 3 trading sessions worth excitement. From the highs, the Nifty first fell to the lows, and from the bottom of those lows, it has seen a bit of recovery. Are we still out of the woods? Perhaps not, but a lot of excitement is what we've seen in the first hour of trade, or first half of trade rather. I'm Mangla Malu, with me Hormas Fatakia. As you see on the top of our screens, the frontline indices, the Nifty as well as the Sensex doing a lot better. The banking index, though off lows, is still under a wee bit of pressure, down almost 200 points. And the mid-caps is where the heat is. Still have about 1,500 stocks declining for about 900 stocks, which are advancing. But the story of the last 15 minutes, Hormaz, has been the big surge that we've seen in a lot of the heavyweights, and as a result of which the Nifty is back in the green.
You blink and you miss. Almost at one point, the Nifty was down 150 points. But take a look at that. In just the last 15 minutes, the index is up 250 points from the lows of the day. Again, nearing last week's high of 23,391. That is going to be the important level that the index will have to keep an eye out for. Of course, today's high is 23,426. So that is, they've already crossed that mark, but still the sustaining above those levels need to be the key. But of course, the mid-cap index is not recovering from the lows as much as the benchmark has. The index is still down 1%, and that is also because there have been some really extreme reactions when it comes to earnings, and two of those names are Zomato and Swiggy. Of course, Zomato seeing the post-earnings reaction in yesterday's session, and Swiggy bearing the brunt of that as well. Mangalam, you have more data on that.
Well, just three things that really stood out from Zomato's commentary yesterday. The numbers not particularly bad. I mean, you did see an EBITDA decline and all of that and stuff, but three things from the management's comments that, spooked the street. The first one, of course, was on Blinkit, where they believe that losses will continue in the near term. This is a marked difference from what they had said a couple of quarters ago, where they are turning operational profit. So as a result of which they've brought forward their investments. Heightened quick commerce competition has led to a temporary pause in margin expansion. Most on the street were hoping for this growth to continue and then operating leverage to kick in as well. But now that margin expansion has been paused, and food delivery revenue, which was good from an operational standpoint, grew just 2% from a GOV basis quarter on quarter. That slowdown is largely because of the consumer sentiment weakness that we are seeing. As a result of which, brokerages have cut their target as well. Jefferies is a hold rating and a target cut from 275 to 255. They believe that aggressive Q-commerce expansion may force competition to follow suit and entry of new players to further add competition as well. CLSA, while they have a positive rating on the stock, high conviction outperform, they've cut their FY25-26 EPS estimates by 25 to 34% to reflect faster store rollout. And for FY27, they've raised the EPS forecast because the throughput would have increased as well. Nomura, they have a buy rating, 290 rupee target price. They're saying that strong execution and balance sheet are key positives in favor of Blinkit, but it is a good opportunity to accumulate given large TAM and likely market consolidation as per Bernstein. That's about Zomato. Now, if you look at both the intraday charts of Swiggy and Zomato, you would see that once Zomato fell, Swiggy felt the heat as well. So if you look at the intraday charts, side by side, Zomato recovered from the lows, Swiggy is still recovering from the lows. Why is this important? Because Zomato's weak performance, weak commentary around quick commerce has impacted Swiggy. Secondly, since Swiggy's IPO, the valuation gap between the two has narrowed. So if you look at just, the Swiggy and Zomato valuation discount itself, Swiggy, when it came out of the IPO, issue price at 390 rupees, the peak, the discount versus Zomato's valuation was 65%. At peak, that discount has actually narrowed to almost 32 to 35%, depending on the multiple that you are giving to it. And now the discount between Swiggy and Zomato is around 50%. So at what rate does this settle is another variable that we'll be looking at. When Swiggy was offered at IPO price, the discount versus Zomato's valuation, 65. Then Swiggy moved higher, Zomato moved lower. Swiggy was at one point above 600 rupees per share as well. That time, the discount between Swiggy and Zomato was close to around 35% itself. And now, Swiggy too has fallen off highs, Zomato has fallen as well. The discount has widened once again to 50%.
The other similarity is the fact that Swiggy's post-listing high, as you mentioned, 617 rupees. The stock is off 30% from that. Zomato's high, 304 at the day's low. That too is down 30% from its peak. So both of them moving in tandem is Zomato and Swiggy bearing the brunt of the results. Now, the other extreme earnings reaction in today's session is MCX, and that is also following its third quarter earnings, and Vamakshi is now joining in with more details on that. Vamakshi, what led to this fall in MCX?
Well, Hormaz, growth has slowed down on a quarter-on-quarter basis in the company. If you remember, in quarter 2 of FY25, the growth was in double digits. Now that has significantly slowed down, and growth this time around is only in single digits. When we look at the revenue, that has seen an uptick of only 6% sequentially. EBITDA is up 8%, net profit is up only 4%, and the margins too have improved by 125 basis points. Although this is an improvement when we compare it to the improvement that we saw in the previous quarter, which was nearly 600 basis points, this seems rather tepid. When we look at the key internals as well, traded clients stood at 6.9 lakhs. This is an uptick of 1.5%. The growth last time around was also much better than this. The average daily turnover for both the futures as well as the option segment saw an uptick of 6.9%, and this growth is largely being led by the option segment. Market share was more or less stable. It was at 97.84% in quarter 2 of FY25. It has improved to 97.97%. So overall, when we look at the results that came in from MCX, not a great set. There's another note that came in from Morgan Stanley on the company. They have an underweight call with a target price of 3,715 rupees per share, and they say that core EBITDA was more or less in line. A higher SGF, which is the statutory guarantee fund contribution, caused the miss on the net profit. They also said that there has been stagnation or moderation in average daily revenue in recent months, and if this sustains, they could see some significant derating. They find the current valuation stretched given the low conviction on sustainability of revenues, which carry significant concentration risk. So Morgan Stanley too expressing some caution on this counter.
Right, that's about MCX. A big decline is what we're seeing on that one as well. Meanwhile, the Nifty still continues to hold with the mild green gains itself. So good time to get in our growth code, the initiative that we've seen. Actually, as we speak, the Nifty's recovery has been sold as well. When we started the show, it was up 40 points. Now it's down about 45 points. So it's all happening, Hormaz. It's all happening.
So make comments at your own risk. As of now, the moment you finish a sentence, the index is turning. But of course, going into growth code to make you well-informed trading decisions. This week, pro trader Rajesh Baheti, the managing director at Cross Seas Capital Services, gave his insights on the new SEBI guidelines for algorithmic trading.
So currently, there is no real regulation as such that debars anybody from trading in algorithms or using algorithmic trading. What is happening is there are two kinds of algorithmic trading strategies that are being deployed today. On the professional or prop side, as what we do, all of our algorithms are approved by the exchange. The trades are entered as algorithmic trades. There's an identifier in the order sequence that identifies the trade as an algorithm. What is happening with the discount brokerages is that they are giving and exposing their APIs, and anybody with access to that API can either write their own code, or there are some pre-authorized vendors who have already matched their trading strategies to these APIs, and they are farming it out to the retail public. And these trades typically don't get registered in terms of an order identified as an algo trade, but rather as a standard internet trade. And I think SEBI has a problem with that. They don't want the algo trades to be identified as standard internet-based trades. They want the algo trades to be identified as algo trades even for this retail segment who are currently coming in using the APIs exposed by the brokers. What SEBI wants to do is that if you want to run an algorithmic strategy and you want to write your own code, then you've got to get that thing certified with the exchange. The strategy has to be approved. And in case you are outsourcing it from certain vendors, those vendors will need to get registered as some kind of investment advisors.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen. We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
and welcome to our continuing coverage here from Davos 2025. It's bright and early on day 3 of our coverage here. And joining me now is a man who actually started his tenure as CEO of MD and CEO of Tech Mahindra right here with us in Davos with his first interview. Mohit Joshi, it's great to have you back here on CNBC-TV18. Thanks very much for your time. You're fresh off your Q3 numbers and a good quarter coming in there for Tech Mahindra, Mohit. But let me start by asking you, it's been a year exactly now for you in office. A long year, I would imagine, but where do you find yourself on your turnaround plan that you had comprehensively detailed here in our last interview?
Right. Well, thank you, Shireen. I think it's wonderful to be back here. And thankfully, it's not as cold as it usually is in Davos, so a little bit of relief there. Like you said, in December, I completed 1 year as the CEO of Tech Mahindra. And it's been a fabulous journey, right? I think we packed a lot into the first year. Started of the year actually on the 1st of January with the new organization structure. Within a couple of months, we figured out our new strategic narrative, which is scale at speed, the only player that can give you the benefits of scale, but also the benefits of agility. We followed that up in April with a detailed Capital Markets Day presentation about a plan for revenue, a plan for margins, and a plan for the organization. And I think the plan was very well received by, by our employees, by the markets, by our clients. And since then, we've been on this journey of steadily showing improvement from a revenue perspective, from a margin perspective, and from a large deals perspective. So again, this is a multi-year journey that we're on to excellence. But I feel quite happy about where we are on the journey. As I had said in my earnings release, sort of paraphrasing the Spotify CEO, that we are where we expected to be on the transformation journey, if not a little bit ahead.
Okay, so that's important that you are a little bit ahead. But reacting to the results, I've been looking at what analysts are saying at this point in time, and everybody acknowledges the fact that it has been a good quarter. But they say that now it's only going to get harder from here on. So the heavy lifting, so to speak, will have to be done from here. So Mohit, what will you prioritize? And let's talk about margins, for instance. The estimates are just short of 15% at this point. Do you believe that you could do better? Are you closer to being able to achieve that number?
So look, I think, the second year obviously is, the first year was the year of the turnaround, right? And we're still in the first year till the end of March. And where we said there would be a degree of volatility in our earnings. The second year we said is some of the results of what we have done, right? Look, the new organization structure that we put into place, the new focus that we have on, maintaining our supremacy in telecom and manufacturing, but also growing BFSI and healthcare and retail and energy. And the results that we have from the focus on our top accounts. These will start to bear fruit, hopefully helped by a better macro situation as well in the next year. We're not expecting any overnight miracles. We had not promised any overnight miracles.
No, you promised a 3-year turnaround plan.
We promised a 3-year turnaround, and look, we are well on the journey. The way I think about it, right, is that this is like planting a garden, right? We designed the garden, we shared with the investors, they like the design. We got in a new team of gardeners, we've got all the infrastructure in place in terms of the watering and the feeding of the plant. But equally, if I'm tempted to tear every plant by the root every day to see how they're growing, it's not going to go very far. So I think what is needed over here is what is needed in life, right? Faith and patience.
Well, since you're going with the garden analogy, let me continue. So the green shoot starting to bloom now, is that what you're seeing?
Very much. So I think, I feel that we've had 3 quarters now of consistent improvement in revenues, consistent improvement in margins, and consistent progress in large deals, right? The relevance to our clients is increasing. Our visibility as a brand is increasing. As you mentioned, for the first time, Tech Mahindra has a significant presence on the promenade
here in
Davos. Our sponsorship of the Global Chess League, of Formula E. So we're doing a lot of things to, to get that client relevance and to be able to, apart from obviously showing the growth in margins and revenue.
You didn't answer the margin question.
On the margin question, so look, if you look at it, right, just in the last quarter, our margins went up from 9.6 to 10.2, right? So 60 basis point expansion in margins, despite a 70 basis point headwind from FX, right? So I think this should give the market confidence that we will hit the 15 number in FY27. We're obviously very committed to it. We have a clear plan. I think we have a wonderful team with our Chief Operating Officer Atul Suneja, our CFO Rohit, our CHRO, all of the SBU heads. So I feel that we have a very clear plan of what can be done. And again, everybody else is, running at those margins. So it's not like we're shooting for the moon.
Yeah, well, let's talk about the environment and the external environment in light of the commentary that's coming from President Trump overnight and what is expected. What did you make of what you heard from President Trump, as well as the proposed measures which have not yet been announced?
Yeah. So look, I think that a lot of the moves had already been telegraphed well in advance, right? And I feel a lot of the focus obviously is on the immigration issue, on birthright citizenships, things that maybe do not impact us from a business perspective. I think it's very clear, given the people that President Trump has surrounded himself with, that he's a deep believer in technology, right? And the power
that
of
was
technology.
The front row.
Yes, the power of technology to to transform lives and to transform the American economy. The U.S. is a very large market for us, right? It is our largest market, but we also have a presence across the world. So I think the business sector in the U.S. certainly feels optimistic about the lower regulatory pressure, the greater focus on technology. And I think all of that should be a net positive for our business as confidence comes back. And enterprise tech spending is really a key driver of the U.S. economy. So we feel confident it should remain strong.
So 24 was better than 23,
Yes.
25 likely to be better than 24 for you?
For sure, for sure. And all culminating in FY27, which is where we have given the, our grand plan for. So no, I do feel that, look, 23 was very difficult, right? If you look at it from a tech perspective, we shrank by about 5% or so for the financial year ending on the 31st of March 24. For the current year, we've shown growth quarter over quarter in the past couple of quarters, and I feel confident that calendar year 25 should be a strong year.
A strong year.
Again, not a breakout year, but a strong year.
You're being measured there as far as your outlook is concerned. But Mohit, let's talk about what you're seeing as far as the telecom space is concerned. You did call out the fact that while things haven't gotten worse, they're not getting any better either, and that's 30% of your revenue. So how do you de-risk yourself in that sense?
Sure. So look, I think it's not really a question of de-risking per se. We want to make sure that we remain the most relevant for telecom players across the world, because almost uniquely, right, both on the IT side as well as on the network side, we have a unique set of capabilities. We can help operators sort of simplify, modernize and monetize their estate. If you look at the most recent quarter, for instance, right, a lot of the large deals that we announced, including autonomous network operations for a European telco, a large deal again with a European telco, and then a deal with a North America telco from a customer service perspective. We are seeing a lot of deal momentum from a telco perspective. Obviously, the situation for telcos remains a little bit tight, right, in the sense of reduction in capex and huge pressures. But this is where I think a player like us can make a difference. So we do feel that we will see a lot of consolidation and cost plays. Again, I also feel that the regulators have come to realize now, or have realized, that they have maybe put too many burdens on the industry. As we saw in the UK, for instance, with the acquisition, with the takeover of Hutch and 3 being agreed. We do feel that the regulatory pressures on the telco business will ease.
And some government intervention is likely?
I think it should. Look, I think it won't be intervention as much as easing up from a regulatory perspective. And if you look at it, right, if you look at the US telcos, for instance, the stocks have really done well over the past 1 year, which also reflects, I think, a confidence in the long-term potential of the sector.
Let's talk about deals, because you've, as you pointed out, you've done well both quarter on quarter as well as year on year as far as deals are concerned. What's the pipeline looking like, and what do you intend to focus on when we talk about going after deals in 25?
Sure. So if you look at our large deal sort of wins, right, it's actually been a very steady trajectory from a 300 odd number to a 400 to a 500 to a 600, and the most recent quarter 745 million in large deals. We have always said that we will be very selective in large deals, and we don't want to trade margins for growth. Our focus is very much on meeting the margin.
Is it getting even more competitive in that space?
It is more competitive, but look, I feel that at the end of the day, the solution quality, right? The solution quality, the people that you bring on board is very important. And this is where I feel that we have an edge in Tech Mahindra. If you think about our workforce, for instance, the average sort of experience of our workforce is 9 to 10 years. The average experience of the workforce from our peer group is about 3 to 4 years, right? And I think clients have started to realize that the experienced workforce that we bring to the table really is a game changer for them. We've also gotten certain service lines where we have unique strengths, coming both from the MBT heritage and the Satyam heritage. So engineering, for instance, digital enterprise applications includes SAP, ServiceNow, Oracle, Salesforce, our business in data and AI. And we're really looking to double down on these to generate growth, apart from obviously our historic strengths in BPS.
So let me talk about doubling down on both data and AI, which is the bet that everybody is making at this point in time. So what's the kind of spends on AI and building out those capabilities? And how do you differentiate yourself in a market where everyone wants to be everything for everybody when it comes to AI?
Yes, I think if I had $1 for every AI house I've seen on the promenade.
I have a video of it. I made one.
Yes, everything is AI or AI led. Yeah, you're right. Look, it's a it is a breakthrough trend, right? So no wonder people are trying to stick onto it. The way I think about AI actually is far more basic, right? In the sense that we have to create the vertical and the horizontal use cases for customers. So the horizontal use cases, for instance, are in marketing, in cybersecurity, in HR, in contact center transformation. And the vertical use cases are by industry, right? You know, fraud and anti-money laundering for banking, energy consumption and reducing churn for telecoms, right? So we've got these horizontal and vertical use cases. Then we have the ecosystem partnerships with the hyperscalers, with the AI model builders, and we have our own R&D, right? I think uniquely among the SIs, we have built a large language model for Hindi, from scratch, right? And partnering with NVIDIA, we built a large language model for Bahasa Indonesian.
Okay.
And while these are not models that we have monetized to a great degree, I think it gives a lot of confidence that if a company can build a model from scratch, they probably know a little bit more than just building an AI house.
I hope so. But what does that mean eventually as far as business is concerned, Mohit? I mean, when does it start to make a significant difference, an incremental difference as far as numbers go for you?
I think what we're telling our clients is, look, candidly, a lot of the spending on AI has not gone to the system integrators, right? Has not gone to the service providers. A lot of the spending on AI has gone towards the hardware and towards the software place, right? I feel clients are realizing that they also need to be able to simplify their data estate, to modernize their application infrastructure, to really take advantage of AI. And I do feel that in 2025, some of the momentum will shift from the hardware and the software play towards more of a services play, because at the end of the day, if you don't have a data estate which is clean, if you don't have applications that can consume AI services, you can invest as much as you want in AI models, right? It's not going to help. The analogy I give, right, is like we already had a car that went from 0 to 100 in 10 seconds. Now with AI, you've got a car that can go from 0 to 100 in 2 seconds. But if you don't have the roads infrastructure, if you don't have the lighting, if you don't have the instrumentation, that car is quite useless, right? So I feel that in 2025, a lot of the investment will go towards simplifying and modernizing the estate. I think the thing is, for enterprise clients, a lot of the technology is really ancient, right? A lot of the banks, a lot of the telcos are running on technology that was written in the 70s and the 80s. So there is a huge need to modernize this estate, to simplify this estate, to really get the benefit of AI.
So in an AI era, from an Indian IT services standpoint, I mean, double-digit growth rates, is that something that we should be looking at, optimistic and hopeful of?
I think we should be hopeful about it, but
how realistic?
How realistic I think is it? In 2025, double-digit growth is a little bit of a stretch, right? Now again, things could change very quickly. I do feel that for the next year after that, because these things always build up, right? Unless you take a year like COVID, when things went to the moon directly, it always takes a little bit of building on, because at the end of the day, increasing IT spend also requires a huge amount of effort to be able to consume it. So I do feel that 2025 will be the year of consolidation, and then 2026 will hopefully be the year of explosive growth.
2026 will be the year of explosive growth. That's quite a statement.
Of faster growth, for sure. Because I do feel that a lot of the investments in simplification, in modernization, a lot of the estates still have to move to the cloud, the data modernization initiatives, these should pick up. And so if not explosive, at least close to double-digit growth.
Close to double-digit growth in 2026. So are you looking at M&A at this point in time at all, or is it largely going to be driven by organic growth?
I think our focus just now is largely organic. We may look at small tuck-in acquisitions, but we're very focused on integrating what we have acquired in the past, but really very focused on organic growth, right, on our largest customers and our largest sectors.
Let me end by asking you, Mohit, since the current debate is on what happens to the workforce, what happens to workflow, how many hours do we need to put in, and how do you look at this, and how are you reorganizing workflow as well as the workforce in an era of automation and AI and generative AI?
So look, I do feel that as far as the workforce is concerned, as far as sheer numbers are concerned, I do feel that the human element will continue to remain predominant, forever, right? And the analogy that I gave is if you look at contact centers, right, which have been influenced the most by automation. We've had multiple waves of technology interventions as far as contact centers are concerned. So we had first, interactive voice response units.
Yeah.
We had the first generation of chatbots. We had the internet, right? Self-service on the internet was supposed to get rid of the contact center. Then we had the second generation of smart chatbots. But yet in this time frame, in 2000, you had about 4 or 5 million contact center agents, and now we have 17. So in a sector that has seen the most amount of technology intervention, you've seen a huge growth in the labor force because global economies have grown, because more people have phones, because people are consuming more things. So I remain quite optimistic about the overall potential from a professional services perspective for employment growth. As far as the second issue of how much you should work, right? My own sense is twofold, right? One is you have to work as much as is needed, right?
Yeah.
Sometimes you can't always have your pedal on the metal.
Yeah.
I also almost uniquely feel that for senior people, right? For people like me, unfortunately our weekends are not sacrosanct, right?
Yeah.
Sometimes you end up traveling on a weekend, sometimes you end up taking a call on the weekend. But as far as possible, we have to model those behaviors so that we're making time for our families, we're making time for our own interest, because the tone from the top is quite important here.
No, absolutely. The tone from the top makes a world of a difference, and the hours you put in have to be seen in context of what the job entails as well.
Exactly, and I've got a 14-year-old and an 11-year-old, right? So don't want to be missing out on their lives almost completely.
And you shouldn't have to do that. Mohit, before I let you go, a final headline for 2025 as far as Tech Mahindra is concerned?
I think for Tech Mahindra, the headline is always the same, onwards and upwards.
Onwards and upwards. We wish you the very best of luck. Thanks very much for joining us here in Davos on CNBC-TV18, and we look forward to hearing much more from you. That's Tech Mahindra's Mohit Joshi. The turnaround plan that he had articulated here on CNBC-TV18 exactly a year ago, currently underway. It continues to be work in progress. Things have made a turn, and the acceleration process is now underway. 2026 likely to be an explosive year, in his words, for the IT industry. We are going to take a break, with the conversations continue. Don't go anywhere. We're back in a moment with more.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
We own a bunch of these platform companies. We really have been in this space now for a while, and we continue to like it. We clearly believe that these are going to remain the wealth creators and the winners for a very, very long period of time. In between, there could be challenges for a quarter or two as companies essentially either accelerate or tweak their growth strategies. There will be competitive intensity, and in some of the cases, maybe some of the growth strategies may not work for a short while. We've seen, for example, like what the Zomato management itself has said, and we own the stock. Itself said that look, they saw a similar thing playing out in the case of food delivery, where they went in aggressively and then had to pull back later. It's quite possible that quick commerce will also witness a similar situation. So it's honestly not going to be for the faint-hearted or for the more short-term oriented investors. So if you're looking at the next...
Welcome back. You're watching us here on Halftime Report. Now, this is the time where we take note of the F&O action in the market. And typically, I walk across to that wall and do it from there. But today, I didn't. The reason for that was because from the time I could walk from here to that wall, maybe the market changes. Because that's exactly what happened. You look at the way the market has moved today. It was, all the way down from thereafter. There was this big up move that we saw at the start of the show. And that recovery was swiftly sold into. Too early to call anything. Currently, we're back at the low point of today's trading session. Put that, hump behind us, so to say. So it is back to square one. Sharp fall in the markets once again. So the Nifty Bank, the mid-cap index, all of them under pressure. The mid-cap index back below that 1.5% sort of mark right now, 1.7% lower. And the broader market pain widens once again. So if you look at the intraday charts of, the crisscross lines, you would notice that they tried to come closer to each other, but thereafter swiftly moved apart as well, with the red line now much above the green line by virtue of 1800 stocks, the green line seeing just 650 stocks in the green. India VIX, that's the one that is spiking, because when everything goes up and down, it's the volatility which increases, and it's likely to increase further as we move towards the budget. What's happened in the options data? Just look at that. First up, when the market was falling, it was the put writers which actually got caught on the wrong side. Thereafter, there was a swift recovery, taking all those call writers out as well. And now you have the 23,200 call, which is back again fairly active, 23,300 call back again active. And it's just not this price that tells you the story of the day. It's the range of the day that tells you the story. 23,400 call, for instance, currently is 129 rupees. At one point, it was just about 100 rupees, and at one point it was up 500 rupees as well. We're seeing some writing at the 23,150 put. Let's see whether we see support around the 2370 or 2380 or closer to 23,100 itself or not. The one stock that I'm watching out for in particular is Dixon Tech. It will enter F&O ban after the big decline and the big surge in open interest that we've seen. So just keep an eye out on this. For the market, I think the only thing to say is it's a roller coaster, not just any roller coaster. It's the one that, one of those steepest increases and decline sort of space that we've seen today.
Not for the faint-hearted. Do not try this at home. You can put out every disclaimer possible. Looking at this intraday chart, it just took me back to my school days when we used to have this saying called "Bakri chadi pahad par" and then dusri taraf se utar gayi, and it's almost reminiscent of that.
I don't know what school you went.
But that's the story of the index so far. 23,100 now remains the key level on the downside to defend. Take a short break. More on the markets on the other side. Stay tuned.
Maybe 4 quarters, it may not be the right place to be. But if you have a 3-year, 5-year, or 10-year view on this whole digitization opportunity, we have to use these weaknesses to essentially continue to buy and load up on the space.
I think we committed a few years ago that we would invest 200, 250 million. We have made that investment. You are seeing the products, you're seeing the growth. there are more products this year, and with that we'll share more capex plans as well. We're a global company, we cater to so many markets, and we will further that in EVs as well. We have launched iQube in some markets outside India. The electric scooter for BMW is designed, developed by us, and is selling in European markets.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
And we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to
Back with us here on Halftime Report, 200 points down on the index. At least now that hasn't changed in the 5 minutes that we took a break on. Still at 23,150 is the Nifty. Some casualties apart from Dixon Technologies in the broader markets is Nugent Software, and that reported results yesterday during market hours, and that stock is down 17.5% in today's trading session. So a big drop there coming in for Nugent Software at the lowest point of the day at 1300 now is Nugent Software. What is also extending its losses in today's session is Oberoi Realty. And we mentioned about the fact that these two real estate names that reported results are moving in opposite directions. Oberoi Realty is on the downside, 7.5%, almost 8% down now on the stock. But on the flip side, what's doing well is Suntec Realty, and that stock at one point was up almost 5 to 6%. At one point it even gained 9%, still off the highs of the day, holding on to gains of around about 2.5%. Paytm has recovered slightly from the lows of the day, still trading with losses of around 5%, but at one point had declined almost 7 to 8% post its results that were reported in yesterday's trading session. So 5.5% lower on Paytm. And Vodafone Idea, after yesterday's 8% surge in yesterday's trading session on the AGR matters and a lot of other issues, is also seeing some bit of profit booking, if there was some, in yesterday's trading session. So 5% lower there on Vodafone Idea as well.
You know, I'm just looking at Kalyan Jewellers once again. It's down 6% now, fallen below the 500 mark as well. Remember, on Friday it fell below the mark at which the promoters bought, and at the stake at which the promoters stake was, the price at which the promoters stake was pledged. And yesterday we got a notification on the exchanges that promoters have had to, by virtue of the big decline in price, increase the pledged stake by a few crore shares thereafter as well, over and above what has already been pledged. So the stock has now seen further pressure, now below the 500 mark as well. And from here on, every incremental sell-off that we see on Kalyan Jewellers, the promoters will have to shell out some more stake in increasing their pledge as well, or supporting the pledge which is there as well. So then this becomes a bit of a spiral. So we'll have to watch out for how this pans out. The earlier the company comes out of it, the better it is, because we've seen a lot of companies where a lot of pledge keeps getting accumulated with a decline in share prices, then everyone's hands are tied. So the sooner the company goes ahead and, revokes the pledge on that or arranges funds to do that, is the time when we'll probably see some sort of improvement here itself. Let's move on. Let's go across back to Davos. Shireen is with us from, the World Economic Forum in Davos, where she's joined by K. Krithivasan, the CEO and MD at TCS. Shireen, take it over.
Our conversations continue here in Davos, and it's a flurry of tech companies that you're watching here on CNBC-TV18. You just heard from Tech Mahindra's Mohit Joshi on why he believes that 26 could be a year where the IT industry could see, in his words, explosive growth. Well, joining me now to talk about the outlook, not for the next quarter, because you've heard that being done threadbare on the channel, is K. Krithivasan of TCS. Krithi, thank you so much for joining us here on a very cold and early morning in Davos. If only AI could fix this.
Absolutely, absolutely, it will be fantastic.
So Krithi, as I said, to the last decimal point, your numbers have been discussed over the performance for the quarter. But let me ask you a more big picture question. Sure. When we last spoke here, Krithi, you had said that your effort was going to be to bring the engineering culture back at TCS. A year and a half on, do you believe that the engineering culture is back?
See, we have made a lot of progress. It's not that, as I explained last year also, it's not that we had lost it, but we wanted to re-emphasize the engineering culture. And it also fits in very well with the way world is going towards generative AI. And we have made more than 500,000 people trained on generative AI. We have made investments in tools like Wisdom Next. So I believe that we are moving in the right direction.
Moving in the right direction. Since you talked about AI, and your slogan here in Davos on your lounge says TCS, the perpetually adaptive enterprise. Explain to us what that means in terms of strategy.
First, let me explain what we mean by that. Like for us, there is so much of change happening in the world, be it in the climate, geopolitics, new technology coming in, supply chain disruption. And we believe any organization to be successful, they need to adapt continuously. And they have to adapt in terms of what they sell in the market, how they train their workforce, and how they interact with that supply chain. And within TCS, our approach towards this is coming up with newer solutions, newer offerings to our customers, continuously looking at what our customers need. And equally important is continuously training our workforce, because we believe with generative AI becoming more and more mainstream, the role of a programmer will continuously shift. If today we have 100 programmers doing a set of activity, maybe we will not need 100 programmers, but we will need more people that will be training the models, somebody orchestrating all the models to deliver the value for the activity. So there is a lot of training going on.
Right. No, so when you say that you won't need 100 programmers, I'm asking you this in the context of the absolute numbers. You may not need 100 programmers, but do you see the headcount changing dramatically?
That we've been saying again and again. Yeah. Like our belief on this technology, like the previous waves of technology changes, is the number of people that we need will not come down. But what these people will do will change. That's where the adaptive enterprise come into place. People have to learn new skills, develop new capabilities in terms of how do you work with these generative AI models, and deliver the end-to-end solution to a customer.
So it'll be more from the same. That is the expectation?
It's definitely more from the same. Maybe even our going in belief is we'll end up having more people than what we have. More people actually. Okay. Because the quantum of work that will be delivered will be much more than what is being delivered.
More people over what time? What does that mean in terms of hiring?
I don't want to put a timeline to it, because it's over a period of time, but I don't think we are fearing the reduction in amount of people required to do that. Like we are gearing up to have more people do the work.
gearing up to have more people. That's an important headline coming in here from K. Krithivasan of TCS. More people, not less, in an AI world, in an AI era. Krithi, you know, what surprised many people was the fact that you actually called out 25 to be a better year than 24, which is not usually the case as far as TCS is concerned, given that you don't hold out any guidance. What gives you confidence to say that the year ahead is likely to be better?
The most important thing is the conversations that we are having with our customers. And the second, as we talked about, is our order book and the pipeline. And all of them put together, collectively, we believe that there is a sense of optimism slowly coming back to our customers. And we also saw a couple of things like some of the discretionary programs are getting kicked off. And most importantly, in some of the discretionary program, the time taken to decide, the deal cycle also reduced. So all of them collectively give us a feeling that this could be 25. So 25 could be a better year than I'm sorry.
Than 24.
CY25 will be a better year.
I wonder if you were up at night watching President Trump and what he had to say, but what's the outlook on what that could mean, especially on the part of the measures for deregulation, which of course are yet to be specified, but what could that potentially mean, especially for the financial sector, because there is talk about specific deregulation there too? There is
definitely a lot of optimism in the financial service sector, because regulation takes away a lot of the management bandwidth, and also certain amount of allocation of funds towards new programs. So be it the financial services sector, maybe sometime later even in the healthcare sector, we believe that it could actually spin off new interesting discretionary programs that they've not been able to do before. So it's net positive. Like most of the banks that I've been talking to, they are very optimistic on the things to come.
So banks are optimistic on what deregulation could mean, and healthcare as well?
Healthcare had to wait and watch, more cautious. We had to wait and watch because we don't know what they are going to do, but the general atmosphere of deregulation is being seen very positive.
And you believe that could have a spin-off impact as far as discretionary spends are concerned?
That will definitely have an impact. Positive impact.
Let's continue to talk about AI, and you were talking about the capacity and capability building within TCS. And you know, I was having a conversation with Frank D'Souza, formerly of Cognizant here in Davos, and his belief was that Indian IT services is at an inflection point or in a transition period where it will have to be much more IP driven. Now, in a man-hours business, so to speak, as somebody commented on that interview, what role does IP really play?
It does. See, like it has a very important role to play. Like for instance, but only thing is, like, IP should not be classified only as someone having a new LLM or a new product. Like for instance, in TCS, if you take, we continuously apply for patents. Okay, and these patents are leveraged to develop our products and services. But we there is time. I think it's also a question of time, Shirin. Like we have over a period of last 20 years, we have developed the capability. You find many new startups coming up with new IP, new apps. I think it's an important thing to focus on, and every organization is focused on developing IP. So see, IP, the value it gives is it breaks that linearity, right? Like without IP, pure services, there is a certain amount of linearity between how many people you put and what is the overall.
So will that be a focus area for you over the next few years? Is that what
that will be one of the focus areas. Like, I'm not saying we'll be focused only on IP. We'll be continuing to create IP, but that will be one of the key focus areas. Definitely.
So, you know, as part of this transition that everyone's talking about, what do you see as being the key changes to the model, to the operating model per se?
In terms of AI coming in?
AI coming in, you know, the world changing, so to speak, and more fierce, intense competition.
No, like I don't see a major model change. The change would happen in terms of, as I said, how do you train the people, what do you train them on, and how do you recruit them, what capabilities you look for. Those are the areas I think major change happening. Otherwise, the broad model, I don't expect an immediate change at this time.
So what have been the efficiency gains for TCS on account of what you've been able to do with generative AI so far?
See, we have seen a large number of, from a software engineering perspective, we have done number of POCs, we have done number of experimentations, Our experience is between 5 to 25%, depending on the kind of technology they employ, kind of maturity the organization has. Between 5 to 25% is what we have seen.
But is it now moving from experimentation to scale?
It is moving from experimentation to scale. And we are also developing our own platform. For instance, we created a platform called Wisdom Next. Wisdom Next helps our customers to evaluate multiple LLMs under different contexts and decide which LLM they should be using for a particular kind of query they may have, and also let them choose what is the budget they want to spend, because this is not going to come free. We are going to pay for the number of tokens you use, right? So it lets them choose which is the most economic or the optimal LLM to use for a different context. So it helps the organizations do that. So you would see a lot of value from it.
So, you know, if I were to ask you about the possibility and the doability of achieving double-digit growth rates as far as industry is concerned, and I know you've been asked this previously as well, but
we continue to stay like it's definitely an aspiration for us. We don't believe that it's an improbable number. We believe it's definitely possible.
By when?
I don't want to put a timeline, but we constantly aspire for this. So if you ask me,
is it within reach?
It is. Like, see, look at the other way. Like when we took over, I took over. Like or for many years we've been talking about a margin side. We keep saying 26 to 28. In Q4 of last year, we did achieve 26. Again, we slipped. But it is something that's possible within our grasp. Similarly, a double-digit growth, I don't think is improbable. That can be achieved.
Can be achieved and within reach. Deals and the deal pipeline, and you know, what you make of the visibility that you currently have, and also, you know, the impact, for instance, of the BSNL deal, because that has been something that has caused a bit of consternation.
Like it's something we knew, right? Like the BSNL deal, like we have completed about 70% of the work. We are really proud of what's happened, and we will be completing it on time, and which means that that revenue stream has to be replaced with something else, and we will continue to look for opportunities to replace it with some other revenue stream.
But how confident do you feel about being able to offset that loss with a new revenue stream?
As I said, like, I'm confident. That's the reason I said this year
it's going to be better.
Going to be better. We are quite confident.
So, Kriti, it's been a year and a half of you steering TCS through a difficult period and a period of great degree of uncertainty. What, to your mind, have been the big learnings, and more importantly, given the opportunities that you foresee, any changes in 25 that you intend to make?
You see, there'll be always some small changes we continue to make. We learned in terms of, we've initially created, we restructured the business groups, brought in more vertical focus, and that's been working well. And we created this AI.cloud unit. It's been working well, but we believe that cloud per se has a lot of headroom to grow. So we probably will put more focus on the cloud unit. So we continue to make small changes. And some focus areas like cyber security has been an important focus area. We believe that we have not really achieved the growth that we need to achieve. So that would be another focus area. So I would say there will be more small tweaks than big change that you should expect in next year.
In the next year. So the headline for 25?
Growth.
Growth and better growth than 24. That's K. Krithivasan of TCS taking us through the outlook for the year ahead, also concurring that 25 will be better, reiterating that quite firmly. Double-digit growth, not impossible or improbable, within reach. Small tweaks, not big changes, but the big story really coming in is that they believe that they will need to hire more, not less, in an AI-driven world. Kriti, always a pleasure. Many thanks for joining us. We'll take a break. There's plenty more coming up. Don't go anywhere. We're back in a moment with more.
Theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country, sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens, while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government.
Markets near a day's low in a volatile session. Consumer durables and realty are the big drags, while the FMCG and healthcare see some bit of a green. Mid-caps underperform. Zomato slips as rising competition in quick commerce pushes back margin expansion and drives a faster network rollout. Swiggy too feels the heat. Dixon Technology slides on profit-taking after an inline quarter and with growth expected to taper. The MD tells CNBC-TV18 that FY25 revenue will top Rs 40,000 crores and margins will start rising after FY26. US President Donald Trump signs a flurry of executive orders after assuming office. He declares a national energy emergency, revokes the EV mandate, establishes DOGE and external revenue services, and pardons Capitol rioters. He also plans to impose tariffs of up to 25% on imports from Canada and Mexico. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. The markets today has been a very flip-floppy day, right? Look at the highs and the lows for the Nifty today. 23,111 was the lowest point and the highest point is somewhere around 23,426. So, we've seen the markets move from the green to the red and then again back to the green. Now trying to make a comeback, though it's still almost in the day's lowest point. Nifty as of now is 23,280 levels, 23,300 levels. Contributor-wise, what's actually dragging the market today? We have some bit of the private bank side. So look at ICICI Bank or the banking side, you could say. ICICI Bank, SBI is among the top drags coming in. And other than that, Reliance, obviously, Reliance a heavyweight. So if Reliance falls, that is also a bit of a pressure coming in on the Nifty 50. What's on the green side is some of this IT names. So you have Infosys that's managing to hold on to gains. Other than that, FMCGs, or you have ITC, which is managing to hold on to gains. And obviously, as of now, when you're looking at it, Nifty FMCG is the only sector that's managing to hold on to some bit of a green. At one point of time, all the sectors today were trading in the red. So yes, that's how the market is looking like. We have Nifty Bank, let's pull that up as well, because Nifty Bank is also clearly under pressure today, down 0.9% approximately in trade that we're watching out for. So underperforming in terms of the benchmark indices. Other than that, the Nifty Mid and the Small Cap too is underperforming the benchmark indices today. So Nifty Mid Cap down 1.4%, Small Cap also is down 1.5% in trade. Let's pull up the India VIX because that's going to be interesting to watch out for. As of now, it's 4% up in trade. We've seen that volatility through the day for the market. So let's keep an eye out on where that is going to be headed in the second half of the trading session. Individual stocks, I want to highlight some of them. You have hospital stocks, some of these names are in focus. Apollo Hospital had a note that came in from Kotak, so that is why it is in focus. And with that, we're seeing Global Health or Medanta as we know it, that is also in focus, holding on to some bit of a gain. Earnings movers, we have Dixon Tech, MCX, Overall Realty, Zomato, that are among some of these movers and drags actually coming in on the back of the earnings. But let's move on, and Dixon Tech shift focus to that because that stock, like I mentioned, is under pressure after its Q3 results have been reported. There are in-line set of numbers with estimates with 190% YOY growth in mobile segment. Earlier on, we spoke to Atul Lal, who's the managing director at Dixon Technologies, to understand the business outlook for the company in FY26. Listen in.
Smartphones is a lower margin business globally, and so is the case in India. And that is the reason, in our case, we are going to be deploying a lot of resources and capital in a backward integration play, in the components play, which is more margin accretive. So margin, we feel there is going to be in the range of around 4% in 26. Beyond 26, it should start inching up.
Moving on to the World Economic Forum, Shireen Bain caught up with the Deputy CEO and CFO at Ingka Group, which brings the popular furniture brand IKEA to India. He said that he wants to expand IKEA to other regions of the country, especially Delhi NCR region, and added that he wants India to be the major sourcing hub for the company. Listen in.
We are building, as we speak, two very big shopping centers, one in Gurugram and the other one in Noida. And this big shopping center will have an IKEA store. It's already under construction. It's an exciting project. And we will soon open online sales of IKEA in Delhi NCR as well. At the same time, we have offering online in Gujarat, in Telangana, in Andhra, in Karnataka, and we have opened for now 62 new cities for more online business. So, and then we are exploring and we are scouting for more opportunities to open more physical stores in these states and also in new states as well. We want to open more in Karnataka, we want to open more in Mumbai, in Maharashtra, we want to open in Tamil Nadu as well. So step by step we are expanding. And we are working now in the good discussion, good conversation with the government to try to have harmonized standards so we can produce more in India, so we can both use for domestic consumption, but we can export more from India. India only accounts for 1.5% of the global export of furnishing, not IKEA, in general, only 1.5%. And can we agree that India deserves much more than that?
Yes.
So it's a fantastic opportunity, and we are in good conversation with the government to really set up India as a sourcing hub as well.
Absolutely interesting chat there in terms of IKEA focusing on making India one of its important sourcing hubs. But let's move on, and now it's time for Growth Code, an initiative by Crow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. This week, pro trader Rajesh Bahithi, Managing Director at Cross Seas Capital Services, gave his insights on the new SEBI guidelines for algorithmic trading. Listen in.
So currently, there is no real regulation as such that debars anybody from trading in algorithms or using algorithmic trading. What is happening is there are two kinds of algorithmic trading strategies that are being deployed today. On the professional or prop side, as what we do, all of our algorithms are approved by the exchange. The trades are entered as algorithmic trades. There's an identifier in the order sequence that identifies the trade as an algorithm. What is happening with the discount brokerages is that they are giving and exposing their APIs, and anybody with access to that API can either write their own code, or there are some pre-authorized vendors who have already matched their trading strategies to these APIs, and they are farming it out to the retail public. And these trades typically don't get registered in terms of an order identified as an algo trade, but rather as a standard internet trade. And I think SEBI has a problem with that. They don't want the algo trades to be identified as standard internet-based trades. They want the algo trades to be identified as algo trades even for this retail segment who are currently coming in using the APIs exposed by the brokers. What SEBI wants to do is that if you want to run an algorithmic strategy and you want to write your own code, then you've got to get that thing certified with the exchange. The strategy has to be approved. And in case you are outsourcing it from certain vendors, those vendors will need to get registered as some kind of investment advisors.
Welcome back. The conversations continue here at Davos 2025. What's the mood on India? How are investors looking? Anish, always a pleasure. Many, many thanks for joining us here on CNBC-TV18. Let's start by talking about what the mood is like in your conversations with global CEOs. There seems to be optimism, especially in light of the fact that we have a new regime in the US. I don't know if you were watching what President Trump had to say overnight, but what are you picking up?
So good morning, Shireen. It's great to be here with you. Picking up a lot of optimism, actually, more than what I had expected. Optimism globally, which is something that we hadn't fully expected, and optimism for India, which is something that we've seen over time. Yeah. But what we are starting to see is a lot more focus on how do global companies win in India? What do they need to do differently? What are lessons from companies that have been in India in the past? Some have worked well, some have not. And that's a question I'm getting from a lot of global CEOs, which is tell us what it takes to win in India. Okay. And that's
so what have you told them?
What I've told them is that the Indian consumer is very discerning. The Indian consumer wants the highest quality at a very good price, and therefore you got to design products for India. It cannot be products that are designed somewhere else in the world and sent to India, because that's not something the Indian consumer generally appreciates, and we've seen that in many industries. It's also decision making and the agility that's required at times to create that value for customers in India.
And the need for local partners?
And in some cases, partners, yes. In not all cases, some companies have done very well without partners as well. But local partners help understand India. As long as the global company is willing to let the local partner make decisions. Question comes back to where are decisions made. If you're going to make decisions somewhere in the US or Europe for the India market, we haven't seen companies being as successful. And companies that leave the decision making in India have done well.
Well, you said that you were not expecting the kind of optimism that you're picking up on as far as the global economy is concerned. What are they telling you? Why are they optimistic? What are they feeling confident about?
They're optimistic that growth is coming back in some form, especially in the US, and that will have positive impact across the world. That obviously is counterbalanced by potential trade barriers that may come up. And there is also, in some sense, a clarity that multilateralism is going away. And it's going to be bilateral decisions or bilateral discussions with various countries. And that is a significant change. It is a path towards deglobalization as well. And I was expecting more of a narrative on deglobalization. But the positive aspect was that despite that narrative, there is optimism that the focus will be on the economy, the focus will be on growth.
The focus will be on growth. So let's talk about growth as far as Mahindra & Mahindra is concerned. As I pointed out, 2024 has been a good year for you. You've outperformed in many ways, including, of course, with your stock price. But firing on all cylinders at this point in time as you look into 2025 and the year ahead?
Thankfully, we are. Our businesses are doing very well. They're very well positioned. The actions that we've taken to ensure a very sharp focus on growth has played off. As you know, we started with disciplined capital allocation, then pivoted to growth, and now are focusing on delivering scale. And it's that scale-up aspect that is working well. And we are seeing large businesses do well. We are seeing Mahindra Finance and Techem on a good path to unlock full potential. And our growth gems are very well poised to do a lot more and deliver value for us.
I'll get to each of those businesses in a second, but the overall demand environment, what we have seen is a bit of softness creeping in, and that's been reflected in the numbers as well. What do you foresee? Does the softness persist? Are you seeing any signs of a turn?
So, Shireen, we are not concerned. These are blips. The fundamentals in the economy are still very strong. There were a lot of concerns a year or two ago on rural and the fact that rural wasn't picking up. We'd seen tractor sales decline in a particular year as well. Rural's picked up very well now, and we see a number of green shoots there. We've seen double-digit growth in tractors in the last couple of months, and that augurs very well for the overall economy. So we will see at certain points in time sluggishness in certain parts, but that's how economies work. On balance, I think we are still in a very good shape. And I think India will continue to grow well.
So you're confident about the growth on the tractor side?
We are confident about the growth on the tractor side. We think we've come out of the down cycle on tractors. And for the second half, we have talked about seeing a double-digit growth in the second half for an overall reasonable growth for the year.
Okay, let's talk about your new electric vehicle launches, your Born Electric, both your cars that are out in the market now. What's the response been like? What is the kind of order inflow, order intake that you foresee, and what's the waiting period likely to be?
The response has been quite fabulous. Consumers have been, in many ways, if I were to use the term, blown away by the features in the vehicle.
And at the price.
And at the price. From the screens we have, a lot of consumers come back and compare it with luxury German or other vehicles and say that you're giving me everything and more at a significantly lower price. But more than the price, I think it's just the level of features. From the screens to automated parking to Dolby Atmos in a vehicle. Dolby Atmos doesn't even exist in many theaters around the country, but we have that in a vehicle here. And just a wide array of features that exist, I think, has been something that consumers did not see that coming in a vehicle. And that's what has really helped give that demand. We have not started bookings as yet. Though we have a large number of folks clamoring to be early buyers of the vehicle, and we will do our best to try and satisfy all our consumers.
In terms of capacity and being able to meet the demand that you foresee as far as the two EVs are concerned, what's the outlook?
We have a capacity initially of 5,000 a month that will ramp up to 10,000 a month at some point in time. From an EV standpoint, we feel that's a very good start. We do want to get to a 30% penetration in the next 3 to 5 years, and we feel that we're pretty well on track to do that.
But, the concerns around the lack of charging infrastructure, residential charging and so on and so forth, do you continue to see those as being constraints to the kind of penetration numbers and targets that you just spoke of?
There may be constraints in the short run, but for the most part that should not be an issue, because the vehicles we have a certified range of 682 and 656 kilometers and a real life 500 plus across multiple cities that we've tested it in. And therefore consumers will typically need to charge once a week. So if you have charging at home or an office and can charge there once a week, that should be enough for most. That has to be supplemented with charging on highways. And this is an area where the government is doing a lot to try and outline what's required for that. The Ministry of Heavy Industries in particular has been putting a lot of focus, mapping routes, mapping highways, understanding where we need to put charge points. So my sense is over the next year we will start seeing all of those things come in place as well. And with a combination of charging at home or office through a standard charger and charging on highways with a fast charger where we can actually charge in 20 minutes, we should be behind all the problems or the concerns that are there on charging.
There are reports suggesting at this point in time that the government may review its policy to get manufacturers to actually make in India, especially as far as the EV side is concerned. And now, you have Elon Musk quite literally in the White House. What's the expectation in terms of possible changes? Are you hearing anything on that front?
We're not hearing any possible changes, but our stance has always been that we welcome competition. We feel that we will get better with competition. We have over many years, and from an electric vehicle standpoint, it will help grow the market as well. So the part that what we've seen the government always focus on is Make in India, because Make in India is essential. We have the ability today to make world-class vehicles. What we've done with our two vehicles is a testament to that. These are designed in India. The technology comes from India. Our Research Valley has really set them up. And that's something that we are starting to see as world-class products being made in India and being made for the world now. So that is in line with the vision that the Prime Minister has laid out on Vikasit Bharat and on India being a manufacturing hub for the world.
In terms of capex, and given all the businesses that you operate in at this point in time, as well as what you see demand looking like, 25, what could we expect as far as the capex number is concerned?
So we have laid out capex for 3 years. We're pretty much on track with that. Businesses are generating a fair amount of cash, so we stand very comfortable from that perspective, and that allows us the ability to really take bigger and bolder bets with some of our businesses to drive growth. And that's what we've done with EVs. That's what we're looking at with our farm business and with many of our growth gems.
So what could these bigger, bolder bets entail as far as the growth gems are concerned, and even for the farm business that you just spoke of? What should we expect?
So the first thing I want to say there is bigger, bolder doesn't always mean acquisitions.
Right.
Bigger, bolder also is about organic growth, because organic growth is one of the best drivers. And if you look at the EPS growth that we've had as a group consolidated from 21 to 24, it's north of 60% every year. I'm not suggesting we will continue that growth rate, but we've signed up for a 15 to 20% annual growth rate going forward. So organic growth is a very important part, and there, what I mean by being bolder is having the ambition to think big and say, here's what we want to do. Here's the kind of product we want to create. This is a customer segment and the service we want to offer to the customers. So it's that mindset where we are open to taking those bigger bets. We are open to signing up for higher targets. And that has been one of the secrets of our success, to be able to create a much higher bar and say, we will deliver something that we did not expect.
So across each of your businesses, over the next 12 months, how much higher are you willing to set the bar?
The bar has been set very high already. So at this point, it is about implementing to meet that. On EVs, you've seen the results of that. Not just EVs, even the products that our auto business has launched, both in SUVs as well as in light commercial vehicles, have been of a very, very high quality. And we've seen that response from customers. The farm business with its new line of products in OJA and its focus on international is starting to do extremely well. We've gained market share from 40 to 44%. And when you're in the 40s, it's not easy to gain market share at that level. Our electric three-wheeler business has a market share of 45%, competing with some large players out there, and continues to do very well. As we look at each of our growth gems, we've got a fairly ambitious plan laid out for them in terms of capitalizing on the strengths that lie in the business. We're well positioned in many markets, but in many we are playing in a smaller segment of the market, and we want to actually grow much bigger. So that's the pathway we've outlined. Along the way, if there are acquisitions or joint ventures that make sense, we will do that, but we'll be disciplined in doing that. We're not going to go out and pay some crazy valuations just for growth, because we can grow organically very well.
So what would be the headline for 2025 for the group?
Stay on course.
Stay on course. Anisha, always a pleasure. Many thanks for joining us here on CNBC-TV18, and we wish you the very best of luck. That's the message. It's been a good 2024, and 2025 will be a year that the group continues to stay on course, in his words. And there's a lot that is there to look forward to, including the big, bold bets that are expected to be made across each of their businesses, including the growth gems. We will take a break here, but the conversations will continue on Davos 2025. Don't go anywhere. We're back in a moment with more.
Unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane that took place many months ago. Or more recently, Los Angeles, where we are watching fires still tragically burn. From weeks ago, without even a token of defense, they're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any country anywhere in the world. And we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting today, and it will change very quickly. My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Welcome back to Business Lunch on CNBC-TV18. And now Donald Trump has been sworn in for a second term as the President of the United States. Immediately unveiling several executive actions, he declared that America was entering a golden age. Trump returned to the White House with strongman image, aiming to reshape U.S. policies on immigration, tariffs and energy. He promised an all-powered presidency and listed immediate actions like declaring a national emergency at the U.S.-Mexico border and renaming the Gulf of Mexico as Gulf of America. And with that, we're absolutely out of time on this edition of Business Lunch on CNBC-TV18. Thank you so much for tuning in. Up next, you'll have more news and updates coming in.
Republicans are actually becoming the mainstream party. And which is unheard of, especially, I shouldn't say this for a Republican. The Republicans are actually becoming the mainstream party. And
global growth, what's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to you? The conversations continue here in Davos 2025. As I've been telling you, there is a large Indian delegation here, not just the central government, but also states. And in fact, one of the states that has been making its presence felt here in Davos is the state of Tamil Nadu. Joining us now to talk about what Davos 2025 looks like is the Industry and Commerce Minister, TRB Raja. Always a pleasure. Many thanks for joining us here on CNBC-TV18. You know, let's start by talking about what's new this time around. It's an all-in-one approach that India has decided to take, putting the Indian central government and its states under one roof, and you're sharing space with Maharashtra.
Yeah, I mean, after all, we are the double engine that's actually running this amazing country. So, yeah, I mean, it was a lovely gesture. We're trying to put in a united front. I think that's how it needs to be when India goes out to the world talking about manufacturing, its prowess in industries. So I think that's a nice thing. It's a good start. We've had very good interest for Tamil Nadu as well, especially from other countries, especially the Middle East and the European countries. Loads of good meetings lined up. So yeah, that was a good start, and we're hoping the union would help us find more investments in it.
It would help you find more investments. We'll have to wait to see. But I don't know if you can notice there's a little pin right there. That is the Tamil Nadu campaign. Bullish on Tamil Nadu.
Absolutely. Yeah, bullish in Tamil Nadu. Join the bull run, we're saying. We are on a massive bull run. Tamil Nadu has been doing amazingly well over the last 2-3 years now, after our Chief Minister, Honorable M.K. Stalin took over. The Dravidian model of growth is what we keep talking about, and it's seen amazing results in Tamil Nadu. Tamil Nadu has been, we've got over 10 lakh crores worth of investment in just the last 3 years. And not just MOUs, these MOUs are also being translated into jobs for Tamil Nadu. So I keep saying this, my Chief Minister, he doesn't look at the investment numbers when it comes to just the crores of amount of rupees that's being invested into Tamil Nadu. He looks at the jobs that are coming out of those investments, and that's what we're really proud of.
So let me ask you, you know, in terms of the commitments that were made when you held your investor meeting, which was at the start of the year, over 6 lakh crores, if I remember correctly, in terms
664,
of
180.
So what will that eventually translate into? How much of that is already operational, and what does it mean in terms of job creation?
Okay, I was just going to do this at the next assembly, but now that you've asked me,
you can give us a preview of what you're going to say.
So when that happened, and that global investors meet happened, there were so many naysayers. They said these are just frivolous MOUs and these are not going to turn into investments. But people started noticing the next month onwards, we started breaking ground for investments that were signed on that global investors meet on the 7th and 8th of January 2024. Now, after a year, there were so many of them who said only 20-30% of these MOUs are become jobs all over India, and that's the norm, right? But I promised them at least 50%. I said we will push for 60, but I will only be happy if it goes above 70.
Okay.
Now, I can tell you very clearly with facts. I've got photographic evidence. I don't even trust my team. So I've asked them to send me photographic evidence of groundbreaking, of foundation work starting. So I can say we've already crossed 65% of those MOUs. And I'm very, in my heart, I can see that I'm going to push the 75 limit also.
Push the 75 limit and achieve that by in 2025?
The conversion, when you talk about investments coming in, the MOUs are for over 5 years, right? So it doesn't happen overnight.
Right.
So I'm saying these are, once you lay a foundation, that means the factory is going to come up and it's confirmed, that the jobs are confirmed, right? So that's the way we're going. And looking at that, I'm sure that we're going to breach that 70% mark very soon. And I do see I do see 80 also possible on the horizon. Yeah.
Okay, so you're setting a target right here on CNBC-TV18 of what you hope to achieve. But let's talk about FDI, and that's the reason why you're here in Davos, is to try and bring more FDI into India, to try and bring more FDI into the state of Tamil Nadu. You have seen, of course, a year-on-year increase as far as FDI is concerned. What's the hope? What are you targeting on FDI?
FDI is actually not a really good way of matters when it comes to investments. See, it's skewed towards HQs of companies. Tamil Nadu is a manufacturing state. We have the industries there, but all the headquarters are either in Noida or in Mumbai, right? Closer to Delhi or to the financial capital in Mumbai. So we really don't look at the FTI numbers as ideal markers of growth. That said, Tamil Nadu has been coming to Davos with a lot of interest in gaining new connects, right? Davos is not a place where you sign MOUs. We don't feel that way. Tamil Nadu does not feel that way, and Tamil Nadu has never signed MOUs in a big way in Davos. Even last year I told you about this. We don't believe that you can sign an MOU with somebody you've just met 3-4 years. This is a place where leads get started, right? For instance, last year I met somebody in the textile raw material space here. Now that's going to get converted in the next few weeks in Tamil Nadu. So it takes a year for us to go. For actual investments, this is how things are. If you want to just create a massive painting of MOUs done, go ahead, that's your ballgame, but that's not what Tamil Nadu does. We are serious players. I keep saying this every now and then. We want to go the Japanese way. When a Japanese investor signs an MOU, that means he's already worked on it for about 2.5 years or so, you know, and before that the page is inked. So that is the way Tamil Nadu is going. We don't have to prove a point to anyone. We are the number one by a long margin. I told that with the CM on stage also yesterday. It's a good kind of
Maharashtra, you mean?
But I mean, they are ahead when it comes to the economy. But again, they have Mumbai, so I told them that too. But that's the kind of competition you need, right? States competing with each other to provide for India, and that's what I think India now is all about. It's from the states, of the states, by the states.
India lives in its states, and for India to prosper, India's states must prosper. That is very, very critical. But let's understand what you foresee in terms of future investments. You've seen new investments coming up, for instance, Cisco's new facility in Sri Perumbudur, among many others. What's the indication now as far as investments specifically in the manufacturing sector?
Well, Tamil Nadu has been building on its knowledge capital, right? So we are up there when it comes to talent. We are the talent capital of India. We roll out so many engineers and doctors and the number of PhDs that we roll out, it's unmatched. So we are going the R&D way. We are going the smart manufacturing way. The world is looking at smart manufacturing in a big way. AI is in. It's in. You cannot deny that. It's going to break a few jobs, but for me, I think it's going to make a lot of other jobs also, because of the talent that Tamil Nadu has, the talent which has been enabled by over 100 years of Dravidian model governance. This has given us that talent capital with which I think today's world will find Tamil Nadu as the #1 destination for investments in the AI space and smart manufacturing space. We are the manufacturing capital, so obviously we will see more investments coming in that way. And we are upscaling our talent, which are existing already, and also those youngsters coming out of college and schools now via skill development initiatives like the Non-Modalvan scheme, which the Deputy Chief Minister through Udayanidhi Stalin heads that. So you do know that when a Deputy Chief Minister is given that responsibility, you know that the Chief Minister looks at it at that level, and that has given us results. Every manufacturer, every investor who comes in now knows that the talent that he needs for his investment to prosper is available or will be made available by the government at their own expense, right? So that's where this government or this state is completely different.
What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. This is the first India pavilion, so to speak, India Bharat, and as I pointed out, this is the first time that we have India putting its states together, technically under two roofs. And what we've seen happen over the last several years is that states have come out here in Davos. So it's of course been the central government, but also increasingly the number of states being represented here in Davos has gone up quite significantly. It used to be Chandrababu Naidu. He was the original Davos man from a state's point of view, but now we've seen Maharashtra, Telangana, in fact even UP now here in Davos as well. Of course the Chief Minister is not going to be here, but we do have ministers from the UP government who will be here. So this is the first India House, so to speak, and this is going to be home to UP, Telangana and Kerala. So Telangana, Kerala and UP are going to be part of the India House together, and it's also going to be interesting because this is the federal story. This is the beauty of India's federal story, and it's also its strength, so showcasing its diversity and its unity here in Davos will be something to watch out for. With the next India Pavilion, India, which is going to be home to Andhra Pradesh. Remember, Chandrababu Naidu is going to be here. It is home to Tamil Nadu and Maharashtra. So 3 states, so total 6 states here in Davos, 3 in the house that we just saw, which was Telangana, UP and Kerala. And here we have Maharashtra, Tamil Nadu and Promenade and Andhra Pradesh. Devendra Fadnavis, the Chief Minister of Maharashtra, will also be here in Davos, as will Revant Reddy, the Chief Minister of Telangana. So 3 Chief Ministers will be here in Davos. Let me show you what we are saying to the world here. And of course all of this has been set up by Invest India. So let's take a look at the themes that India is going to be showcasing. We're going to go right inside. The themes that India is showcasing: the Indian semiconductor market is set to triple by 2032. So semiconductors will be part of the story that India is pitching, from silicon to success. And again, we've got Semicon, the mission that the government has announced. We've already started to see investments coming in there. So semiconductors, electric mobility, EVs to account for over 40% of India's automotive market. EVs will be the other big theme that will be discussed here as part of the India story. So this is India, the roadmap to a $32 trillion GDP by 2047. India's economic overview, so some data and numbers and statistics here being highlighted here at the India Pavilion.
Well, you're still tuned into Mid-Cap Radar. As you can see, most of the indices continue to trade with a negative bias. The Nifty, that saw a brief intraday recovery around 11:45 a.m., once again gave up all of its gains, now again trending near the day's lowest point. What's doing well in what is otherwise a very weak market is a few FMCG names. So names like HUL, names like Marico, names like Colgate-Palmolive. These are some of the stocks that are actually managing to hold their head above the flat line, at least in today's trading session. But it's now time for the Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. This week, pro trader Rajesh Baheti, Managing Director Crossiers Capital Services, gave us insights on the new SEBI guidelines for algorithmic trading.
So currently, there is no real regulation as such that debars anybody from trading in algorithms or using algorithmic trading. What is happening is there are 2 kinds of algorithmic trading strategies that are being deployed today. On the professional or prop side, algorithmic trades, there's an identifier in the order sequence that identifies the trade as an algorithm. What is happening with the discount brokerages is that they are giving and exposing their APIs, and anybody with access to that API can either write their own code, or there are some pre-authorized vendors who have already matched their trading strategies to these APIs, and they are farming it out to the retail public. And these trades typically don't get registered in terms of an order identified as an algo trade, but rather as a standard internet trade. And I think SEBI has a problem with that. They don't want the algo trades to be identified as standard internet-based trades. They want the algo trades to be identified as algo trades even for this retail segment who are currently coming in using the APIs exposed by the brokers. What SEBI wants to do is that if you want to run an algorithmic strategy and you want to write your own code, then you've got to get that thing certified with the exchange. The strategy has to be approved. And in case you are outsourcing it from certain vendors, those vendors will need to get registered as some kind of investment advisors.
Good morning. How are you? Good morning. How are you? Are you enjoying your time in Davos?
Yes, we are going to work.
And what are you looking forward to the most?
Meet everyone and for the betterment of the economic.
For the betterment of the economy.
Of the world.
So what?
You come from India?
Yes, from India. Where are you from?
Punjab, India.
Punjab, India. आप कहाँ से? पंजाब में कहाँ से?
पंजाब से मैं वैसे तो हरियाणा से हूँ, अम्बाला से.
अच्छा, तो आप यहाँ पे कैसे आए?
वैसे घूमते फिरते आ गए.
घूमते फिरते आ गए. बड़ी लंबी घूमते फिरते आ गए आप. तो कब आए आप यहाँ पे?
में रहता हूँ.
आप ज्यूरिख में रहते हैं. अच्छा.
20 years living here.
और तो आप ये डावोस में वर्ल्ड इकोनॉमिक फोरम के लिए पहली बार ही आ रहे हैं कि?
नहीं, हम तीसरी बार आ रहे हैं.
तीसरी बार ही आ रहे हैं.
हमारी एक रेस्टोरेंट है खान्स तारा के नाम से.
जी.
तारा रेस्टोरेंट इंडियन.
हाँ.
तो उसकी कैटरिंग करते हैं हम.
अच्छा, तो क्या खिला रहे हैं आज आप डावोस में? क्या है मेन्यू पे, क्या है?
आप आए?
Well, that's lovely.
ये हमारे शेफ हैं जी दोनों.
नमस्ते जी. बहुत आपको शुभकामनाएं. आप कुकिंग करने वाले हैं और काफी लोगों को खाना खिलाने वाले हैं. तो
हम लोग
शुरू हो गए. तो
आपको काफी फॉलो करता था मैं. लास्ट ईयर का गीता गोपीनाथ का इंटरव्यू पढ़ा.
थैंक यू जी. थैंक यू सो मच. इट्स वेरी नाइस टू हियर दैट यू वाचिंग CNBC TV18.
कभी इंटरेस्टिंग होता है.
Welcome back. And the index is still 110 points lower, but a stock that is been making headlines since the morning is Newgen Software, and that is down almost 15%. At one point was down 18%, and that is our mid-cap spotlight for the afternoon, and Rima is here to shed more light on Newgen Software. Rima.
So Nugent is under pressure because of the Jefferies downgrade. Jefferies has downgraded Nugent to an underperform with a target price of $12.40. Q3 revenues and margins were a miss for Nugent. They say the key reason for the miss is continued moderation in their annuity revenues, which basically gives you a lot of predictability. And the annuity revenue growth was just about 9%, and that was the key negative surprise. And the management said that this is on account of the larger deals having longer implementation cycle. Also, if you juxtapose the weak Q3 numbers, versus the kind of rally we've seen in the stock. They say the stock has delivered a 17% return in the last 3 months, 93% return in the last 12 months, despite the growth outlook moderating. And therefore, when the stock is trading at 55 times FY26 PE, the risk reward is unfavorable.
Risk reward is unfavorable. There's a significant run up as well in Nugent Software. Rima, thanks a lot for that. Now, this drop that the stock has seen, now it's almost a 30% drop from its peak, which was around 1794, is Nugent Software. So that is the top loser within the broader markets. Now, by the way, Dixon has seen a marginal recovery from the lows of the day. At one point was down almost 13.75%, down 12.5%, still down a significant chunk in today's trading session. Of course, there is Goldman Sachs that is seeing price targets of even down to 10,000 rupees on the stock. So 12.5% down on Dixon. Manglam also mentioned a few minutes earlier that the stock might enter the F&O ban today. So we'll keep an eye out on Dixon Technologies. What is also not doing well, though, are some of the other ERMS peers as well. Keynes Technologies is one of those names as well. But let's now go across to Davos again at the World Economic Forum, where Shireen is in conversation with Geeta Gopinath, the first Deputy Managing Director at the IMF.
Welcome back. We continue our conversations here at Davos 2025. As I've been saying, this is proving to be a Trump Davos. All eyes were on what President Trump had to say in his inaugural speech yesterday, and what the impact and the implications are likely to be for the world economy. Joining us now is the IMF's Geeta Gopinath. Geeta, it's always a pleasure. Thanks very much for joining us here in Davos. Were you up watching the speech last night?
Hi, Shireen. Yes, I was up for quite a while, but I have several colleagues of mine who are also following it from Washington, D.C., so we got the whole coverage.
But so far along expected lines, and somewhat vague still on tariffs and how those are going to play out, especially when we talk about China.
Yes, I mean, and President Trump said he would hit the ground running on day one, and that's what he has done. And he has made several announcements, some very specific on immigration and on energy. On tariffs, again, there is intention, but we still have to wait for the details. So I think, again, it's too early to come up with an assessment of what these policies will mean.
Yeah, I would imagine we will need to wait for the details to understand the implications and the impact. But Geeta, let's talk about global growth. And you put out the IMF put out its World Economic Outlook just before Davos, 3.3 for 2025 as well as 2026. And of course, this is below the historical average that we've seen through the 2000s. Do you believe that the downside risks to that projection are higher today on the back of what we are hearing from the Trump administration?
If we look at the very near term, I would say that there are both upside risks and downside risks, but they apply differently for different countries. So in the case of the US, there is a lot of positive sentiment. There is a lot of anticipation of deregulation, including also on making the tax cuts permanent. So that could give a positive boost to the U.S. economy, keeping the other policies, even if the other policies are implemented on immigration and on trade. So we could see a near-term upside risk to the U.S. economy. But for most other countries in the world, the developments on the trade front, on the policy uncertainty that's there, the higher borrowing costs that we now have, especially at the 10-year end, because the U.S. economy is as strong as it is and inflation remains something that they have to watch very carefully. The strong dollar, all of that puts more downside risks on many other countries in the world.
Let's focus a little bit on the U.S. and what you expect there in terms of both the tax cuts as well as the tariffs and the impact of those. Do you expect the Fed to be able to cut rates in 2025? Because, the expectation was that perhaps one, but now we're starting to hear maybe none. What's your own take on what's likely?
The U.S. economy is strong. The U.S. labor market is stronger than we thought it would be at this time a couple of months ago. So the indicators point to an economy that, even given where interest rates are now, is able to hum along. And therefore, I can see that the Fed will be cautious about any further rate cuts, and they're going to track the data and they're going to follow the data. And also, the impact of all the new policies that are being announced will matter in terms of what the impact will be on inflation. So I think they are on a wait-and-see mode. There's the usual data-dependent approach. And yes, compared to last year, or even as, middle of last year and so on, where there were expectations of many more rate cuts, this year, I think, it's gone down to 1, and we'll see.
The dollar strength and what that means as far as emerging markets go and emerging market fund flows. We've seen a little bit of a change overnight on account of the expectation on tariffs and that not being sort of confirmed just yet. But how do you see the bond markets as well as the dollar strength impacting what happens to emerging market fund flows?
This is certainly, we're seeing movements in the bond market in terms of 10-year Treasury yields, more volatility than we had seen in that decade after the GFC and before the pandemic. And a couple of things have changed. One, we are no longer in the world of a global savings glut. There is a lot of public sector debt on the market, and the US public sector debt is also quite sizable, and that is feeding into some of the long-term yields going up, including that right now. I think inflation expectations also are putting some pressure on the long-term rate. So that this space that we're in now, with the expectation that interest rates may stay higher for longer in the US, is certainly spilling over to the rest of the world. I mean, an interesting fact is that usually in previous cutting cycles, when the Fed cut rates, rates fall across the whole yield curve. But this time we've had, since September, about 100 basis points of rate cuts, and we've had 100 basis points of increases in the 10-year Treasury. That is not typical. And so this is a different time, and it is a reflection of the fiscal stance, it's a reflection of inflation expectations and what it will take to make sure inflation stays close to target.
The possibility of deregulation across different sectors, that is what President Trump has promised, and the expectation the banking sector also has, the financial sector has, for deregulation as well, to do with capital requirements and perhaps more. A conversation that I was having with Kenneth Rogoff here yesterday, and that's one of his concerns, that this could perhaps be an undoing. How do you see what is being promised or what is being speculated on as far as deregulation for the financial sector and what that could potentially mean?
Here again, I think we wait to see what the details are. There is something like an optimal level of regulation that's important to balance the risks that can come from a lot of credit in the economy versus the benefits of it. There is a sense in which there may have been a bit of overregulation, and that needs to be pulled back. But at the same time, one of the reasons why we didn't have any kind of a financial crisis, despite having a major pandemic and a big energy price boom and cost of living crisis and so on, is because of the reforms that were put in place to keep the banking sector safe. And so regulation is absolutely important. There has to be the right balance for it, and we have to see what exactly this administration will do.
Cryptocurrency and the way that we've seen President Trump back cryptocurrencies, as well as the move that we've seen in the Trump meme coin. What do you make of it, Geeta?
Yeah, so, I mean, firstly, we don't comment on any commercial products that are out there. But, I mean, I can talk more generally about how we see crypto. Again, it is, again, one of those areas where there are risks and opportunities. In terms of the opportunity, there are several companies that are using the technology that underlies it, in terms of the distributed ledger technology, to improve their payment systems and to improve the security and so on. So there's a technology that has benefits for it. But it is important for countries to have the right cyber policy framework to make sure that consumers are well protected, that you're not building up financial risks and financial stability risks, and you have to get that balance right. That is important.
Do you see that this is perhaps the start of building up those kinds of risks?
Again, it depends upon who is putting their money in these markets. We have many kinds of asset classes where there's a lot of speculation that goes on, and animal spirits and so on. So, so it depends upon who's going to affect it if you do have corrections in these markets. And usually it takes a lot to have a systemic financial stability effect, to have corporate, you need to have the banking system either to have very large exposures or households to have very large exposures. It's still early days for any of that.
Absolutely. So that's not a key risk as far as from a systemic point of view.
As of now.
As of now, with that caveat on the table. But let's talk about India. The outlook that the IMF has put out pegs growth at 6.5%. Still one of the fastest growing large economies in the world. What do you like about India today? And in the context of what we will hopefully see in the budget, what would your expectation be?
So firstly, just to emphasize what you said, which is, I mean, India remains the fastest growing large economy of the world. We do expect to see growth to recover in the second half of this fiscal year, which is how we get to 6.5% growth. So for us, potential growth for the US, for India is 6.5%. To get to much higher levels of growth will require structural reforms on many fronts. Also, it will require continued public infrastructure investment, which the government has been doing a lot of, but you're going to require that at the central government level, but at this and the state government level, and to be able to execute on a timely basis, that's going to be quite important. There's also the more long-standing issues in terms of the ease with which you can start a business, the ease of doing business, the ability to buy and sell land, labor reforms. I mean, all of those are required. And lastly, you know, we're now in a world where companies are looking around for how to build their supply networks. And India is an attractive destination for them to do it. So this is an opportunity for India to be able to plug itself more firmly into global supply chains.
You know, from that perspective of being able to plug ourselves into the global supply chain, and that's a work in progress at this point in time. We're seeing different sectors do things differently. You know, what would the 2 or 3 recommendations be on what we should prioritize in terms of policy?
So firstly, again, infrastructure in terms of port infrastructure, road infrastructure, all of that transportation is extremely important to be able to plug into the global supply network. It's also important to have a much more confidence in terms of what the regulatory environment is going to be, what the tax environment is going to be. That's going to be critical too. And lastly, you know, tariffs will have to be lowered because if you want to be a major exporter, most exporters also import inputs from somewhere else in the world, and therefore having the right level of tariffs and India is, I would say, on the higher end. Bringing some of those tariffs down is going to be important to be a big player in the global supply chain.
You know, I also want to talk to you about what's happening in the currency markets, including, of course, what's happened with the rupee. And we are seeing moves across the world at this point in time. But from an India perspective, a depreciating rupee, you know, what will that mean, especially when we talk about our aspirations to be a manufacturing hub and so on and so forth?
So this is as you've said, this is a common phenomenon, right? We have the dollar that is strengthening relative to almost all currencies in the world, and India is one of those countries where the rupee has depreciated. So the question is, you know, what are the consequences of that? And now, usually the implications are, one, it has an effect on inflation, and the second is that it can be a problem for countries where you have a lot of foreign currency borrowing. In the case of India, thanks to its monetary policy framework, inflation expectations are well anchored. You know, there's a sound monetary policy that's taking place, so I'm less worried about that. And in terms of foreign currency exposures, much less, especially public debt. I mean, there's very little. And so those are not the direct concerns. But without a doubt, we see if you're a country that has a stronger macro framework, you're going to be much less hit with all these new developments. And so we're going to see currencies move around quite a bit. The more you can do in terms of building domestic strength through your domestic reforms, those will be great offsets for these kinds of pressures.
China, Geeta, before I let you go, you know, the expectation of more measures, more stimulus, what's your own take on what that could potentially mean?
So the China government is also, you know, moving very strongly in terms of both fiscal policies and monetary policies. And that's one of the reasons we've slightly upgraded growth for China for this year. But there are still some very big issues to deal with. One, for example, is in the property market. We have this problem of unfinished homes that households paid for, they haven't received. And that is negative sentiment for several households, and that's a problem, which is why we don't see much in terms of consumption, spending, recovering yet. That's something they need to invest in. Making sure there's less, you know, the resources are going to where the best opportunities are. Having a more market-driven investment will be important to raise productivity in China, which also is critically needed.
So the headline for 2025?
Headline for 2025 is, stable growth, but with a lot of divergence and a lot of uncertainty.
Stable growth with a lot of divergence and uncertainty. That is the world that we live in. And of course, a lot of this is going to be digested as the details are decoded and as we do actually get access to the details. But thanks very much, Geeta. It's always a pleasure. Appreciate you joining us here in Davos on CNBC-TV18. Look forward to seeing you in India through the course of the year. We will take a break, but the conversations continue. We're going to be back with you in a moment. Don't go anywhere. Right back with you.
नहीं बहुत अच्छा लगा आप लोगों से मिलके एंड वी विश यू ऑल द वेरी बेस्ट। बिल्कुल जी, इंडिया वालों को अब नमस्ते, सत श्री अकाल।
कुछ सक्सेस हो जाए,
जरूर होगी आपको बहुत सक्सेस मिले और बहुत शुभकामनाएं।
ऑलरेडी किया कि promenade is captured by the
Indians. Yes. हम पहुंच ही गए, आप बिल्कुल भारत के सामने, और आप लोग को भी डावोस के लिए बहुत शुभकामनाएं एंड थैंक यू। बिल्कुल खाएंगे जी, बिल्कुल खाएंगे। थैंक यू इंडिया की तरफ से, थैंक यू सो मच।
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos. From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21.
Welcome back to Mid-Cap Radar. Well, as you can see, markets continue to remain under pressure. The Nifty now down close to 0.5%. The Nifty Bank now down over 1%. So most of the gains that we saw as far as the Nifty Bank was concerned in yesterday's trading session actually has seen quite a bit of a cool off. The mid-cap and the small-cap indices continue to underperform the benchmark indices, both down over 1.5%. But moving on, President Donald Trump on Monday signed an executive order ending automatic birth citizenship for children of immigrants who are not citizens or lawful permanent residents. This endangers the status of millions of children born to H-1B visa holders, the majority of whom are Indians. However, the American Civil Liberties Union has immediately sued the Trump administration over this order. Lata joins in with more details.
Well, that's precisely what Trump's executive order says, that if you are born to a father who is not a permanent, resident, so like an NRI, a permanent, with a green card or a citizenship, and your mother is also on just a work visa, that is a temporary work visa or temporary visa or a tourist visa, then that child, which until now was recognized as a US citizen because it was born there, that is not good enough. Birth citizenship is no longer valid. Now, this automatic birth citizenship is actually granted by the constitutional 14th Amendment of the US Constitution. And let me read it. All persons born or naturalized in the United States and subject to the jurisdiction thereof are citizens of the United States and the states where they reside. So now what the immigration hardliners say is that under this constitutional amendment, a lot of pregnant women come in and have their babies in the US so that the child can become a citizen. They are called, very pejoratively, the word is called birth tourism or anchor baby. Now, the reason why that was passed was, it was post the American Civil War. In 1868, after the war, pre-war, the African-American citizens who were called, slaves or Negroes were not given citizenship, were denied citizenship in the Dred Scott case by the Supreme Court itself. That was overturned by this constitutional amendment, and they said anyone born in the United States shall be a citizen. Since then, this has held, and it is held even for other immigrants, not just for African-Americans, because of a case called Wong versus United States, that is Wong Kim Ark. Wong was a Chinese citizen. His parents had delivered the baby in the United States. The family went back to China, but when Wong came back, he was stopped. He went to court, and the court upheld that since he was born in the United States, he gets citizenship under the 14th Amendment. So the point is, what can the Trump executive order do? As we said, the American Union of Civil Liberties has already challenged it. It's possible that Trump could ask his federal immigration officers to deny citizenship to such cases. It will be challenged in court. It will be a lengthy case. So what is the other option? Amendment of the Constitution, removing the 14th Amendment. That's not easy. It requires 2/3 majority in both houses, Congress and Senate, and 3/4 of the states approving it, which looks like a long shot. So we will have to see whether this will be fought in a long and arduous manner in the courts.
Thank you so much, Lata, for joining us, giving us a sense of what exactly lies ahead as far as H-1B visa holders and their children are concerned in the latest Trump administration. Let's now slip into a short break. We'll get you on the markets and stock-specific action on the other side. Stay tuned.
Years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV 18 and CNBC-TV18.com. CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
We own a bunch of these platform companies. We really have been in this space now for a while, and we continue to like it. We clearly believe that these are going to remain the wealth creators and the winners for a very, very long period of time. In between, there could be challenges for a quarter or two as companies essentially either accelerate or tweak their growth strategies. There will be competitive intensity, and in some of the cases, maybe some of the growth strategies may not work for a short while. We've seen, for example, like what the Zomato management itself has said, and we own the stock. Itself said that look, they saw a similar thing playing out in the case of food delivery, where they went in aggressively and then had to pull back later. It's quite possible that quick commerce will also witness a similar situation. So it's honestly not going to be for the faint-hearted or for the more short-term oriented investors. So if you're looking at the next 1 or 2 quarters or maybe 4 quarters, it may not be the right place to be. But if you have a 3-year, 5-year, or 10-year view on this whole digitization opportunity, we have to use these weaknesses to essentially continue to buy and load up on the space.
I think we committed a few years ago that we would invest 250 million. We have made that investment. You are seeing the products, you're seeing the growth. There are more products this year, and with that we'll share more capex plans as well. We're a global company. We cater to so many markets, and we will further that in EVs as well. We have launched iQube in some markets outside India. The electric scooter for BMW is designed, developed by us, and is selling in European markets.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
And we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect.
Welcome back. You're watching CNBC TV 18. TVS Motor Company launched a connected electric three-wheeler, King EV Max. My colleague Parikshit spoke to TVS Motors Company's Director CEO K.N. Radhakrishnan and began by asking him about their plan for the three-wheeler EV segment. Let's listen in.
I think thanks for the very, very interesting and important question. This TVS King EV Max, as you know, it comes with superior comfort, connectivity, and very good blend of long range, impressive acceleration, and quick charging, and overall making sure that the customers are able to turnaround faster. They are able to make a very good return on investment. And it comes with many best-in-class features and car-like features, some of the car-like features in this. So overall, it's an excellent package for the customers. We are looking at two-wheeler EV space. We are looking at to become a prominent player in the EV three-wheeler space, which is, I agree with you, the speed at which the penetration has reached overall this year 21%, in the last few months 27%. I agree that it will go much faster, and TVS King EV Max will take a prominent position in this year.
Okay, so you expect it to take a prominent position. And do you foresee TVS building on this? Is this going to be the only EV launch in the three-wheeler segment by the company, or will you come up with more launches to try and win the market as soon as possible?
See, the strength of TVS is the ability to design, develop, and come up with innovative products with new technologies and very many features to the customer. So this is the first launch in terms of the three-wheeler, and we are in the passenger category. Of course, there are opportunities in the cargo category, and there are many more opportunities in the space. Closer to the launch, I can give you more details. This product, we will definitely start with UP, Bihar, J&K, Delhi, West Bengal now. And over the next 4 months, it will be available all India. We are also looking at coming up with a very clear strategy, because in the international market, we are a prominent player already in three-wheeler. We want to leverage that, and many of these international markets will also start moving into EV. So we will start with India. We will start with North and East, and then all over India, and then parallelly we will also look at some of the countries where we are already exporting. So there is a great opportunity for this product.
Right. At the Bharat Mobility Expo, both Hyundai and TVS announced that they were exploring a collaboration on electric three-wheelers and micro-mobility four-wheelers. Could you give us, by when can we expect final contours of this partnership, and how bullish are you on this potential collaboration?
Hyundai is a great company, and partnering with Hyundai for TVS is a great opportunity, because both the companies have got great understanding, and this is the first time we have come up with looking at the space of micro mobility. Allow me to have further discussions, and at appropriate time I can share more information about this relationship.
Right, absolutely, sir. But can one say that TVS is not just looking at more electric three-wheelers, but maybe four-wheelers also in the micro-mobility segment, and possibly bring that to market this year itself?
Today it is all about TVS King EV Max. Okay, so I want to focus more on that today.
Right. So you're saying that the electric three-wheeler market is already 21 to 22% of the entire three-wheeler market. The bulk of it is still CNG, but the EV market in this three-wheeler segment is growing fast. Now, by the end of calendar year 2025 or fiscal year 2026, what is your expectation of this market growing?
Already it has come to something like, while this 21% is the average, in the last few months it's already 27%. So it's growing at a CAGR of almost 80%. And I see the same momentum could continue. Same momentum could continue for the EV three-wheeler.
Right. And what we are also learning is that the incentives for three-wheelers in the PM e-drive scheme, considering the rate of adoption, the subsidies, the incentives may get exhausted very soon. Do you feel that you will have to work with the scenario where after a few months there may be no subsidy available?
I think thanks to the government, the way in which EV adoption they have facilitated with PM e-drive now and PLI and many other benefits, including GST. I think this was fantastic. I think it is a responsibility for all of us to look at. I think we know very clearly the path Possibly, I agree with you, the speed at which EV three-wheelers are moving. I think we should learn to live with minimum subsidies or no subsidies. And what is most important is government has done their job and we have to work together in transforming. So what is very critical is come up with products like TVS King EV Max, which can delight the customer. And most importantly, when you delight the customer, more and more sales will happen. And when the top line goes up, every line will be alive.
Well, a very interesting conversation there with TVS Motors. But with that, it's all the time we have for this edition of the show. Stay tuned for Closing Bell to take you through the last hour of trade today.
Private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into.
The Nikkei is absolutely flat, as is their broader market index, which is the Topix. Trump returned to the White House with a strongman image aiming to reshape US policies.
The 20-day moving average, which stands at 23,578. 23,420, about 1/3% higher.
And I think with more competition, we expect the overall market size to also grow faster.
Expecting the Fed to cut rates twice in 2025.
They call it Trump tantrum, but markets are selling off, right? After a positive start and positive global markets.
It is a good opportunity to accumulate given large TAM and likely market consolidation as per Bernstein.
In December, I completed 1 year as the CEO of Tech Mahindra. And it's been a fabulous journey, right?
Within TCS, our approach towards this is coming up with newer solutions, newer offerings to a customer.
The actions that we've taken to ensure a very sharp focus on growth has played off.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that's a day so far, and this is, of course, still in a way wait and watch. It's strange, right? I mean, I think, Trump inauguration, everything has happened, and still the market is on headline watch, so as to speak. Hugely volatile day is what we've seen. This is closing bell. Lots to track in terms of individual movers, which I think is a lot more important and a lot more prominent than what is happening on the index, because in the index, all told, there's not very much one can really intelligently comment in terms of what has happened up and down a few times over. I'm Prashant. With me, my colleagues Reema and Surbi here. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. And we had peak volatility between 11:30 and 12:30. First, the markets recovered 75 points in the green, and then we were down 200. Actually, we were down 200 points. Then we managed to get up in the green, recovered 75 points, up in the green, then down again. And again, we're at the lows.
Absolutely. It's been an intensely volatile trade, right, Nigel?
Well, that's right. And it's that Sensex weekly expiry as well. So that's played a role. And just going by what we have seen, I wouldn't be surprised if the next 60 minutes, are absolutely blockbuster. And I don't think we'll end around here, which is 23,150. I think we've still got a bit of a move, just going by the volatility that we've seen in today's trading session. And just one more point. Today, the ones that have taken a hit are all those new age companies, whether it's Paytm, Delivery, Zomato, all of them are down. And on the flip side, the OMCs have done well. So you have BPCL ahead of its numbers. That stock is higher. HPCL as well as higher. So I'll keep an eye out on both these two pockets for very different reasons.
Absolutely. And of course, I mean, lower oil, right? That's hopefully much lower oil in the days to come. The market is well supplied, and if Trump is to be believed, it is going to be even better supplied. And I've seen forecasts of $60, I mean, within the next quarter. So we're at close to 80 now. So we're talking about meaningful downside if it really pans out. Now, just a quick couple of things here. So big volatile day. Macro markets are stable. The last I checked, the dollar index is not doing very much. Yields in the morning started after the holiday last Friday because Monday was shut. They started about 7-8 basis points lower, and they remain off the Friday levels. Market breadth is negative. I mean, overall, so to speak. Low on the Nifty, will we at some point test that? I don't know, 23,047 is that level. We're at 23,100. So, 50 points away and then you're there in that sense. Bank Nifty, first support stands at 48,300 or so. And then, of course, the last week's low for the Nifty Bank also comes into focus, but we'll wait and watch. FMCG index is higher, and that's perhaps the sole large sectoral index which is trading up. Real estate as a space is down about 3%. That's the real estate index. I began by saying Trump specifics on tariffs still awaited, and no real clarity about which way they will go and what he will say and what he wants to do, etc. So far, I mean, the direction seems to be that it's more pragmatic, it's progressive, it's not everything on day one, etc., etc. And if those things are true, and you combine that with the fact that positioning here is extremely negative, I mean, I think it may not be, of course, it's a big if on the tariffs, etc. But if that turns out to be true, I mean, I think we could be looking at sort of better days ahead over the next 1 or 2 weeks or so. And of course, then we head into our budget, 1st of February, that's a Saturday. So lots lined up in that sense between now and all the way till the end of the month. Reema.
Hi, the Nifty's just cracked 23,100. There has been another leg of selling pressure that's emerged in the last few minutes. And it's not that the global markets are weak. In the Asian markets, Hang Seng ended with a gain of about 0.9%. Nikkei was up 0.3%. Taiwan managed to close up in the green. Europe right now is flat. And even the Dow futures are currently pointing to a positive start. The gains are not much, but the Dow futures is up in the green. So the selling pressure that we're seeing back home in India is very much, to do with India right now. As we speak, it's IT where we've seen another round of selling pressure. Nestle has lost ground. ITC has come under some pressure. And the big losers today include Trent, Adani Ports, NTPC. In the banking pack, the Nifty Banking Index is down 1.5% with names like an Axis Bank, ICICI Bank crumbling. Reliance Industries is a heavyweight exerting its pressure on the way down. Few places to hide. But throw in BPCL ahead of numbers, Apollo Hospitals, Tata Consumer. So some defensive buying seen in pharma and consumer names.
Yeah, that's the large cap screen. The bigger problem is with the mid caps because mid cap index is down about 2%. And if you analyze the trends in the mid cap arena, it's very clear, this is a market that's rushing in to protect profits. That's what seems to be going on. Look at the entire EMS space. Dixon, you can argue, yes, I mean, you can talk about valuations, you can talk about margins. It wasn't a bad set of numbers, but the market's reaction has been very severe and it's taken the entire pack down with it. Look at what's happening to Amber, look at what's happening to Keynes, look at what's happening to PG Electroplast. And this is a part of the market which has had a stupendous rally. So it seems it's everybody rushing to the exit to just preserve the profits wherever they stay. So that's the EMS space. It's a very clear trend today. And the other trend is going to be in the new age platform companies. It started with Zomato. And again, it's spread to the entire sector. Look at what's happening to Swiggy. Look at what's happening to a PB Fintech, for instance. All of these stocks are down, and on Zomato, it's a huge price damage. Most, by the way, mind you, even after the downgrades and the cut in earnings estimates, most price targets are still well above 200 for Zomato. But the market has a mind of its own, and that's a stock down about 10%. And then there are others. I mean, even Oberoi Realty, where the numbers are good, but the market is in just no mood. It's all about booking profits. Even Oberoi is down about 7.5% at this point in time. Nigel, painful for mid-caps today.
Well, y'all came back to me in 3 minutes, and we have the Nifty that's down close to 100 points in those last 3 minutes. And that's why I said that we have still got plenty of action. In spite of having already seen a lot of volatility, I think we're still due for a big move in the last 50 minutes or so. So let's see how that goes. In the last few minutes, I think you mentioned most of the stocks that went down. I think Nestle is one stock that suddenly slipped. And Mahindra & Mahindra, that's the other one in there. And as we speak, we're at the low point of the day. Both the pillars of the markets have moved lower. That's tech. The IT index should come off you, and the Nifty Bank as well. Let's get Mitesh back in. Mitesh, what's happening today? It could be attributed to their expiry-related factor. Do you think that if we can survive these, and defend today's low, do you think there's a chance of a bounce back? Or do you think this market is telling you that it wants to go ahead and maybe test lower levels, 22,500, 22,800, and the VIX as well is gradually spiking up?
See, Nigel, my belief is that, we had kind of a couple of days back got a signal that the declining trend might be over and we might be looking for a bounce back. Now, the bounce back did happen. If you look at the Nifty from the 13th of January, managed to gain about 300, 350 points, but that closing about 23, 350, which was vital for, gaining strength didn't happen. And then today morning, we started falling, and I said we might retest the lower end of the range. We are practically there, breaking below it now. So I think, this signals that if we break below these levels, then we are looking for continuation on the downside. Most likely to 22,800 and 22,600 are the next two targets which I'm looking at. So I think, this market does look like, possibly we'll see further declines unless until we today recover somehow and manage to close about 23,100 by the end of the day. I think the odds are more in favor of, us going lower to about 22,800 to about 600.
I think we are at, by the way, as we speak, we are almost exactly at last Monday's lows, which is, it was the 13th last week, when we had gotten to about 23,047. The 2347 was the low. We're at 2347 now, almost exactly. And I think we should put out an alert because after that low, the market had pulled back nicely. The high today was 23,426. And what a significant turn we've had since. Now, actually, we've broken that. 23,030 is where we stand at. Got to be, I'm not sure there's any sort of fundamental fresh trigger at the margin, nothing from a global perspective or anything. So there is that expiry at play perhaps, but beyond that, I'm not really sure if there is anything new which is bothering the market, apart from, of course, stuff that we've discussed. Mitesh, in terms of specific stocks, what do you have?
On the stock side, Prashant, I would recommend sell on HUL with a stop at about 2360 for targets of around 2290. To begin with, maybe even lower levels can happen. And the other stock which I have is a sell on IGL with a stop at about 402.5 for targets of 380.
Okay, let's get to Dixon Tech. That's in focus after reporting Q3 numbers. Numbers are fine. It's just the high valuation which is hurting them today. And even after the correction, Dixon is trading at 70 times FY26 PE. Upasana is here with more on the numbers and what brokerages made of it.
Well, certainly the
stock saw a very steep fall, nearly about 20% off the 52 weeks high. Now, first, let us look at the numbers. The company reported an inline set of numbers with a strong revenue growth, which was mainly led by company's mobile segment, which saw a growth of as high as 190% on a Y-on-Y basis. Now, when it comes to company's revenue mix, the revenue contribution mix of mobile segment increased significantly from 67% to as high as 89%. Now, the management joined us earlier today this morning, and the management has indicated that it sticks to its FY25 guidance. It has guided revenue for FY25 to be close around 40,000 crores, and management has also said that the margins will be around 4% mark in FY26 and even higher post FY26, that is higher than 4%. Now, coming to brokerages, here there are mixed set of reviews. Firstly, let me start with the bulls first. Now, Motilal Oswal has given a buy rating on the stock with a target price of 20,500 per share. It has raised the estimates to bake in the improved performance for the company's mobile, telecom and refrigeration segments, while it has lowered the estimates for companies' consumer electronics, lighting and home appliances. The brokerage expects a revenue CAGR of 55% over FY24 to FY27, which will be mainly driven by EMS and other new emerging segments of the company. Now, CLSA has given an outperform rating with a target price of 18,800 per share. It says that the triple-digit growth continues. ROC progression is a key to watch going ahead. On the other side, that is, let us look at the bear case. Jefferies has given an underperform rating with a target price of 12,600 per share. It says even though Q3 was a beat to our estimate, the risk reward of the company seems stretched at 107 times the one-year forward PE. And lastly, Goldman Sachs has also given a sell rating with a target price of 10,240 per share. It says that the earnings upgrade cycle may have halted for the time being for the company.
Smartphones is a lower margin business globally, and so is the case in India. And that is the reason, in our case, we are going to be deploying a lot of resources and capital in a backward integration play, in the components play, which is more margin accretive. So margin, we feel there is going to be in the range of around 4% in 26. Beyond 26, it should start inching up.
Okay, so that's the Dixon story today. It's not just a Dixon story anymore. Like I said, look at PG Electroplast, look at Amber, look at Keynes. All of these stocks are coming off their respective peaks. Let's take the conversation forward with Deepak Shenoy, founder of Capital Mind. Deepak, great to have you on. I'm a little baffled, I must say. We all know that these stocks have been trading at elevated valuations, right? Depending on which one you're looking at, 70, 80 times, 90 times forward earnings. But I don't know if Dixon's performance was, so bad that it could trigger such a massive decline across the sector. So I don't know, sure, we all know that they've been in a business where the margin has been very range bound between 3.5% and 4%. This is not new. So what do you think has happened today?
Afternoon, Surabhi. I think, the Dixon numbers were good and we own it in one of our portfolios, so a little biased there. But given the numbers itself, I don't think the numbers were a concern. But this is one of those quarters where regardless of whether you announce good numbers or bad, in fact, sometimes if you announce good numbers, it's probably good enough reason for the stock to fall. Some of these stocks, of course, are at extended and stretched valuations, and the numbers, even if you look at Dixon's growth, they'll have to maintain this growth for at least 3 or 4 more years. And I think they can in terms of either inching up margins or inching up revenues. Because of the scale of the business they're operating in is relatively, they're a small player in a relatively large space. So even though they have a 40,000 crore revenue, I think over here revenues will probably inch up for companies of their sort, upwards of 75-80,000 crores in the next few years. So I think there is a lot of growth over here, but then valuations have also been stretched. You got to, people will have different expectations of stocks going forward. So I think if you're allowing it to go up 10-11%, it should be able to fall 10-11% as well. And therefore, you'll get either opportunities or people who will exit at either a profit or a loss. I don't think this is a meaningful, this is meaningful for us in the short term. I think it'll give us opportunities. It's still not at a level where I would have just said, blindly buy a stock like this. But I think it provides a better cushion now than it used to earlier. I don't have a problem with the business. I like the scale of it and the overall things. But you're going to accept that at some point the valuations being too high will correct to more meaningful numbers, and the company will have to demonstrate its growth to bring it down to a meaningful valuation even at these numbers.
We spoke with the management. They told us that they make 8 crore phones now. Android phone market size is 14 crores in India annually. 8 is Dixon. So, and that overall, that 14 crore number is not increasing. It's actually very, very stagnant. And I think, of course, as I think Nigel was in the morning pointing out, after that call yesterday, there was some worry about the new investment into this display manufacturing. And they spoke about some very large numbers. Now, that is dependent on government subsidy, government funding about 50% of it. So what if, the government, it's a large one for the Dixon balance sheet. Of course, with government subsidy, but since it is government subsidy, and if it's the government at the end of the day, I think there are those kind of worries as well, that you need that. And that project, by the way, is at least 3 or 4 years out. They said that, well, that's a higher margin business, high single digits compared to Dixon's 3.5%, 4%, what they make currently. But anyway, Dixon is still trading at 100 times FY 25 earnings. If they do about 900 crores in profits, even after today's 13.5% fall. So that is sort of the perspective on the stock. MCX is the next one we're going to address with Deepak, but let's do that first with Vamakshi, who's got the details on the numbers and what really disappointed because stock's down sharply. Vamakshi, take it away.
Well, absolutely, Prashant. The stock is seeing a big knock today in the trading session. The growth rate on a sequential basis has slowed down. The growth rate in the second quarter was in double digits. It has now lowered to almost single digits. Revenue saw an uptick of only 6%. EBITDA was up 8%, and the net profit saw an uptick of 4%. The margins have improved by 125 basis points, but this is much lower as compared to the 600 plus basis points improvement that we saw in the second quarter. Now, when we look at the key internals, nothing much happening here as well. Traded clients stood at 6.9 lakh. This is an uptick of only 1.5% sequentially. The average daily turnover for both the futures as well as the option segment for the company saw an uptick of 6.9%, and this growth is largely being led by the option segment. The market share was more or less the same. It has improved marginally from 97.84% to 97.97%. So overall, when we look at the numbers, not a great set coming in from MCX. But apart from that, there's a brokerage note that came in from Morgan Stanley. They have an underweight call on this target price of 3,715 rupees per share. They say that core EBITDA was in line, but higher SGF contribution led to the miss on the net profit. There has been stagnation in average daily revenue in recent months, and they believe that if this sustains, it could result in meaningful downgrades to both consensus revenue as well as earnings. They find the current valuation stretched given low conviction on sustainability of revenues, which carry significant concentration risk. So not such a great outlook coming in from Morgan Stanley as well.
Okay, all right. Thanks a lot for that, Vamakshi. Deepak, what do you make of this one? MCX, the one under big pressure today.
Yeah, it's actually surprising. Again, I thought the results were quite good. But here's an interesting thing over here. After November 20th, when the options volumes in the BSE and NSE stock options market or index options markets have been coming down, I think activity started to be much more pleasant in MCX, which has commodity options. I think people are moving there slowly because you don't have the same level of restrictions that you do in the index options market here versus what is happening there. Plus, crude futures and bullion are relatively highly traded in MCX, which are not, which are not related to the index, and there's a much better format over there. I think going forward, if you look at the mix, I think relatively speaking, the BSE NSE volumes in the options markets will probably migrate a little bit more towards MCX. They had that big cost earlier, which was what they were paying, I think 63 moons or something, which was hurting their margins because that was a software cost that they needed to keep on their books because they had 63 moons as their vendor. There's a lot of history behind that, of course, and then they've shifted that over to TCS, and the cost over there does not seem to be meaningfully large. So going forward, I think those margins will also start to improve going forward. I think, we'll start to see better financials, both from a revenue scale perspective because of the options moves and lower cost perspective because of whatever finalized amounts seem to have materialized with TCS. And therefore, I think this may be an interesting play. I don't have it in some of our core portfolios, but this looks like an interesting point. It may still be expensive, so you got to be careful about the price at which you buy. But it definitely seems to be a meaningful turnaround now, and unless there are more restrictions coming on commodities trading, I think this might be an interesting story to look at.
Thank you very much, Deepak, for joining in. Lots of casualties today. Even something like an Oberoi Realty. Again, numbers were not too bad. 33% top-line growth, 70% jump in the company's profitability. And here, it's not that the stock was very expensive. It was trading at 30 times PE. It may have missed street expectations, slightly according to Morgan Stanley, but stock is down 8.5%. Even Nugent Software, there was a Jefferies downgrade, and Nugent Software has tanked close to about 15%. Deepak, thank you once again for joining in. It's time to get into a short break. But before that, it's Growth Code time, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. This week, pro trader Rajesh Baheti, Managing Director of Cross Seas Capital Services, gave his insights on the new SEBI guidelines for algorithmic trading.
So currently, there is no real regulation as such that debars anybody from trading in algorithms or using algorithmic trading. What is happening is there are two kinds of algorithmic trading strategies that are being deployed today. On the professional or prop side, as what we do, all of our algorithms are approved by the exchange. The trades are entered as algorithmic trades. There's an identifier in the order sequence that identifies the trade as an algorithm. What is happening with the discount brokerages is that they are giving and exposing their APIs, and anybody with access to that API can either write their own code, or there are some pre-authorized vendors who have already matched their trading strategies to these APIs, and they are farming it out to the retail public. And these trades typically don't get registered in terms of an order identified as an algo trade, but rather as a standard internet trade. And I think SEBI has a problem with that. They don't want the algo trades to be identified as standard internet-based trades. They want the algo trades to be identified as algo trades even for this retail segment who are currently coming in using the APIs exposed by the brokers. What SEBI wants to do is that if you want to run an algorithmic strategy and you want to write your own code, then you've got to get that thing certified with the exchange. The strategy has to be approved. And in case you are outsourcing it from certain vendors, those vendors will need to get registered as some kind of investment advisors.
The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country, sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly.
Welcome back. Well, the markets have at least defended the 23,000 odd mark, and there have been various attempts, that we've gone out there, we've broken it, but at least for the time being, we've defended that. And given that it's expiry day, sometimes things can turn on its head, and that's what could lead to a big recovery. So don't rule out a quick fire recovery from here on, but sustenance will be very, very important. As we speak, 23,025 is where we are at. Ronak Onkar of PPFA Mutual Fund joins us on the show. Hi Ronak, good afternoon. Good to see you. Well, Ronak, before we start this conversation, I wanted to compliment you guys at PPFA because I was looking at all the flexi cap funds, and it appears the NAV from the peak, I think if you could correct me if I've got the number wrong, but I think yours is just down around 4 to 4.5% or thereabouts. And I've seen other funds that are down anything between 15-18% or thereabouts. So good work on that front. Is 4-5% the right number?
Yeah, it's the right number. And thank you, Nigel, for inviting me. Good afternoon as well.
Good on you all then. Investors will be counting on you all, helping them to get through this very, very volatile phase. A couple of other questions then. Let's focus on the largest sector, which is the banking space. And at the start of this year, a lot of people are telling us that's going to be the space to be in, because valuations are attractive. But the bank index itself actually has relatively underperformed for the last couple of weeks. However, if I look at your portfolio, it seems you'll have got things right. Why do I say that? Because Kotak Mahindra Bank, it was an underperformer and you'll be loading up on that one. While if I look at the last couple of months, you'll have actually exited RBL Bank. So give us your analysis of the banking sector, and will you all continue to do more of the same? Kotak Mahindra Bank appears it's one of your largest weights now in the banking space.
Nigel, we only have had 4 private sector banks as the core part of our portfolio. The HDFC Bank is the largest, followed by ICICI, Axis and Kotak. Now, the other RBL bank that you mentioned must be an arbitrage position, which again is not part of the core portfolio. It is cash to futures arbitrage that we do as part of the cash allocation that we have in the portfolio. But you're right, on the banking side, the valuations, not just for the past couple of weeks that you mentioned, the overall last 4 or 5 years has been a drag for most of the valuations of private sector banks. And despite the businesses have been going okay, they're not been growing very fast, but they are at the size that they are considered, they are doing quite well. I think that should continue over a long run because these banks have a large distribution reach, they have good brand franchises, at the same time they have a large non-banking, which is the fee-based income as well. So it remains to be seen how big they grow and how fast they grow, but I think there's a lot of growth ahead for the banking space.
Out of the big. Y'all were one of the funds that had a lot of cash in the books. Could you update us on what is that cash number? And given the pullback that you've seen in the markets, are you all gradually deploying, or do you all believe there's further downside in stock?
So we have been gradually deploying. The cash position in the Flexi Cap fund is about 21 point something %, and the tax saver fund is about 17.5 or 18%. So whatever ideas that we already like and are reasonably priced, like private sector banks, a little bit of Mahindra and Mahindra, which we added recently, or Narayan Hrudayalaya, something new stock we added recently. Some of these areas where we find valuations to be reasonable, we have been adding, but broadly we have not been deploying very aggressively.
What about names like a Zomato, Dixon, which were expensive, very expensive? They may still be expensive, but they've fallen 20% from the peak levels. Would they be attractive for you to enter and buy at these levels?
So two things for business models like Zomato or Swiggy, which are newer age businesses. I think the business model long-term trajectory seems to be good, but at the same time, the entry valuations and the understanding of the cash flows as to how stable they will be over a period of time, that remains to be seen. So we study these companies very closely, but so far we haven't made up our conviction as to whether it's something we would like to own and what valuation we would like to pay for them. At the same time, companies like EMS, players like Dixon and otherwise are again great sectors to be in with structural changes happening in our country and should benefit these companies. But again, the starting valuations have been very high. So we've been tracking them right since their IPO, but it's been very hard to justify the valuations, but they have actually grown very fast. So it's quite interesting that the company has done very well.
Okay. Ronak, hi. You've also liked capital markets related plays for a while, right? I mean, the whole story of financialization, you've played that through stocks like MCX, I remember, I think even Motilal Oswal. But now, obviously, things are a little different. The market's going through a rough patch, and whether we see, the client addition data, or even if we see the, total, premium turnover, etc., or average daily turnover, most of those numbers have been trending lower. Look at MCX is looking at a sharp reaction today as well. So what are your thoughts? Do you think it's time to book some profit, or will you remain, steady on it?
So I think what parameters you mentioned are actually very normal for companies like these. So when you look at capital market businesses, they are very, very cyclical. And as the capital market cycle draws, the volumes and the profit margins also shrink over a period of time. So knowing that this business is cyclical, we have been exiting some of them over a period of time. We have been slowly shrinking our allocations to these companies over a period of time. But those are normal things. They happen with capital market linked businesses, that the volumes shrink, the profit shrink, and when the market is doing very, very well, and like we saw in the past 2-3 years, these numbers can look extraordinarily better over that period of time. So we have to be very cautious as to how much we attribute to the cyclical earnings versus the longer term normalized earnings for some of these companies.
Ronak, HCL Tech is one of your preferred large cap IT bets. The stock reacted very negatively to its numbers. So what did you make of the market reaction to what otherwise appeared to be pretty okay? And what have you done to your holding?
So we have had the same holding since last month. But with companies like IT services, those are more or less stable businesses which generate money through services selling to clients. Now, over a period of time, that cyclicality has also been expected, where people were already building up these companies based on the anticipated growth that they will have. And those numbers came true. So it's not like the growth has been over and above what the expectations were. So some of these quarterly aberrations will continue to happen in the stock price. What we look at is whether these companies will stay relevant over a period of time. How are they competitively positioned compared to the GCCs coming in? Those are some parameters we are really keen on understanding. So it remains to be a large part of the portfolio. It is part of both FlexiCap as well as tax saver. And IT services space is also very stable, cash generating space, which has a long runway ahead of it.
Then one final question then. 17% holding, cash holding in one of your funds, 20% plus in the other one. What are the opportunities you're scouting for?
Actually, everything. So our research team has always been busy in trying to find new sectors, new companies, new ideas. So the number of ideas we pitch internally and discuss internally has always been the same. So we keep on studying. It does not mean that we will swing at every ball that we see. We will wait for the right pitch and we will wait for the right ball, and then when the bounce is right, the valuation is right, then we will see that this is a company we would like to own. And we have added a couple of new stocks in the portfolio as well. So it's not like we have not been studying companies.
Tell us about the new stocks you've added.
So we've added Narayan Hrudayalaya and Mahindra.
And Zomato, has fallen from 300 down to 220, 218. At what point does it attractive? Because you've been studying it for a while, but waiting for the right entry point.
I wouldn't know, because the business also keeps changing. So at one point when the growth was very high, you would probably sort of justify some of the pricing of this company over a period of time. But we have to see how the growth is sustainable, where the normalized cash flows of this business lie, and whether the business model also stays relevant, because this company keeps adapting over a period of time with different services that they keep on offering. So some of these companies are good to study for now, I think. But for us, maybe somebody who understands it better may already have it in their portfolio.
So cash level, just to go back to that point, I think at the peak it was some 16%, right, Ronak? Now it's come to about 11% in the portfolio, right?
At the peak, it has been 30% in 2018. Now it is at about 21 point something percent in the Flexi Cap fund and about 18% in the tax saver fund.
At about 21% in the Flexi Cap fund. Wow, I didn't know about the 2018 peak. So still not deploying, right? I mean, there are a fair amount of weightage, I guess, increases on some of the BFSI names that you've discussed, the capital marketplace there. Also, you're cutting positions. So you're still not buying. As and when you decide to, what is looking the best, where valuations and growth are meeting your expectations? Which are the sectors where perhaps you'll bite first?
We are actually buying, but not very aggressively. So like I mentioned, we added a couple of new stocks, and the existing stocks where the valuations are still reasonable, we continue to add and maintain the positions and the weights in the portfolio. But we're not very aggressive in finding new ideas and buying something. We keep studying different ideas.
I heard something very interesting on Zomato, since Zomato came up a few times. The Zepto wants to IPO, right, in the next few months or so. Zepto, I think we were just checking the Zepto app and finding things much cheaper on Zepto. Yeah. So basically, they are the price disruptor in that sense. Now the thing, and they've done 2 rounds of fundraising recently. So they have cash of about, and this was from someone who owns, so take it with that. They have Zepto's cash of about 6 or 8 months in the bank. And they want to IPO. The point is, can they continue to be such a big disruptor price-wise without hurting their own prospects at the valuation that they want to come in? So that's the, in a way, that's the bullish view, that they will not continue down that sort of, price disruption path, lowering,
if they want to
cutting prices, etc., etc., if they want to really tap markets and do a public issue. But on the flip side, I think what is also interesting is, if price is the only moat that you have, right? If actually price is not a moat, then should you actually get these kind of P multiples?
Be looking at the businesses in such light. I think that's a great question, Prashant. And I remember we were discussing this just after the numbers came in, the market closed, that, I mean, more or less you're getting the same product. The service quality could be, quantified or qualified in terms of the time of delivery and the fact that you get the right products. But I still think that price is the biggest differentiator right now, which makes people switch from one to the other. So I think this is pretty interesting.
If there is no moat at all and price is the only thing, then, it's not. I mean, airlines, for example, right? I mean, one airline gives you, say, a seat which is $100, $200 cheaper. People will take it. I mean, it's similar. And that's why I guess airlines have never really got a very high sort of earnings multiple or whatever.
Well, so there you can still argue in terms of service standards. Back in the day, you could talk about, You
were talking about the platforms, right? The platforms with service, So not the airlines, but the platforms.
I was talking about. I'm sort of making a point that airlines also as a business, there's no competitive advantage in that sense. Service, perhaps, yes.
Maybe to some extent, but here with platform companies, price is a massive sort of determinant of which way the customer flow goes. Well, with that, let's take some, a final quick word with Ronak. Ronak, on the market as a whole, overall, I mean, clearly you guys are cautious. You're deploying money also very judiciously. Earnings estimates have been coming down. What do you see ahead? I mean, this is kind of a guesstimate sort of a question, but next 1 to 2 months, it's been a tough now, what, almost 3.5, 4 months?
I think 2 months is a very short cycle to even estimate, but I think over a period of time, we are seeing businesses which have cyclically peaked to some extent are seeing some normalization in their overall profit and growth trajectory. And if you see companies which have been downtrodden and they have been struggling to maintain valuation at interest at least, those companies are seeing some relative attractiveness in terms of the business which is anyway doing well, but valuations are now catching up. So I think the market is behaving exactly what it does. The volatility is, I think, a feature of the market and not a bug. So we should understand that don't overpay, protect your capital and play for the long run.
Okay, all right, Ronak, thanks a lot for joining in. You'll have done a relative outperformance till now. So, now you'll have to keep it up so that your investors and all your participants are happy. Thanks a lot for joining in. Appreciate you giving your views. By the way, as we speak, HDFC Bank is cutting its losses, which is one of the reasons why the Nifty is not falling apart yet again. So that's the heaviest weight in there. And that's now down less than 0.5%. It was down more than 1%. So that's a bit of a relief. But let's get in Nimish. Nimish, tell us, what are you picking up? Expiry related, or is there something more to worry?
Well, I guess while the Nifty has been very volatile and maybe 200-point move we've seen at least 5 or 7 times in a single session, which is very unusual. But yeah, that's the kind of a day which is. But I guess the big story of the day is clearly the momentum stocks. Massive correction in those momentum names, and the feedback is there is a bit of withdrawal as well from the momentum fund. So that's a bit of a worry now that people have started withdrawing money. Not only investors, but I understand even some large guys, large treasury officers has taken out money from the momentum fund. So I guess that's the reason why you're seeing so much of pressure and none of the stocks are able to bounce back in today's market, whether it's Paytm, whether it's Zomato, whether it's Dixon. They all are part of that momentum basket and all under pressure today. Largely from an FI flow perspective, it's not that bad. The Nifty may look 300 points down, but it's more or less equal to what the DI buying is. So again, 1:2 could be the sell side buy-sell ratio, but it's not very large selling is what I understand from FIs. Technically, 23,300 is a level to watch. So again, we keep saying that that's a level. If that gets broken out, which potentially looks like given today's Nifty levels, maybe 22,800 is a level to watch. But I guess the bigger pain seems to be in the momentum stocks, and that's where I guess the redemption outflow is also not a good sign.
Okay, all right. So on the institutional flow side, not so much to worry, but some redemption pressure, particularly in the momentum names. That's the worry. What about individual stocks, Nimesh?
Well, so in terms of individual names, the first stock is Kalyan Jewellers. A big fall in that name in the last couple of days. But there are first signs of small buying emerging from larger FIs into Kalyan Jewellers at these levels. So that's the first name. Second stock is Zomato. We all spoke about the mode, the valuations comparing to Swiggy and whatever. But even after a gap down, the stock has actually been at the day's low, and largely because of aggressive selling from larger FIs. So it's an overrun stock, and now you're seeing a bit of reversal in terms of flows as well in Zomato. So that's the second name. The third stock is Exicom. Well, the stock has corrected sharply from the 52-week high. Off late, it's been consolidating, and the buzz is that maybe the company is likely to bag a large order very soon. So that's something to track in Exicom Tele. And the last is Apollo Hospitals. In a weak market, that's actually bucking the trend, buzzing in trade up to 1%. The volumes on the higher side. There is buying interest from larger FIs. And interestingly, there was a Kotak upgrade as well in the morning. They've upgraded the stock to a buy, and they believe that this is the best play in the hospital space. So that's the reason why Apollo Hospital is buzzing in trade today.
Thank you very much for that, Nimesh. Get into a break. But before that, here's some good news for all our viewers, because India's business news leader is now just a click away. So introducing CNBC TV18's all-new app. Get instant access to breaking news, all our articles, financial world updates at your fingertips. So don't wait, download the CNBC TV18 app now from the Apple or the Google Play Store, or you could just scan the QR code on your screen.
And other states who are still suffering from a hurricane that took place many months ago, or more recently Los Angeles, where we are watching fires still tragically burn from weeks ago without even a token of defense. They're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. they don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any country anywhere in the world. And we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting today, and it will change very quickly. My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Welcome back. Some kind of stability, at least as of now. HDFC Bank, that's come off a little bit from the day's low, so that's giving some bit of a breather to the bulls. But Nimesh is still with us. Nimesh, you were talking about momentum funds, seeing some bit of withdrawal. There are a lot of these stocks that are very, very high PE. Yeah. And any case of disappointment is the stocks are getting slammed. Give us a picture about them. How are they trading at currently, even after the correction? And what does it compare with its normal valuation?
So, Nigel, I just looked at this data because, there was a lot of queries about what happened to Trent, what went wrong with Trent, or maybe today what went wrong with Dixon or Zomato for that matter. I was just looking at the Nifty 50 and the Nifty Next 50 in terms of the most expensive names and how they performed from the recent peaks and where the valuation stands at. So, if you look at in the Nifty 50, the big underperformers from the 50-week high, which have fallen very sharply off late. Top of the chart is Trent, which is down 30%. Asian Paints is down 32%. Adani Enterprises is down 35%. And the two auto twins, Bajaj Auto and Hero MotoCorp, both are down close to 35%. Now, the second plate would be their average 1-year forward PE versus the 5-year average. If you look at Trent, after the correction, it's still quoting at close to 92 times on 1 year forward, whereas the 5-year average is close to 120 times. So it's always been historically a very inexpensive stock, that is Trent Limited. The second is Asian Paints, now trading at 44 times versus their 5-year average of 64 times. Similarly, Adani Enterprise now at 36 versus the average of 5-year average of almost 77 times. Bajaj Auto is an interesting name. Well, the stock is sharply corrected. Even after the correction, it's trading at close to 24 times versus the 5-year average of 20 times. So valuation-wise, it's still not corrected that much from a valuation perspective. Same is the case with Hero MotoCorp as well. It's still trading at close to 17 times versus 5-year average of 17 times. So these are the nifty names. Even if you look at Nifty 50, which is largely the momentum names and so-called high flyers, look at the big underperformers there. Zomato is down 30%. Avenue Supermart is down 35%. ABB is down 30%. BHL is down almost 38%. And even Hindustan Aeronautics is down 27%. Now, if you look at their respective one-year forward multiples versus 5-year averages, Zomato, after the correction, is still at 125 times on 1-year forward, and the 5-year average has been close to 122 times. So it's always been an expensive name, still quite expensive stock. Avenue Supermart, now it's trading at close to 71 times on 1-year forward. Historical average is close to, 5-year average is close to 92 times. So it's been an expensive name, but it's seen a sharp correction of late in the last 1 year or so. Same is with ABB. Historical 5-year average has been 71. Even after the correction, it's quoting at 65. BHEL is interesting name. The stock is corrected sharply from the 50-week highs, still trading at 34 times on 1-year forward versus the average was close to 40 times. And last name is Hindustan Aeronautics. Now after the correction, it's quoting at close to 31 times versus the 5-year average was 22 times. So a lot of these high-flying names have corrected sharply, largely on the back of a bit of earning disappointment or the fact that the valuations are so high that there is very limited room of error, a small error here and there, and you'll see a sharp correction. So that's the reason why we put out this data. That while the stocks have corrected, in terms of PE multiple, a lot of the stocks are still trading much above their 5-year averages.
Well, that indeed is the narrative driving today's moves in individual stocks. Thank you very much, Nimesh, for highlighting that. Mitesh is now back with us for a few BTST calls. Mitesh, first a quick word. The Nifty is at 23,000. And what will the trades be?
Yeah. So the Nifty, I think, as I said, getting below 23,100, 23,050 zone suggests that 22,800, 22,600, 550 zone is the likely target. We still remain negative. And therefore, on the stock side, STVT on KEI Industries with the stop at 40.50 for targets of 30.75. While Kotak and disclaimer is part of my portfolio, Kotak is something which has given a pullback after a breakout yesterday. So buy here with the stop at 18.74 for targets of 19.30.
Okay, thank you very much for that. In fact, let's talk about Zomato and the other quick commerce companies. Mangalam is here to give us more color. Mangalam.
Well, we know that Zomato is lower because, there is limited visibility on profit and margins have been put a pause on the quick commerce business, even as the food delivery is seeing some signs of slowdown. But every time Zomato moves up or moves down, we have Swiggy, which is now attached to it as well, because we're looking at the valuation differential between both Zomato and Swiggy. Remember, Zomato's weak commentary around quick commerce has impacted Swiggy's performance too. Since Swiggy's IPO price, the valuation gap between the two narrowed. But from highs, both Swiggy and Zomato have fallen. Swiggy a little more. So let's keep an eye out on the valuation differential. At the issue price of 390, Swiggy's discount to valuation discount to Zomato at that point was close to around 65%. Thereafter, we saw Swiggy move higher and Zomato move lower. At Swiggy's peak, that discount narrowed to around 32 to 35%. Now with the decline once again, there is the valuation gap which is widened between Zomato and Swiggy, close to around 50%. So it'll be very interesting to see if, someone again looks at this space and the valuation differential between the two and decides to back either of them. The key to watch will be growth in margins for Swiggy from here on, along with quick commerce. Whereas, for Zomato, curtailment of any sort of losses in the Blinkit business and recovery in food delivery is the big trigger that everyone will be looking at.
Right, Mangalam, thank you very much. Very interesting discount to Swiggy. Swiggy, of course, that's the benchmark. Others kind of move around it, sometimes at a steeper discount, sometimes at a lesser discount. But 50% now after the correction that we've seen. We'll take a quick commercial break here, come back on the other side, Jay Bala on the other side, and we'll talk technicals. Stay with us.
becoming the mainstream party. And which is unheard of, especially, I shouldn't say this, for a Republican. The Republicans are actually becoming the mainstream party. And
global growth, what's the outlook? What's going to be the outlook as far as inflation if President Trump...
Welcome back. We're down to the last 2 minutes of trade, and this has to be probably one of the weakest sessions that we've seen in the last many weeks. The saving grace for the bulls is that they're trying to ensure that the close is above last week's lows, or just around last week's low of 23,046. Though, of course, intraday we've had a breach of even the 23,000 mark. And India has been a rank underperformer once again. I mean, none of the other key global markets, whether it's Asia or Europe, none of the other markets have seen such weakness. US futures have been modestly higher. This is our individual issue. So where was the weakness? 300 points down on the Nifty. Weakest names on the index include Trent, Adani Ports, NTPC, Bank C across the board selling. So ICICI Bank, State Bank of India, Axis Bank, all of these names on the lower side as well. Throw in an HDFC Bank as well, though relatively HDFC Bank didn't fall as much as the others. Reliance wasn't offering any comfort or support, down 2% over there. In fact, I mean, even if you're expecting any support from FMCG or IT, there was really not to come. Some very, very minuscule buying on stocks like a Tata Consumer. You can single out maybe Apollo Hospitals, ITC, and leave it at the flat line, but nothing else. IT Pack, Infosys, TCS, Wipro, most of these names have ended lower. TCS, in fact, is down about 1%. So weakness across the board coming through, but the large caps are just one small part of the story. The much bigger headline was the deeper pain that we've seen in the mid-cap market today, with the mid-cap index losing over 1,200 points.
Well, it's a sort of pretty poor session, right? And lots of pockets of pressure which actually came through. So, the Zomato and Swiggy, of course, were obvious big names which sold off. The EMS companies all came off very, very sharply. So that's the quick commerce, but Dixon, Amber, Sirma, PG Electroplast, that was another pack which came off hard. Real estate, Oberoi Realty, Lodha, Prestige, Anantraj, I mean, as a pack sold off. You had, names like MCX, which was hard hit. There was Kalyan Jewelers, which was sharply down. Motilal Oswal Financial Services saw a bit of a knock. Newgen Software after earnings. Policy Bazaar, big knock today. Mankind Pharma, K Fintech, Greaves Cotton. I mean, just highlighting what went down with very large volumes in terms of trade. So I think we've basically left off everything told. I'm not sure if this is the adjusted close. I think we're getting the adjusted close, but we basically left off at last Monday's lows, 13th of January's lows. 23.24, 23.47 was the low. So you're round about there after breaking 23,000 briefly earlier. Precariously poised in that sense. It's a wrap on this edition. A closing bell from all of us here is goodbye. But Surbhi and I will take you through markets forward coming up in just a bit.
On his very aggressive plans as far as tariffs are concerned, what happens to US inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. Is it? This is the first India pavilion, so to speak, India Bharat, and as I pointed out, this is the first time that we have India putting its states together, technically under two roofs. And what we've seen happen over the last several years is that states have come out here in Davos. So it's of course been the central government, but also increasingly the number of states being represented here in Davos has gone up quite significantly. It used to be Chandrababu Naidu. He was the original Davos man from a state's point of view, but now we've seen Maharashtra, Telangana, in fact even UP now here in Davos as well. Of course, the Chief Minister is not going to be here, but we do have ministers from the UP government who will be here. So this is the first India House, so to speak, and this is going to be home to UP, Telangana and Kerala. So Telangana, Kerala and UP are going to be part of the India House together, and it's also going to be interesting because this is the federal story. This is the beauty of India's federal story, and it's also its strength, so showcasing its diversity and its unity here in Davos will be something to watch out for. With the next India Pavilion, India, which is going to be home to Andhra Pradesh. Remember, Chandrababu Naidu is going to be here. It is home to Tamil Nadu and Maharashtra. So 3 states, so total 6 states here in Davos, 3 in the house that we just saw, which was Telangana, UP and Kerala. And here we have Maharashtra, Tamil Nadu and Promenade and Andhra Pradesh. Devendra Fadnavis, the Chief Minister of Maharashtra, will also be here in Davos, as will Revant Reddy, the Chief Minister of Telangana. So 3 Chief Ministers will be here in Davos. Let me show you what we are saying to the world here. And of course, all of this has been set up by Invest India. So let's take a look at the themes that India is going to be showcasing. We're going to go right inside. The themes that India is showcasing: the Indian semiconductor market is set to triple by 2032. So semiconductors will be part of the story that India is pitching, from silicon to success. And again, we've got semicon.
Market ends at a 6-month low amidst extreme volatility. The Nifty and the Sensex fall 1.5%. The Nifty breaches the 23,000 mark intraday for the first time in 7 months. Mid-caps underperformed the blue chips. The mid-cap index falls over 2%.
Donald Trump takes oath as the 47th President of the United States of America, vows to put America first, signs a slew of executive orders on day one, including withdrawing from the WHO and the Paris Climate Accord. Also grants pardon to 1,500 people facing prosecution for rioting at the U.S. Capitol on January 6, 2021. Promises 25% tariffs on Canada and Mexico in February, but no word on tariffs on China as yet.
Dixon Technologies tanks nearly 13% after an in-line set of numbers for the third quarter. With growth expected to taper, the MD says margins will start rising after FY26. Zomato falls a whopping 10% as rising competition pushes back margin expansion. MCX tumbles over 7% after it sees slower growth on a quarterly basis. Morgan Stanley gives the stock an underweight rating.
Hello and welcome to Markets Forward, your go-to program where we aim to get you everything you need to know as we begin tomorrow's trading session. Prepare for tomorrow's trading session. I'm Prashant. With me, my colleague Surabhi. I'm not really sure if that's possible to prepare.
Exactly.
Because,
now we're preparing late into the night, early into the morning, because God knows what next executive order is coming and what the US president is thinking. So yeah, it's tough. And it was tougher for the market today.
Absolutely. We'll have to move this show to about probably 11 or 12 at night.
No, Prashant. It will be Prashant alone.
But, it's that kind of a day. And To be fair, I don't think what we saw today was a tough day. You can't blame it on Trump or what he did, because actually he didn't do... what mattered for markets were two things. One, oil, the other is tariffs. Oil, he clearly wants lower oil prices. On tariffs, there was nothing on day one. There were no universal tariffs that everything into the US will be tariffed at 15%, 20%. No, nothing. He's going to study, his team is going to study and then take action. So it looked more negotiating tactics, unless, of course, we hear something now in the next 2-3 days, 1 week or so. The market just, I think, there was, of course, the weekly expiry perhaps at play. But beyond that, I think we'll have to just watch what kind of flows we saw, etc. Because it's the same story. There's nothing new in that sense, new negative in that sense of the margin. Foreigners have been selling. Earnings growth has been has been a challenge. Q2 was bad. Q3 there were some expectations, but I don't think Q3 I reckon is turning out to be all that great. Stocks essentially are getting a bit hammered. So that was it. The Nifty briefly broke about 23,000, but we've ended around the adjusted closes around the lows that we saw on the 13th, which is last Monday, 23,047. The only hope is if tomorrow morning when we come back and there is a more settled kind of sense that there is nothing on tariffs now coming and it'll be a process, etc., people are a little encouraged to buy stocks, because otherwise there was a fair bit of pain in broader markets today as well. Surabhi.
Absolutely. In fact, India was one of the biggest underperformers. If you're looking at global markets and the Trump reaction, no other market had it so severe. Most of the Asian markets managed some gain. Even China was fairly okay. The Hong Kong market was actually up. Taiwan had some green. Japan was close to the flat line. And even while we were trading, European markets were flip-flopping between red and green, but nothing as severe as what we saw over here. Now, the Nifty did reach that 23,000 mark. The low that it tested was about 22,975, thereabouts. But finally, it closed at around last week's lows. So the bulls will hope that that low and that zone is not being breached entirely. But let's see. We have to wait and watch for this. But beyond the large cap space, where there was a lot of selling, banks were under pressure, IT stocks were under pressure, big stocks like Reliance didn't help. But beyond the large caps, the bigger unwinding and the bigger pain was in the mid-cap arena today. Mid-cap index was down, a little over 1,200 points. And some of the hottest markets, hottest pockets of the market, the best loved spaces, like these consumer companies, consumer internet companies, platform companies, like the EMS space, they came under intense selling, stocks like Dixon and Amber. And we'll talk about that as we go forward, maybe triggered by earnings, but numbers which weren't looking that bad. And yet the market reacted in the manner in which it did. So we've had a very, very volatile session. The VIX was up about 4%, and the bulls are literally, on the edge of their seats. So let's, tell you what we've got lined up on the show today. We'll cover a lot of this excitement with, of course, the key movers and shakers. We'll have Vivek give us a blow-by-blow account of what transpired. And then the stocks in focus include the ones that you're seeing on the screen. There's Dixon, there's MCX and Zomato. Very sharp reactions coming into these three earnings. We'll dive a little deeper into the reasons. And then, of course, we talk about the key events to watch tomorrow, which would include more numbers, and a lot of big Nifty heavyweights are reporting tomorrow as well. But let's start off by first understanding what happened today. It's over to Vivek for this.
Well, thank you so much for that. More down than up, as you can imagine, on a day like this, more declines than advances. Very few stocks managed to hold on to their gains. First on the list has to be the Nifty 50 top gainer. There was Apollo Hospital. Kotak Institutional Equity upgraded the stock today to a buy rating. The stock managed to end the day higher by almost 2%. Sunteck Realty, strong Q3, throughout the trading session, actually held on to quite a bit of gains, but towards the end came quite a bit away. But stock managed to hold above the flat line. The other set of stocks that managed to do quite well in the session today were the OMC pack. HPCL today managed to end the day higher by 2.7%. But now to the list of losers, had to trim down this particular list because more laggards than gainers today. First has to be Dixon, a very sharp sell-off, decent Q3, but punchy violations is something that kept the street away, almost 14% lower as far as Dixon was concerned. Newgen Software, this was the other stock as far as the broader end of the markets are concerned. Remember, earnings came out during market hours yesterday. Jefferies dumbbell downgrade on the stock, and that stock fell by over 16% today. The other stock, of course, was MCX. Good set of numbers, but Morgan Stanley highlighted that there has been a stagnation as far as the average daily revenue is concerned, and that stock too ended lower by over 8.5%. Zomato, something that you highlighted yesterday in terms of a weak Q3, weak commentary coming in terms of demand, over 10%, 10.5% lower. And Kalyan Jewellers, yesterday was a brief respite from the selling pressure that the stock saw, but a higher promoter pledge is something that the street didn't take too kindly today, over 8% lower as far as Kalyan Jewellers was concerned.
Pretty cracking summary, Vivek. Thank you very much for that. Jay Bala is now with us of Cash the Chaos. Jay, good to have you with us here. Thank you very much. Let's get the setup from you for our viewers. Nifty Bank. How are both indices looking? I mean, today, of course, was a down and out day.
Yeah. Hi, Prashant. Last Tuesday, I had mentioned that the market needs to go and clock one more low below the last Monday's low and bounce to about 23,600. And the markets did something in between. The markets didn't break the Monday's low, but came to about 23,400. And now, in today's session, it's broken the last Monday's low. So the market's likely to remain volatile within the range of 22,600 to 24,100. But that's the theme still remains to sell on rise. When it comes to the banking index is a little more precarious. I would say mainly coming from SBI. SBI has got steep potential to drop somewhere close to 550 to 440 over the next several months, not a short-term call, over the next several months. So, and we had called ICICI short with some time back when it was near the 52-week highs, and it's come to 1210, the minimum requirement for it to drop. And that's also not looking like it's going to pick up steam from here. And HDFC Bank, like I've been pointing out, near its 52-week highs and all-time highs, that is likely to correct somewhere close to 1500s. And it's coming closer to it. So probably when it comes out of the result, probably it will be nothing encouraging. So more weakness coming in the banking sector. Probably, like I've been pointing out for several weeks, the banking sector is likely to lead the markets lower. So the theme, basically, in the very short term, look for volatility. Use the higher pop-ups to short the market.
Just to for the Nifty, you're essentially saying 22,600 on the downside and some 24,800 or so on the upside. That's the range, right? Broadly, right?
That's not 2,400. Yeah, it's possible, but I think 24,100, 23,900 to 24,100 itself will cap the market on the upside. So we keep that as a very wide range. We can keep that expanding on the higher side, but right now the resistance comes at about.
So then, Jay, this is basically 1% downside, 4-5% upside. I mean, that's kind of a broad range. So would you go short here?
No, it doesn't make sense to short. The markets are like a springboard dive. We want the market to spring up, and then we can do a triple somersault and twist, and then plunge into the market. So we want the markets to gain some height for a shorting opportunity.
Sure, and I guess Jay is retaining that target call on revisiting the 4th of June low, which was around 21,880 thereabouts. So I guess that call still remains on a more sort of medium term. Got it, Jay. Coming back to you in just a second. Now let's look at the one area of the market that was under severe pressure, and that is the entire EMS space. It started with Dixon. That stock tanked 13% after what looked like a fairly inline set of numbers. But the concern on the street is in terms of growth tapering and whether margins will continue to be stuck in a very, very narrow range. Of course, the company's management told us that revenues in FY25 would top the 40,000 crore rupee mark. We have Upasna joining in with more details. Upasna, what a tough day for Dixon.
Certainly. Well, the stock did see a very steep fall, nearly 20% of its 52 weeks high, even after reporting an inline set of numbers. Now, company's mobile segment outperformed with a growth of nearly about 190% on a one-year basis, which was the key revenue growth driver for the company. Now, in terms of revenue mix also, the mobile segment revenue mix increased sharply from 67% to 89%. Mind you, management joined us today morning, and it remains stick to the FY25 guidance given by the company earlier as well. The management has retained its FY25 revenue guidance close to nearly 40,000 crores, and it says that the margins will be around 4% in FY26, and it will post a better margins, that is above 4% FY26 afterwards. Now, in terms of brokerages, we have seen a mixed view. First, let me come to the bulls. Motilal Oswal has given a buy rating on the stock with a target price of 20,500 per share. It expects a revenue CAGR of 55% for the stock over FY24 to FY27, mainly driven by EMS and new emerging segments of the company. CNBC has also given an outperform rating for the stock with a target price of 18,800 per share. It says that the triple-digit growth for the company continues and ROC progression is a key to watch going forward. Now, on the flip side, let us look at the bear case. Now, Jefferies has given an underperform rating with a target of 12,600 per share. It says that the risk-reward seems stretched at 107
Upasana,
times.
thank you very much. Thank you very much for that. So that is sort of Dixon and Focus, both the bulls and the bears, etc. Sudeep is with us. Sudeep, 30-second view, Dixon.
I don't know what happened, Prashant, because all the facts which came out were pretty well known. At 100 multiple, the stock was looking rich, revalued, and some correction was due for quite some time. And, there's nothing new which came up. Suddenly, the market took cognizance of these facts at one shot and, led to the correction, and not only in Dixon, but the entire space, EMS space. But I think it's good for the health of the market and good for these companies as well. Some more correction, they will become worth looking at once again.
Okay, worth looking at once again. Jay is with us as well, and we've been sort of asking him his perspective on markets. He thinks it's a sell and rise, but you've got to wait for that to sort of come through. Jay, other indices, I mean, which is FMCG, do you see any silver lining, any hope? What about other indices like IT services, etc.?
No, Prashant. FMCG have put out a note saying that sometime in October itself that they've clocked a long-term top, very likely. So, but they are deeply oversold in the short term, so they could see some bump up. But ITC specifically have said that it's clocked a long-term top. So nothing to look back there, not even for investments. So we'll keep them all for trading bets. When it comes to Nifty IT index, the Nifty IT index is the strongest index so far, and it's closed below 42,500. That is, some would consider that as a head and shoulders breakdown. But I would still wait for 39,900 to break down, and once that happens, I would anticipate the pressure to get very intense for the IT sector. Probably that will coincide with the correction that's likely to set in for the US tech stocks. So once that happens, probably these two will synchronize, and we can see further downsides to come through. And specifically with Dixon Technologies, in November, I had mentioned that I had anticipated the stock to top out at about 16,600, 17,100. The stock went to 19,100 and it started caving in. I'm anticipating the stock to drop to about 11,000 to 9,000. I mentioned this in November itself, but the stock exceeded slightly the 17,100 level. But the caving in today is not a surprise. We expect more from the stock.
Okay, all right, got that, Jay. Let's quickly move on and look at the quick commerce space. A lot of these stocks were down. It really started with Zomato, but then it moved on to Swiggy as well. Zomato was down about 10%. Swiggy fell about 7.5%. With the street wondering what happens to the profitability and the margin expansion projections from here on when it comes to quick commerce. Mangalam, over to you for more details.
Well, ever since same time yesterday, the Zomato management said that, they aren't looking at profits in the very near future in Blinkit. And not just that, the margins are capped in the quick commerce business also because of competition and then front-loading investments. The street has been worried. Yesterday, the stock ended lower. And today as well, Zomato opened lower with the brokerages cutting their estimates and target prices as well. But it wasn't just Zomato. When they're talking about competition in the quick commerce industry, Swiggy was the other one that also declined. So the question now is that between Zomato and Swiggy, what is it that the street bets on? The reason why I say that is because if things are bad for Zomato, they're bad for everyone. The valuation differential between Zomato and Swiggy should stay, right? But that's not the case. If you look at the way Zomato and Swiggy have traded ever since Swiggy is listed, at Swiggy's issue price, Zomato was trading at a certain price. That time, the valuation differential between the two was over 60%. Then thereafter, Zomato fell from the highs post QIP and Swiggy also rallied all the way up to 600 rupees. So at its narrowest, the differential was close to around 32 to 35% depending on the valuation that you look at. And now with quick commerce margins proving to be a bit of a toppish sort of situation out there, the valuation differential between both Zomato and Swiggy has widened once again to 50%. So let's see what the street expects from both of these quick commerce and food delivery players. Because so far in the food delivery business, it is a two-player game. Will that continue in quick commerce or not is the big question. And the answers to that we'll probably get post Swiggy's results.
Sudeep, quickly, you think valuations have come off enough? Or you think next couple of quarters perhaps? In a way, broadly, the best may be behind for now, although the runway remains long and strong.
Well, absolutely right, Prashant. The runway is significantly more than what we are seeing now. But yes, next few quarters is going to be turbulent. All these players are trying to scale up their quick commerce business rapidly. And that rapid expansion will lead to a lot of depreciation getting accumulated on the P&L, as well as significant pressure on margins, because I think price is one factor which is kind of helping them gain market share. You look at Zepto, you look at the price at which they are delivering significantly lower than the other established players. So price is going to be determinant, which will lead to significant erosion of margins. So if you are looking at a very short term, I think it's avoidable completely. If you are a long-term investor, I think some of these corrections will be an opportunity for you to buy, whether it's a Swiggy or Zomato.
All right, with the time on your side, that's the important thing here, not as a trading bet or anything of that sort. You've got to be willing to hold it. MCX was down sharply. That's the next one that we want to talk about. Was down about 7-8%. Reported numbers and again, a well-known popular name, one of the few exchanges which are listed. Vamakshi is here to run us through the details here. Vamakshi, over to you.
Well, Prashant, the lackluster set of numbers coming in from MCX, when we look at the growth for the company, that has slowed down. In Q2, the company had reported double-digit growth, and now this time around, the company has the growth rate has significantly fallen to single digits. Revenue saw an uptick of 6%, EBITDA was up 8%, and net profit was up nearly 4%. The margins have improved by 125 basis points, but this improvement is much lower as compared to the improvement that we had seen in Q2, which was somewhere over 600 basis points. Traded clients stood at 6.9 lakh. This is an uptick of 1.5% that we're seeing. The average daily turnover, both in the futures as well as the option segment, saw an uptick of 6.9%, and this growth is largely being driven by the option segment. When we talk about the market share, it has more or less remained the same at 97.97%. So overall, it was a lackluster set of numbers. But apart from that, there was a note that came in from Morgan Stanley as well, and they have an underweight call on this counter. Target price of 3,715 rupees. They say core EBITDA was in line, but the PAT came in below expectations on account of higher contribution to the SGF. They say that there has been stagnation in average daily revenue in recent months, and if this sustains, it could lead to a meaningful derating for the company. As far as valuations are concerned, they find the current valuation stretched given low conviction on sustainability of revenues, which carry significant concentration risk.
Okay, all right, Vamakshi, got that. Thanks very much. MCX also under pressure today, and with that, we'll thank both Jay as well as Sudeep for being with us on the show. Need to take a very quick break, come back on the other side, and we'll get you all the top corporate voices that we had on the channel today.
The government has announced, we've already started to see investments coming in there. So semiconductors, electric mobility, EVs to account for over 40% of India's automotive market. EVs will be the other big theme that will be discussed here as part of the India story. So this is India, the roadmap to a $32 trillion GDP by 2047. India's economic overview, so some data and numbers and statistics here being highlighted here at the India Pavilion.
Welcome back. Let's take you through some of the top corporate commentary that we picked up today. First up is TCS. The firm's management has said that double-digit growth is not improbable, and it is actually possible, though they're not putting a timeline to it. The company says that it is confident that this year would be better than the last one. TCS says that the headline for 2025 was growth and to expect small tweaks instead of big changes in the business model. They're saying that AI will not lead to a reduction in headcount. In fact, they could end up needing more people because of more quantum of work.
Right. In terms of, next up is Tech Mahindra. The management told us that 2025 would be better than 2024 in terms of growth, but added that 2026 would be the year of explosive growth. Tech Mahindra is also aiming to achieve 15% EBITDA margin by FY27. We also had the management of Mahindra and Mahindra who was on the program, and they said that they've recorded healthy growth in the tractor segment over the last 2 months. In fact, they expect to clock double-digit growth in the second half of this financial year. On the EV front, the firm said that the response for its 2 latest EV launches has been very strong and that they would be ramping up capacity as well.
The Wall Street has witnessed a sharp correction in many high-value stocks from their recent 52-week highs. We've got Nimesh joining in to decode the data from both the Nifty 50 and the Nifty Next 50 basket, because that's where a lot of the price damage has happened. Nimesh.
That's a so a lot of queries on why something like a Trent is down so sharply, why is Zomato down, or for that matter even Dixon down. I guess the common theme is valuations and very little room of margin of error. Now look at the top underperformers from 52-week highs in the Nifty basket. Trent is down 30%, Adani Enterprises is down 35%, Asian Paints is down 32%, and the 2 auto names, Hero MotoCorp and Bajaj Auto, down 35% each. So that's the kind of correction we've seen from the 50-week high. If you look at the valuations on 1 year versus the 5-year averages for all these names, Trent after the correction is still quoting at 92 times on 1 year forward, whereas the 5-year average has been close to 120 times. For Asian Paints, now it is fallen down to 44 times on 1 year versus their 5-year average of 64. Same is the case with Adani Enterprise. Now it's quoting at close to 36 times versus 5-year average of close to 77 times. And so with Bajaj Auto and Hero MotoCorp as well. For Bajaj Auto, actually, it's the other way around. Even after the correction, it's quoting at close to 24 times on 1 year forward, which is the 5-year average of 20 times. So that's the Nifty stocks. Even if you look at the Nifty 50 names, similar kind of numbers will throw up. Something like a Zomato is down 30%, Avenue Supermart is down 35%, ABB is down 35%, BHL is down almost 38%, and so is Hindustan Aeronautics down close to 38%. If you look at the valuation picture now, Zomato, even after the correction, is quoting at 125 times on 1 year forward versus their 5-year average of 122. Avenue Supermart, after the correction, is still quoting at 72 times versus the 10-year, 5-year average of close to 92 times. Similarly, BHEL, even after the correction, is still quoting at 34 times versus the 5-year average of almost 40 times. And Hindustan Aeronautics is now quoting at 31 times versus the 5-year average of 22 times. So there are a lot of stocks in the high PE basket which have corrected from the 52-week high, but are still quoting much ahead above their 5-year average PE multiples.
All right, thank you very much, Nimesh, for that very interesting data. And that really puts the context to what we've been seeing. In many cases, valuation stocks have come off, but so have earnings growth come off as well. And that's the reason why PE multiples have not budged, at least in a few cases. With that, it's a wrap on this edition of Markets Forward. From Surabhi, me, everyone on the team, it's goodbye. Thank you for staying with us. More news and updates after a quick break.
morning. How are you? Good morning. How are you? Are you enjoying your time in Davos?
Yes, we are going to work.
And what are you looking forward to the most?
Meet everyone and for the betterment of the economy.
For the betterment of the economy.
Of the world.
So what?
You come from India?
Yes, from India. Where are you from?
Punjab, India.
Punjab, India. आप कहाँ से? पंजाब में कहाँ से?
पंजाब से मैं वैसे तो हरियाणा से हूँ, अम्बाला से।
अच्छा, तो आप यहाँ पे कैसे आए?
वैसे घूमते फिरते आ गए।
घूमते फिरते आ गए। बड़ी लंबी घूमते फिरते आ गए आप। तो कब आए आप यहाँ पे?
मैं रहता हूँ।
आप ज्यूरिख में रहते हैं। अच्छा।
20 years living here.
और तो आप ये डावोस में वर्ल्ड इकोनॉमिक फोरम के लिए पहली बार आ रहे हैं कि?
नहीं, हम तीसरी बार आ रहे हैं।
तीसरी बार आ रहे हैं।
हमारे एक रेस्टोरेंट है खान्स तारा के नाम से।
जी।
तारा रेस्टोरेंट इंडियन।
हाँ।
तो उसकी कैटरिंग करते हैं हम।
अच्छा, तो क्या खिला रहे हैं आज आप डावोस में? क्या है मेन्यू पे, क्या है?
आप आए?
Well, that's lovely.
ये हमारे शेफ हैं जी दोनों।
नमस्ते जी, बहुत आपको शुभकामनाएं। आप कुकिंग करने वाले हैं और काफी लोगों को खाना खिलाने वाले हैं। तो
हम लोग
शुरू हो गए तो
आपको काफी फॉलो करता था मैं। लास्ट ईयर का गीता गोपीनाथ का इंटरव्यू पढ़ा।
Thank you जी, thank you so much. It's very nice to hear that you're watching CNBC TV18.
कभी इंटरेस्टिंग होता है आपका 2-3 काफी
नहीं, बहुत अच्छा लगा आप लोगों से मिलके एंड वी विश यू ऑल द वेरी बेस्ट। बिल्कुल जी, इंडिया वालों को अब नमस्ते, सत श्री अकाल।
हमें कुछ सक्सेस हो जाए।
जरूर होगी आपको बहुत सक्सेस मिले और बहुत शुभकामनाएं।
ऑलरेडी किया कि प्रोमेनाड इज कैप्चर्ड बाय द
इंडियंस। यस हम पहुंच ही गए। आप बिल्कुल भारत के सामने और आप लोग को भी डावोस के लिए बहुत शुभकामनाएं एंड थैंक यू। बिल्कुल खाएंगे जी, बिल्कुल खाएंगे। थैंक यू इंडिया की तरफ से। थैंक यू सो मच।
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening.
From this moment on, America's decline is over.
Donald Trump takes oath as the 47th President of the United States of America, vows to put America first, signs a slew of executive orders on day one, including withdrawing US from the WHO and the Paris Climate Accord, also grants a pardon to 1,500 people facing prosecution for rioting at the US Capitol on January 6, 2021, promises 25% tariffs on Canada and Mexico in February, but no word on tariffs on China as yet. US citizenship will no longer be a birthright unless certain conditions are met. President Trump's executive order challenges decades of Supreme Court precedents, and the Constitution says children born in the United States to temporary visa holders or illegal entrants will not be considered Americans. The law comes into effect after 30 days and is likely to be challenged in courts. Indian equities go into a tailspin as uncertainty over President Trump's action towards Indian trade and industry and a slew of disappointing earnings reports weigh on sentiment. The market ends at a 6-month low after a highly volatile session. All sectoral indices end in the red. IT CEOs remain optimistic about 2025, but more so about 2026. TCS's Kritivasan tells CNBC-TV18 that double-digit growth is not improbable and can be achieved this year. Tech Mahindra's Mohit Joshi says that while 2025 will be a strong year, 2026 will see explosive growth as the company will not sacrifice margins for growth. Cognizant's Ravi Kumar says artificial intelligence will position IT services as a winner in the tech revolution. A big win for Voda Idea. Supreme Court dismisses the taxman's plea challenging a 1,600 crore rupee tax refund to the telecom company, cites an unexplained delay of 295 days by the tax department in challenging the High Court's relief to the company.
The
conversations continue here at Davos 2025, and joining us now is Vijay Shekhar Sharma of Paytm. Vijay, always a pleasure. Thanks so much for joining us. You've just come off your quarter, so the numbers are out there for public consumption for everyone, and someone's already trying to call you. Is that an analyst call that you're getting, Vijay, on your numbers? But what does the road ahead look like in terms of what you've been able to do and what you expect now to deliver?
First of all, thank you and congratulations. I just learned this is 20th year of yours in Davos.
Yes.
And obviously 25th year yourself. I see you in person. Well, the road ahead looks like that we have committed that next quarter we will be profitable, EBITDA before ESOP, meaning before the ESOP cost, which is also reducing incidentally. And we should be doing that. So we are working on the business which is now PAT profitable onwards. So after a couple of quarters, we should talk about PAT profitability, and I would go for that.
After a couple of quarters, so what does a couple of quarters mean?
A couple of quarters are a couple of quarters.
So you won't specify, is that 3, 4?
I learned that being a public company, one thing that you should know is that you should not have one information arbitration with other information. So what we've been talking, I'll be able to detail it further, just like we've said it.
Okay.
And we've said it that from this point onward, we in earning call also talked about that because our large cash pool gives us interest income, our two costs, which are capex sort of and lots of, let's say, other costs, will get sorted out. So we should head towards a PAT profitability soon.
In few quarters is what you have to say.
I have to say that.
So let's talk about what's happening on the UPI side of the market, Vijay. And despite the fact that you've got the NPCI approval, we've actually seen market share come off quite sharply. A 50% drop as far as your market share is concerned, now down to 5.5%.
It's bad.
Why is that?
It's very bad, and I can only say that. I mean, the situations and the reasons are public. I'll not like to repeat much of that, but I'd say that...
is it on account of the trust issues related to what happened with the bank?
No, we were not allowed to onboard at all for last... So our business was paused because of regulatory understanding and something that happened thereof. And post that it has come, I'm very happy that without any marketing spend, we are adding millions of customers. So I have a super brighter side ahead, just like this bright side in Davos right now. We all are surprised, yeah. And I can say that even though we've fall market share exists, but it is easily recoverable with the product.
How do you ensure that it becomes easily recoverable? What are you going to do?
I think the customers are coming in. It's a product gap. Deeper integration to UPI ecosystem and more merchant acquisition, which creates a flywheel, will bring our consumer back.
Okay.
We do have a marketing budget, but right now we are focused on product-led growth.
Okay, so give me specifics in terms of what we should expect and what do you hope your market share will be, say, in the next few quarters, from 5.5% currently.
It has to go up logically, and at the same point in time, look, there is a network effect. The big continues to remain bigger, and there is a little bit... if it was more number of features and services that we were able to add, we will be able to get the customers. So it is more about product features, more about integration on customers' life that will generate the customer back. It is the best part I can tell you is that our brand recall to the service recall to the features, if we are able to bring them back, it'll come back.
Okay, so that's as far as trying to reclaim market share is concerned, but also the NPCI has extended further that 30% limit as far as payment is concerned for another 2 years now. Where does that leave you?
Oh, my pay get to answer. I'm the receiving side of it, and we'll do as the market gives us opportunity to.
So do you believe that you will be given opportunities by the market, because they continue to be dominated by two players, and now even the restrictions on WhatsApp have been done away with?
Yeah, new incremental customers, we definitely have a lot of space and opportunity, and I do believe that India, because total number of customer base, etc., you see there is a large customer base still there. I remind of ourselves as remember that there was a time when Internet Explorer was dominating literally 80% market share because that every device would get developed. But now Mr. Pichai's product rules the world. It's a product and lots of other activities that it. So we'll have that kind of.
So PhonePe and Google Pay are the Internet Explorers. Who is going to? You are going to be the disruptor.
I think. Look, if you notice originally, we had large wallet market share and actually larger UPI market share than these guys, and then different level of regulatory actions and guidance is sort of made this in a way where we have reached here with the kind of number of things that we could have done. So now that we have started to do both those kind of things, so we'll go back. I mean, the understanding is that we do not know what it is. At the same point in time, we know what it is in a different way.
I'm sorry, I'm confused. Repeat that for me. And what does this mean? What does this mean in simple language?
We do not know what payments business is. We rather know what payment business is, and we'll do necessary.
Okay, so you know what the payments business is, to put it simply, and you will do what is necessary. What is necessary?
The customer needs a better product than what we have today. And we are out there committed to continuously bringing back those features back.
Okay, so let's talk about what are the other bets that you're likely to make now, and in the context of AI, etc. as well. When we talk about this product gap that you speak of, is that going to be something that you look at in order to plug those gaps?
I fundamentally believe that AI will be a huge game changer for India's economy at large. While it will bring a lot of necessary consumer experience like smartphone life that we live today, in future you can expect us to live as AI life. And I think that we will have our own play there, for sure. I mean, now how and what, this is what we are, I mean, there are a lot of, if you notice that our engineering cost, we have flattened up, all because that we now are adding more amount of AI features in the back. So, I mean, AI and the understanding nuances of the payment requirement of the customer, and then more payment features, is something that customers would prefer us over other. At the same point in time, the simplicity on the app that we are going to add, again the personalization thanks to AI again, will be a very interesting twist to see.
Well, speaking of interesting things to see, the payment aggregator license application, what's the status on that? Because you have refiled.
Yeah, that's right. So Government of India gave us PN3 approval. Yeah. And post that we have refiled, and I think regulator is taking the due process, and we are interacting the question answers and so on. So we are hopeful of that for sure. What
are the questions that have been asked so far?
I mean, they try to learn about your onboarding policies, values policies, and so on. So those kind of interactions continue to happen.
Let's make no bones about it. It's been a difficult period for you, and there has been a process of learning from that period as well. How different is the company internally in terms of processes, in terms of how you're going about things, to ensure that some of the mistakes of the past don't come back to haunt you?
I think earlier we would say this is a cool tech, we should push it forward. Now we'll say, oh, let's bother about what is the compliance on it and how does it come in any regulation that is there, does it touch or does it stay within that? So it's a compliance first approach versus a technology first, consumer first approach.
And that's been the big learning for you?
That's a big learning. I think in Rome you speak Roman.
So how have you changed things internally?
I started telling people that if it is not your bothering of compliance, like you yourself when you are making a product, then I'm not taking up, I'll get you out of the company. So we internally made literally everybody responsible for compliance instead of a single person called compliance officer. That's a big difference. Earlier it was like a one person who sort of was compliance officer, would give like a query, answer, suggestion, input. But now literally everybody understands what the compliance is. And we read the documents much more detailed and insightfully. I started telling everybody that if we all are climbing a mountain, then we all should know how to climb a mountain and live in this snow and so on. We should not have some single person to tell us. So in that sense, now it's a very normal way of life of working for us.
Compliance is a normal way of life today.
Absolutely.
That's the big change. But going back to the point that you made about in the next few quarters, you hope to be PAT profitable. Monthly transacting users, and I'm just looking at the numbers, that's also declined by nearly 100 million.
UPI users are monthly declining. So this decline is declined because of that reason. At the same point of time, I want to tell you, the revenue that we make is from only 6 or 7 lakh customers. On 100 million that you're quoting, the revenue that we make is only on 6 or 7 lakh customers. The profitable, the credit, the insurance, the wealth. So there is an opportunity of, if profit was to be chased, we should not bother about UPI market share or spending on that. It has a huge number of customer base which has stayed with us, which is very big. We should just continue to monetize them. That exists as a plan, or that exists as a head-down approach that we continue to do it. At the same point of time, we would not leave UPI market share on the plate not to be taken.
Not to be taken, and that is something that you're going to fight for.
100%.
So what's the headline for 2025 for Paytm?
It turned around so well.
turnaround, but it's a turnaround. It's a work in progress, though.
Yeah, that's right. I think in long term, this period would be looked at as that there was something that you had to learn and you learnt it well. Now we see today that it is so great out.
So you believe the turnaround, the cleanup will be done in 2025?
Oh, it's done in 2024. Now we are seeing the results. So that is why, if you notice, the number of things, the cost-wise, revenue-wise, focus-wise, number of things we pruned. I mean, it is tough for an entrepreneur to say that you'll sell this line item, that line item, but I was like, okay, no problem. Let's keep lesser things, focus on those, go deeper. Because India's opportunity has become deeper now. Earlier it was more horizontal, now it is deeper. And we decided that we will be payment intersecting with, let's say, financial services. So payment financial services is a very big market. All these other businesses, we were able to say, okay, focus on India, focus on this.
Well, Vijay, we wish you the very best of luck with 2025 and, hope that you get the things that you need to get done and look forward to being able to speak to you in a few quarters to understand if you've delivered on what you've just told us or not. Look forward to that. Thanks very much for joining us. That's Vijay Shekhar Sharma there, taking us through his plans for Paytm and how compliance has now become a way of life for the company. But we will take a break. There's a lot more coming up right here on CNBC-TV18. Don't go anywhere. We'll be joined by the Global CEO of Honeywell, Vimal Kapoor, right after this. It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18. From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated. The conversations continue here in Davos 2025, and it is my pleasure to welcome back on CNBC-TV18 the global CEO of Honeywell, Vimal Kapur. Vimal, what an absolute joy to have you back here with us. Let me start by asking you about the outlook for 2025 in the context of everything that's going on in the US with the Trump administration.
Yeah, I would say, the way companies like us look at 25, start of the year, it looks more like 24.
So more of the same?
More of the same. Economic cycle, inflation is easing, so that's a bit of a positive news. There is expectation interest rate will keep easing off, which drives more economic activity in US in particular. Hopefully the wars become less intense and that creates more opportunities for us. But I think overall, if you see GDP as an indicator of economic growth, projections for 2025 and 2024 are not too different. So we're expecting the year to be slightly better, but we'll have to see how things pan out over the next year.
What are you hearing from your clients? What are they telling you in terms of spends, in terms of investments? There was a pause on account of the elections. Now that is over and done with, and the fact that, global growth is expected at about 3.3%. What are you hearing from people at this point in time?
It depends on which country you go,
the
right?
US specifically?
US in particular, I would say the spend is much heavier on anything to do with AI and therefore data center and therefore utilities. I think that continues. We don't see any change in that. But if you pivot towards India and the manufacturing spend there just on electronics, on semiconductor manufacturing, we hear a lot more of that versus, traditional way. So I think the themes change where you go. But overall basis, I think I remain optimistic that world is going to spend more money in 25 versus 24.
Let's talk about India since you brought that up. What's the view, the Honeywell view on India, and how do you see the next few years playing out for you? You've got a large presence there, large operations there.
We continue to do well. I would say, always look at India into 3 buckets. The domestic business, our global capability center, and then sourcing from India. We have 3 different things. We've been there for like 40 years, so our maturity in each one of them is different. Our domestic business is doing extremely well. Can't be more pleased in terms of opportunities in India and how we're working in all the 3 segments we serve, aerospace, energy, and infrastructure, they're all relevant for India. So we do there naturally well. Our global operations are very mature. Overall, our headcount in India is more than 40,000 people, mostly engineers, so that gives you the scale we have. The new news I have is more around sourcing from India.
Okay.
We did not do that, a lot of it, because India had competition. But I think last 2 years, story of India on Made in India is actually holding.
Okay.
And companies like us believe now it's a place to seriously look at it from a sourcing perspective.
Okay.
Now, when I say sourcing, it's really looking at more complicated mechanical components which we use into our products. So aerospace, for example, is our largest segment. And we barely source anything from India, but we can do hundreds of millions of dollars. It means we have to do a supply-based development locally, and that's what we are doing right now. We're looking at a lot of companies and essentially growing an automotive supplier to an aerospace supplier. That's how these industries work. So I see that's the next way for companies like us. We do a lot of domestic business. We leverage a lot of global capability center and now really leverage it for global sourcing.
And I want to pick up on that idea of global sourcing and where you find yourselves today to create this ecosystem as far as catering to the aerospace business is concerned, because we've seen others do it. Boeing, Airbus, they do have
early days, I would say. If you do it at scale, the good news is the aerospace industry is very narrow. Boeing, Airbus are the airframers or OEMs. We are the tier 1 providers to them. All of us basically need the same supply base at the end of the day. So what we will develop will benefit our peers or our customers. So I think it's early innings at this point to look at some of the more complex products, certification process. And we've been working it since 2024. And looking with government opportunities on incentives and others to kind of accelerate this process.
So what's changed? You said that, the last 2 years...
capabilities are improving.
Okay.
I think the driver for that is as the defense sector emphasis has been growing,
yes,
domestically, that creates a supply base to serve that, and that supply base becomes attractive for us. So I think that whole made in India is becoming more relevant, and I think we can experience it.
And this focus on Indianization, which is a stated objective of the government.
Absolutely,
in the
it's
defense
win-win,
sector.
right?
Yeah.
So more we buy, more capable they'll become. They'll be able to serve defense sector even better. So I guess it's a win-win because we will drive more supply-based development, more productivity. They will learn from companies like us able to serve domestic industry better. So it's a great story which is building up.
On the first two buckets that you also spoke of, as far as the domestic side of the business is concerned, what are you hearing from clients at this point in time in terms of investments?
Positive, I would say, across the board, all the big customers we serve, anyone in the government sector, I think we clearly see a lot more investment in infrastructure segment.
The government's been doing the heavy lifting there.
Absolutely, building up. We clearly see, for example, big build out of hospitals, and we do automation system for hospitals. I mean, clearly we can see it's probably way bigger than what it used to be 3 or 4 years back, or build out of data center is really definitely picking up. Or investment in energy sector is growing even more, or the electronics segment, new investments coming. So yeah, absolutely. I think we absolutely see rate of change has grown more compared to what it was. And I don't see any reason companies like us should not grow double-digit here for next several years.
And double-digit growth in India, is it still your fastest growing market?
It is, yeah, one of our fastest growing market. Our base is very large. We probably, we want to be $1 billion domestic revenue in 2025. Let's see if we can achieve that.
Well, that's a milestone that you've set for yourself. So $1 billion in the domestic business by 2025.
Yeah, I think we should have a shot to get that. And I think with every momentum of how the activity is going, I think we should be able to accomplish that.
What about the other growth regions that Honeywell is focused on outside of India? How are they doing?
I would say, the activity in Middle East in particular continues to be strong. Saudi Arabia is differentiating itself as a market. UAE, of course, we were always present in a big way. Qatar. So I think the Middle East whole energy segment, investments in that are quite visible. And given our presence in that, it always makes us a very relevant player for those countries.
You've laid out a transition roadmap of how you see Honeywell evolving over the next few years. I'll ask you this in the context of what we're seeing with the advent of AI, generative AI in specific, etc. How much of that are you already adopting, incorporating into what you're doing at Honeywell? And what do you believe that could lead to in terms of efficiencies, cost savings, productivity uplifts? I mean, what are the assumptions that you're working with?
So to me, AI has a two-dimensional context. One is how do we use it for our own operation? And second is how we use AI into our products, right? Because you have to think it from both dimensions. We have been early adopter of AI into our operations for product development, product testing, customer service operation, HR operation. And I would say that what you read is generally, positive. If companies have a good processes and good data, definitely AI can help you drive more productivity, make your people more smarter. I actually look at it as more of a skill shortage issue.
Okay.
Because generally the segments we serve, now pivoting to the other part of my story and the customer, our customers generally find challenges to have skilled people to run their operations, maintaining the equipment, operating the plants, buildings, others. So one of the way we are thinking about is how we make our products simpler to operate, simpler to maintain by embedding AI into it. So making our products also autonomous to the extent possible. And that journey is going to help us to generate new revenue stream by architecting our products.
Okay.
And company like us, which grew as an automation company, we are also moving towards autonomy. And autonomy for us is not that things will become fully automated, but making people more empowered. You can use slightly lesser skilled people job class change a little bit. So I think we really get excited on AI use for our customer base.
So from this move from automation to autonomy, what does that then mean in terms of the number of people that you will have to employ, the kinds of people that you will have to employ as well in the future?
It will be more around you're able to employ people with a lower skill for a job which required higher skill. Essentially, it is making more labor pool more available. Let's take, say, we sell an equipment to a customer and typically we said, you need 10-year experience to run it.
Yeah.
But if we embed AI into a product and it can guide people how to maintain something, how to operate something, that experience level may go down to 3 to 4 years versus 10 years. So you still need that human, because human judgment in the industrial products we make will always be required. But the question is where the human judgment is required, and we want to basically eliminate repetitive work. So humans become more valuable for the work we are doing. So I don't see, at least in the segments we serve, this is a labor elimination. To me, it's a revenue growth opportunity. Because if people are not available, it's going to impact revenue at the end of the day. Or skilled people are not there, you can't run your operations. That's a revenue problem. That's not a, productivity opportunity is there, but not. That's not such a substantial opportunity for industrial customers.
But what are you seeing in terms of adoption, at the client end?
I think people want to adopt it. I have not met anybody to say we don't want to do it, but like any other new concept, the adoption rate will scale once the proof points become more visible. So I think some segments we are clearly seeing adoption rates growing. So there's no resistance to adopt.
But everyone's weighing the ROI.
Weighing the ROI, want to make sure that they clearly understand the use cases and not very kind of running ahead of the curve, which I understand. But I would clearly see that if I have to see adoption of AI in industrial world we serve, like energy sector, buildings, aerospace, it will grow in a big way in 2025. I will say 25 is the year of AI for the industrial sector now. It's been in consumer sector, for probably 2 years, 18 months. We have been a bit of behind. We have to bring in the forefront on how we adopt it in industry.
And you believe that breakout moment is likely in 2025?
Because we are building more offerings. We are making it more relevant right now for our customers. So I think the excitement is coming into, more products are also becoming available. So I think all the things are coming together.
So given the fact that you anticipate or you expect or you hope for this being a breakout year as far as industrial AI is concerned, what could that potentially mean in terms of additional revenue for you?
That for us is that's a basis for us to continue to drive our growth, right? Because we need innovation into our offerings, so this is one of the innovation. So we do expect, to maintain our growth rates globally in 25 as we delivered in 24.
And feel confident about that at this point in time with the visibility that you have?
Yeah, I mean, we will do our earnings guide in a couple of weeks from now, so we'll share more details.
Yes. So this is the silent period in that sense. So you can't talk too much about numbers. But finally, it's been a little over a year for you in office in this role. What's been the big takeaway so far, and what are the things that you would like to get done in this year?
What has excited me is in my job is that how we turn a company of our size and scale to be more of a growth-oriented company. Can a large company grow at a high rate, 2 times GDP constantly? It's not easy. And that's what really excites me, to change the growth culture, look at new innovation, adoption of AI, energy transition, all these technologies, how it enable growth, and repurposing Honeywell portfolio through acquisitions, building more new products which enable that. That's what has been exciting me. So turning the company more outward looking versus more inward efficiency looking, and that change is what I'm really driving.
So M&A, likely growth opportunity in 2025?
We have been very active last year. We did 4 acquisitions in 2024. We expect to maintain momentum. Now you can't count a number, it'll be 2 or 4 or 3, but we continue to want to make addition. The reason is that we want to make our portfolio more growth oriented. Therefore, it's imperative for us to look for options where we are under-penetrated and want to make more additions into our portfolio.
So the headline for 2025 for Honeywell?
Headline for 2025 for Honeywell would be, I would say, moving from automation to autonomy. We enabling that for the industrial sector, that autonomy becomes a reality. I'm really passionate about it.
Well, passionate about moving from automation to autonomy, and you believe that it could be the breakout moment for industrial AI in 2025. Growth looks strong across the markets that they operate in, particularly in India, and the big headline that Honeywell is going to be looking at global sourcing from India in a big way and are moving towards setting up that supply base. Vimal, always a pleasure. Appreciate you joining us, and we look forward to seeing you in India. Thank you very much for your time. We will take a break, but the conversations continue here at Davos 2025. Don't go anywhere. We're back in a moment with more. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
We own a bunch of these platform companies. We really have been in this space now for a while, and we continue to like it. We clearly believe that these are going to remain the wealth creators and the winners for a very, very long period of time. In between, there could be challenges for a quarter or two as companies essentially either accelerate or tweak their growth strategies. There will be competitive intensity, and in some of the cases, maybe some of the growth strategies may not work for a short while. We've seen, for example, like what the Zomato management itself has said, and we own the stock. Itself said that look, they saw a similar thing playing out in the case of food delivery, where they went in aggressively and then had to pull back later. It's quite possible that quick commerce will also witness a similar situation. So it's honestly not going to be for the faint-hearted or for the more short-term oriented investors. So if you're looking at the next 1 or 2 quarters or maybe 4 quarters, it may not be the right place to be. But if you have a 3-year, 5-year, or 10-year view on this whole digitization opportunity, we have to use these weaknesses to essentially continue to buy and load up on the space.
I think we committed a few years ago that we would invest 250 million. We have made that investment. You are seeing the products, you're seeing the growth. There are more products this year, and with that we'll share more capex plans as well. We're a global company, we cater to so many markets, and we will further that in EVs as well. We have launched iQube in some markets outside India. The electric scooter for BMW is designed, developed by us, and is selling in European markets.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray.
Hello and welcome to Commodity Champions. I'm Anisha Gupta, and the Finance Minister Nirmala Sitharaman is set to present the Union Budget on February 1st. The agriculture sector, which contributes almost 17% to India's GDP, is keeping a keen watch on budget reforms, and that could help boost productivity and exports and increase rural income. The budget allocations for the sector has grown at a compounded annual growth rate of 5.4% since FY20. For FY25, the outlay for Agriculture and Farmers Welfare Department was 1.32 lakh crore rupees. This was slightly more than the revised budget of 1.27 lakh crores for FY24. Will the budget have any game-changing reforms for this crucial sector? What are the other expectations of the sectors? Let's talk about cotton first. And joining us for this is Atul Ganatra. He's president at Cotton Association of India. Mr. Ganatra, hi, thank you so much for joining us. Well, cotton and textile are important pillars when it comes to agriculture as a space. And we've seen some problems in 2024. From this budget 2025, especially when it comes to cotton, whether it is about import duty, whether it is about the PLI scheme or the job employment, what is your sense? What are you anticipating from this budget?
Yeah. Good evening, Manisha ji. See, as you rightly said, we need from Cotton Association of India, we have 3 demands in upcoming budget from our cotton and textile. One is Indian cotton yield is around 400 kg per hectare against world average yield of 800 kg. To increase our cotton yield, we need sufficient fund in upcoming budget to bring new seed technology. The new seed technology is given to our farmer, then cost of growing cotton will reduced by 50%, and at the same time our cotton production can increase to 500 lakh bales from 300 lakh bales. And our farmers' income also will be double, as our Prime Minister aim is to increase our farmers' income. This will help to increase our farmers' income also. Number two, our demand is on import of cotton. Due to this duty, our textile industry is not able to import cheap rate cotton available in the world market. We want our textile industry to go and compete, grow and compete with China and Bangladesh, then this import duty should be removed from immediate effect.
Okay.
This demand from Finance Ministry is standing from last 3 years. We are demanding, for so far there is no relief given in the duty. At least from Cotton Association of India, we said government want to protect farmer, no problem. We are also want farmers to be happy. So main season of cotton coming is from 1st October to 31st March. 90% arrivals will be over. So second half from 1st April to 30th September also, if this relief is given, it will have to the textile industry to borrow money, Saji.
Sure.
And one more demand is there. If there is some bigger subsidies given to the farmer for drip irrigation, then Indian cotton yield will increase. Drip irrigation along with fertilization high density plant will double the yield. So this also is our demand to give subsidy on the drip irrigation. And last and final, Manisaji, country like Brazil is getting yield of cotton 2,400 kg, whereas our yield is 400 kg. So our suggestion will be to the government to appoint one committee and send a committee to the Brazil to see how their farmers are getting 6 times yield than us. And we suggest in this committee they should include CCI, CAI, Textile Ministry, some officer, Agriculture Minister officers. So if they go and if we go out only, we will come to know how their farmers are getting 6 times yield than us. So this is also one of the suggestion to appoint one committee, and they should be sent to Brazil or Australia to see why their farmers are getting 5 times, 6 times yield than us.
Oh, well, absolutely. Those numbers are baffling. While India gets just about 400 kgs per hectare, Brazil gets 2,400 kgs per yield per hectare. So there clearly is something that the government perhaps should move in that sense. And yield in any case has been an issue across various commodities there. Mr. Ganatra, thank you so much for joining in and laying out your pointers on what you are looking forward from the Finance Minister from this budget this time around. But moving from cotton, let's shift focus to wheat now. And 2024 has been volatile in sense of wheat. We've seen prices gain. The OMSS is something that we've been keeping an eye on. But within this sector as well, what really is on the wish list? Mr. Ajay Goyal, Chairman of Wheat Product Promotion Society, is with us now to explain exactly that. Mr. Goyal, thank you so much for joining in. It's an important staple crop. The yields are issue here as well. But what is it that comes to your mind should be across in this budget that would support the economy?
Yeah, so I think just like cotton, wheat also has an issue with yield, and we are just half of the world. The other countries, we hardly are able to get about 3,500 kgs per hectare. And the best part is that, wheat is grown, or most of the commodities globally are grown in the least populous regions of the country. Whereas in India, it's the inverse. Here, most of the wheat crop is grown in the highly populous regions of the country. So we are not going to be able to add more acreages. We have to concentrate on yield so that, the productivity goes up. the past few years, we have seen productivity actually, as a matter of fact, come down, and the growth rate has almost stagnated as far as wheat is concerned. And as far as the budget expectations are concerned, of course, higher allocation for agriculture. The problems with Indian agriculture are well known. It's all about fragmented land holdings and lower productivity, poor soil conditions, the vagaries of the weather. So besides that, there is a vibrant food processing industry that is there in the country, and that needs to be given encouragement. One of the problems is post-harvest, we don't have, storage, transportation, which is modern. We still continue with the age-old practices of bagging it in the mandis, storing it in bags. This is all cost inefficient. We hope the government will pay some attention to this and look at, silos and bulk storage and methodology so that wastage is reduced, costs come down, the farmer benefits, the consumer benefits. And as far as government taxes are concerned, most food, processed food, even, the first stage processed foods like wheat being converted to atta and various other products, when packed in 25 kg or below for a consumer, attract a 5% GST. And so these are all basic commodities and basic items. So we feel that this is unfair for people who are spending a lot of time, effort in, adding to the value chain of agriculture, bringing the products to the consumer directly. And this 5% is quite a burden for a business which is a 1-2% turnover sort of business. And the entire burden of this goes on the consumer, and we are not able to grow well because of this tax. Also, I think the government should take a call as far as import and export is concerned. It should not be, a knee-jerk reaction all the time. A bit of import won't harm the economy, won't harm the farmer. It will benefit the consumer and benefit the processing industry at large. Because as wheat prices keep going up, it becomes unaffordable for most of the population, and then there is a shift to other cereals and things like that. Whereas globally, wheat is about 30 to 40% cheaper than Indian wheat. So we are hopeful that the government will take a little medium to, if not a long-term view on this as well.
Yeah, all right. Mr. Goyal, while you've listed out everything that wheat as a sector would be looking at, but you also talked about the processing industry. Food processing is something that we've almost heard about in every budget. Are you looking at topping up of those schemes, or would you want something new introduced this time around?
So I guess some sort of continued support is required for the food processing sector. And this is the sector which can change the economics of agriculture. If more and more food is processed quickly and, we are able to preserve it and add value, the entire agriculture dynamics would look different. So I think more and more parks, more and more, cold chain, more and more storage, distribution. If the government encourages that, definitely it will, help agriculture productivity.
Mr. Goyal, thank you so much for joining us and putting it in very comprehensive pointers in sense of what the wheat and the wheat product industry really is looking forward to from this budget. Well, we've talked to you about on what cotton and textile and wheat and products are looking for from the budget. But with that, it's time for a short break. But don't go anywhere. When we come back, we'll talk about expectations of the dry fruit and the edible oil sectors on the other side.
The 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
And we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be free to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into.
Welcome back, and joining us now is Mr. D.N. Pathak. He's ED at the Soybean Processor Association of India. Mr. Pathak, thank you for joining in. And for a sector which is import dependent to the tune of 55 to 60%, I'm assuming we'll have a lot to ask from the finance minister this time.
Well, we have very little to ask. In fact, the sector is reeling under great stress, and we find that we are really under threat. For the first time in the last 15 years, the soybean prices have been ruling below the MSP, and quite substantially, about 700 rupees, 600 to 700 rupees, which is a matter of great concern, because the farmer, if he doesn't get the proper price, then the whole economics goes away, and we are afraid that he may not be interested in sowing soybean next year. And this is a crop which we do need, because there is a huge demand of protein, which is being met by soybean meal. So our first and foremost, what we want is that this thing should be sorted out immediately, that the farmer gets the proper price and the industry can run. There are various issues. One of them is the DDGS used in soybean meal. A bigger issue is the export is not happening because we are outpriced, basically because of the price, and a lot of logistics problems. We have the logistic cost in India is very high. Then we are exporting taxes and duties. The road tax rate is just 2%, while the actual outgo on remission on taxes and duties is about 8 to 9%. And we have given the data on that. But then, of course, the government has its own priorities and the money allocation and all. How this can be sorted out long term, of course, the productivity increase is the only way to do this, which is not happening now, because we are only producing 1,000 kilos per hectare, while the Brazil or Argentina produce 3 tons. So competing with them is obviously is going to be impossible unless we increase our productivity by at least by double. So first, I would say that the allocation for the Oilseed Development Fund, which is at 2,000 crores a year, should be increased to 5,000 crores a year for the next 5-6 years, because that will make a huge dent. and we should look at the duties properly and align them with the MSP at least. And whatever money is received from the duty portion can be plowed back into oilseed productivity enhancement. So that's one thing. And export incentives certainly should be increased, and logistic or the railway freight is too high. I mean, we pay a huge amount of freight sometimes from the factory to the port,
right?
And other charges which are very high. So that's another thing. Another thing which is very important and is not being done as yet is the food use of soybean. It is basically a protein crop, not a feed, not an oil crop. And soybean protein is the best, most economical protein. We use only 10% right now for food. If this can be increased to 30%, the whole lot of problems will be solved of the farmers, of the industry, of everybody, because then we will do value addition. The farmer will get the right price. The industry will be able to run. We will not be dependent on exports then. We can use all the soybean in our own country. So like Roj Khao Ande, Sunday, Monday, something like that is required to be done like what the government did for millets. So why not declare the 2026 as year of the soybean and then give some massive outlay for creating awareness, then upgrading the industry to make value-added items and food items. That's something which will really help the industry. So from our side, we don't have too many demands, but I think this one is quite a big one.
It is. And I remember the last conversation that we had, Mr. Pathak, you talked about the derivative market being opened as well with the kind of volatile moves. That is something that's missing. Would you put that request forth as well?
Where we are on derivatives, we are of the view that the edible oil, which we import more than 60%, should certainly be, futures should be opened because risk management is certainly required there. For soybean, we are still of the view that we don't require it in soybean because that's just about 2% of the, and there's no market depth. So we are consistently saying that open it for soybean, all our edible oils, and keep it closed for soybeans.
Point taken. So you are holding your stand that the soybean derivatives should not be open, but for the other edible oils, it should be open. So, well, that consistency is something that we've been looking for. But thank you so much for joining in, Mr. Pathak, and putting out that list on what the industry really needs right now, and hoping that the finance minister would have accounted for some of that. Well, moving on from edible oil, and let's discuss the dry fruit as a sector as well, because this is one growing area. India is looking at stronger consumption, not just as a dry fruit, but dry fruit as processed, value-added food as well. Sameer Bhanushali is Managing Director, Ashapura Agrochem, and he joins us now with his sense on what the sector really is looking forward to in sense of a demand or request from the budget. Sameer, hi, good to have you. Let's start with the import part first. And we understand that there's a huge amount of tariffs and import duties in many of these dry fruits. Is that something you think the finance minister would look at?
Yeah, hi, Manisha. Yes, Manisha, dry fruits has always been a very niche segment, a rich man's diet, so it's always, perceived that it's okay if the dry fruits are expensive. But I think post-COVID, things have changed. People have become more health conscious and people are wanting to consume more and more healthy food, and dry fruit is right at the top of the healthy food list. The consumption has been growing at an average rate of 15 to 20% each year. And today, India is the largest importer of most of the dry fruits globally. Yes, when you look at the tariff structure, some of the products like walnuts are heavily tariffed, upward of 100% duties. And I think that's a pretty high duty structure to have. It makes the product very expensive for the end consumer to consume. Hence, it's been the long-standing demand of the industry to rationalize this and bring it much lower so that people can buy walnuts at a much affordable price. We understand the rationale behind this was mainly to protect the Indian farmers who grow walnuts. But if you look at the landscape in the last 15 years, we've from being a net exporter of walnuts, we are now a net importer of walnuts, and 80% of India's walnut needs now come as imported walnuts. So, that's one big request that the industry has with the finance ministry, that if they can look into walnut duty reduction. Along with that, there are other products as well which have high tariffs, and we would really want that to be rationalized to be able to provide, affordable dry fruits to the consumers.
Sure. Samir, apart from that, when it comes to infrastructure within India and also production within India, what are you looking forward to?
Yeah, as I just mentioned, right, I think walnuts, raisins, and cashews, these three dry fruits have been always been produced in India. And if you look at, again, if you look at the landscape, cashew, we were the net exporters of cashew for the longest time. Today, again, we are importing almost 80% of our cashew needs. So I think the government really needs to look into this sector, which is a high value generating sector. You know, 1,000 rupee or 800 rupee kg product versus a 40 rupee kg product that today a lot of our farmers are growing, and hence the farm economics never really add up, right? If the government can push these commodities, which can fetch, a much higher value, the farmers will make a lot of money, and the government will save a lot of foreign exchange by not importing these products and procuring them locally. So it's a win-win for both. That's on the production side of the crops. But when you look at the processing, so because this is not like a big industry like a wheat or a soya bean, it's smaller in terms of volume handling that we do. There are a lot of small micro industries and food processing parks that we operate at. So the investments are small, but the revenue generation and the employment generation from this sector is massive, especially female employment. When you look at the cashew industry, it generates a lot of female employment in tier 2, tier 3, and even villages.
Okay.
So that's something that the government should really look into and come up with a production-linked incentive in this sector. So far, it's not been done because we've not been big enough. But I think now we are decent size, plus we are healthy.
And growing at a very strong number as well.
Absolutely. And to have a Swasth India, I think the government should look at healthier products.
Healthier products there. Well, absolutely. Whether it's about infrastructure, import duties, and performance-linked incentives, that is something that the dry food sector also is looking forward to. Thank you so much, Samir, for joining in and laying those points out for us. But with that, it's wrap on this special edition of Commodity Champions. Thank you for watching.
The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country, sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend.
Hello and welcome to this special broadcast. I'm Parikshit Luthra. It's been a busy week as far as geopolitics is concerned. Displaced Palestinians are returning to find their homes reduced to rubble after the ceasefire. Authorities have reported that over 130 dead bodies are found in Rafah since the ceasefire began. Reports of violence by Israeli settlers in the West Bank have also emerged. The United Nations said that over 900 humanitarian aid trucks entered the war-stricken region on Monday. The ceasefire deal requires 608 trucks to be allowed in Gaza every day. After taking oath as the President of the United States, Trump expressed doubts over the temporary ceasefire. Trump said, and I quote, "It is their war, not ours. I'm not confident of the ceasefire." He termed the region as a massive demolition site but suggested rebuilding it. As uncertainty looms over the ceasefire deal, questions also emerge over Trump's role in the conflict going forward. To answer some of these questions, we are joined by Reuven Azar, Israel Ambassador to India. Ambassador, thank you very much for being with us.
Thank you, Parikshit, for hosting.
Over the last 2 years, we had seen a certain amount of consistency towards the Middle East as far as the US administration was concerned. Now you've got Trump in the White House. The cabinet has been sworn in as well. What kind of changes do you expect in US approach towards the Middle East, especially the war with Hamas?
Well, what we've seen from the incoming Trump administration is a strong stance against radicalism. So we are optimistic we will be able to cooperate and work with this administration to fight radicalism more persistently and being able that way to restore peace in our region.
Right. Speaking about the ceasefire that has been agreed upon, what role did President Trump actually play behind the scenes? What did his cabinet really do to reach this point?
The outgoing and the incoming administration have been working together with Israel to get this deal. We are at a very important juncture. From this juncture in which we are getting back 33 hostages, we have a path towards stability. If we get into a situation that Hamas is not allowed to rearm and regroup and is removed from power in the Gaza Strip, if Hamas is stubborn to remain in power and restore the capability to attack Israel, then that's the time when we will have to make our decision to renew fighting.
All right. So currently we are in phase 1. What is the benchmark of success at the end of phase 1 to implement a ceasefire deal for phase 2 and phase 3?
Well, first of all, Hamas has to stick to the path. It means that every few days we have to get hostages back, that we will renew negotiations in a few days to try and see if we can advance to the next path. But what was clear from the Israeli standpoint is that Israel is not going to withdraw from the Gaza Strip unless we have a path implemented that serves
American borders, or more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane that took place many months ago. Or more recently, Los Angeles, where we are watching fires still tragically burn. From weeks ago, without even a token of defense, they're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. but we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any country anywhere in the world. And we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting today, and it will change very quickly. My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Right. Speaking about the ceasefire that has been agreed upon, what role did President Trump actually play behind the scenes? What did his cabinet really do to reach this point?
The outgoing and the incoming administration have been working together with Israel to get this deal. We are at a very important juncture. From this juncture, in which we are getting back 33 hostages, we have a path towards stability. If we get into a situation that Hamas is not allowed to rearm and regroup and is removed from power in the Gaza Strip, if Hamas is stubborn to remain in power and restore the capability to attack Israel, then that's the time when we will have to make our decision to renew fighting.
All right. So currently we are in phase 1. What is the benchmark of success at the end of phase 1 to implement a ceasefire deal for phase 2 and phase 3?
Well, first of all, Hamas has to stick to the path. It means that every few days we have to get hostages back, that we will renew negotiations in a few days to try and see if we can advance to the next path. But what was clear from the Israeli standpoint is that Israel is not going to withdraw from the Gaza Strip unless we have a path implemented that serves the goals of our cabinet, which mean to bring all our hostages back and make sure that Hamas doesn't rearm and regroup and constitutes a menace against Israel in the future.
Right. What kind of solution on the ground would now be agreeable to Israel? The world has spoken about a two-state solution for many years now. Countries have come out to recognize Palestine in the last few months. At this juncture, what kind of a deal, what kind of governing authority for Gaza would be acceptable to you?
Well, it shouldn't be a terror state, that's for sure. Nobody in the world is going to cooperate. Nobody that supports the Palestinian state will cooperate with the terror state, because the meaning of a terror state is absolute permanent instability. Israel will not live with a terror state that will continue seeking Israel's destruction. And therefore, we have to find partners in the Palestinian constituency and outside, in the international community, that will partner with us to build a better future for Palestinians. Even the Palestinians in Gaza, they deserve stability. They deserve being free from this terror regime that took over their lives for the last 18 years. So we have to find a path for that. Either we find it diplomatically or we have to seek it militarily.
Right. When it comes to President Trump, what kind of support are you expecting from him in the days to come to bring peace in Gaza and also achieve Israel's objectives vis-a-vis the Hamas?
Well, we are optimistic that the American administration will give us all the legitimacy and the tools necessary to win this war over terrorists.
Right. When it comes to reviving talks on the IMEC corridor, are you hopeful that those talks would be revived soon?
Well, it depends on the countries that are being geographically part of the corridor. So we'll have to be patient. We'll have to see whether they want to engage. I think that they will be willing to engage if we find stability and we reach a situation in which we have a permanent ceasefire and that people feel secure in advancing economic projects. We can have economic projects if we have a security foundation and we have a political foundation, then we can have an economic foundation.
Right. Now, there has always been this threat of larger escalation in the Middle East, especially a direct confrontation between Israel and Iran. Are we now far away with that now as we start 2025 and the new administration takes place in the US? Do you feel that we've moved far ahead from that possibility of an all-out war in the Middle East?
First of all, we have moved somewhat ahead because thanks to the Israeli effective military action against Hezbollah and against Hamas and against Iran, the Iranians are deterred from attacking us at this point. But we have to be very cautious because Iran is still striving to acquire nuclear weapons. We are determined to prevent that. And it depends also in the approach of the international community. If the Iranians are going to be pressured to change course, then the chances of escalation are going to diminish.
Right. How happy or how satisfied is the Israeli government with the progress on the ceasefire so far?
Well, we have a difficult dilemma in the Gaza Strip because we have to balance between the need and the aim of bringing back the hostages and the need to militarily defeat Hamas and prevent them from rearming and regrouping. So from time to time, we have to strike that balance. So that's why we were stubborn not to agree to surrender to the Hamas demands to end the war, not to surrender to the what Hamas required is to release only very few hostages, and for Israel to withdraw from the border area between Gaza and Egypt. So after they have agreed to our demands, then we could advance to this juncture of the first phase of the ceasefire. And we are keen to abide by the agreement so we can bring back the hostages and we give a chance to the other side to understand that they were defeated and they have to relinquish power in the Gaza Strip and give a chance to the Palestinian people to live normally.
Right. So does this mean that the two-state solution is no longer acceptable to Israel?
Well, look, we have to speak in realistic terms. The situation right now is that the terrorist organization is still there in the Gaza Strip. So are we ready to change that situation? Is there a viable Palestinian leadership that is pragmatic enough and is efficient enough to gain the confidence of their own people and of the Israelis in engaging with Israel in the peace negotiation, that right now it's not existent. So let's see whether we can create those conditions, and then the issue of state or no state can be debated in a more normal way.
Essentially, whatever situation, political situation emerges after the ceasefire, it has to be minus the Hamas in every way.
Absolutely.
Right. My final question on India. How have India and Israel ties progressed in the last few months? Have they taken a backseat? Have they taken a setback because of the war in the Middle East right now, or the ties have only grown?
Well, bilaterally, we are full steam ahead. We had recently visits of senior officials from Israel, Minister of Transportation and Minister of Economy. We are having a huge delegation, business delegation, coming up in February to India. Many Israelis have rediscovered India. They have seen the immense amount of support we got, not only from the government that defended our right for self-defense, but also from the Indian people. They know the Indians are open for cooperation, and they are coming in droves. So I am very optimistic that 2025 will be a great year for our bilateral relationship.
And if I could just ask one direct question, do you expect Donald Trump to be able to bring these wars in the Middle East and Ukraine to an end?
Well, it's a good question. We have to wait and see. We will support the United States, as we always did, in their quest to promote peace in the world.
All right. Thank you very much, Ambassador,
Thank you.
for speaking to us. Wonderful having you in our studio.
Thank you.
Republicans are actually becoming the mainstream party, and which is unheard of, especially, I shouldn't say this, for a Republican. The Republicans are actually becoming the mainstream party, and very important.
Welcome to our special coverage of Davos 2025. We're coming to you from the Cognizant Chalet here on the promenade, and joining us now is the CEO, Ravi Kumar. Ravi, always a pleasure. Thanks very much for joining us here in Davos again. Let me start by asking you about what the outlook is for 2025, given the fact that we now have a new president in the White House who's promised tariffs and other actions that we're still fully going to understand the impact of. What does the outlook for 2025 look like?
Shireen, we are in a blackout period, so I'll tell you a little bit about where we are, but not covering the numbers of Cognizant or anything related to it. Certainly, when we met last time in November, the uncertainty was much higher. Right now, the election is off.
Yes.
In some ways, there is more certainty about things around us. So I'm hoping there's going to be less regulation that will help financial services. I'm hoping there's going to be a significant relook at taxes. So all of it which the Trump administration has spoken about. So it's in general good for businesses. So let's see how it goes. I mean, the economy is on a high in the U.S. with just 2%, less than 2% unemployment, less than 3% inflation. But
and consumer confidence.
Consumer confidence is pretty good. So I'm very, very hopeful that things are going to look up.
In terms of spends at this point in time, and again, without talking specifics, what's the outlook in terms of spending now that, some of the big ticket events are out of the way? We had spoken about how there was a pause, but is there now a pickup?
I mentioned this before. We are in this unique phase of navigation where there's a period of change and a period of uncertainty. And the uncertainty is a little bit now, in some ways, calming down. But the period of change around us is significant. I mean, the AI wave is just, the opportunity is just out of the world for enterprises. And the kind of work which needs to be done to take the raw power of AI and make it enterprise grade there's so much heavy lift needed that I'm excited about the future of tech services. I'm excited about India. I mean, India has a very significant role to play. So I'm excited about the fact that Cognizant has this unique confluence of having a big presence in India and leverage upon it. And equally, the future of tech services. There are CEOs who will tell you that AI will actually make tech services a loser, and there's some who will tell you that it will be a winner. I'm a big believer that it is going to be a winner. And that's why I'm excited about the future of IT services.
Well, let's talk about the future of IT services, because how do you see the model changing in an AI world? You walk down this promenade and everyone has an AI slogan, including you. And I just met with your AI head. And, ChatGPT provided that breakout moment in terms of mainstreaming AI. But from an IT services perspective, how does it change your operating model?
So, Shireen, I see this with three vectors. The first vector is the work we do. I mean, writing software and software development cycles. That's going to be run by machines. And because it's going to be run by machines, people think, what are people going to do if software is going to be written by machines? Uniquely, writing code is one of the biggest use cases for AI. So 30% of my code is written by machines. So what are people going to do? So on that vector, I believe the elasticity for spend for technology is so high that every time something like this has happened, we have actually seen more technology spent, the backlog getting cleared, and more importantly, we have tech debt on balance sheets which will actually come out. That's the first vector. The second vector is the innovation vector, where all the agentification which is going to happen will need heavy lift. Your data has to be in place, your cloud has to be modernized, you have to run the last mile to improve the output, because the output is coming from transformer technologies. You have to make it responsible, so you have to make, because the output is black box, you have to make it explainable, you have to make it traceable, you have to govern it. All of that is a heavy lift. And then finally you have to agentify it. All that is a heavy lift. So I think there's a unique opportunity. It's net new spend which enterprises are going to do. That's my second vector. The third vector is a multiplier, and that's the biggest. There are service pools around us which wasn't our addressable spend, and that will be our addressable spend now in the future. Let me give you an example. Say if you are implementing Salesforce implementation will probably be written by machines. The software is going to be written by, the software development cycles are going to be owned by machines. But imagine what happened before. For $1 of software, $2 of services was implemented. Right now, we have this unique opportunity where the service pools around Salesforce, suppose you take Salesforce as a function, look at the service pools. People are inputting sales leads, people are writing forecasts, people are taking out analytics, people are keep punching in leads. All of that was not available for companies like us. It was insourced, it was actually done by people. Right now, the art of taking all that service pools and translating that to software. So I call it service as a software versus software as a service. And that service as a software is going to be a force multiplier. If the world we were in was X, that will be 5 to 6 times. In every function in the company, there was unstructured data, which can now be read by LLMs, and you could create insights and generate a lot of momentum. Let's take recruiting as a function. Recruiting as a function, if I had to do it in my old way, I would probably implement Workday or implement Oracle or implement SAP. That was my universe. Right now, my universe is very different. My universe is I can take over that function and analytically use AI to look at services which weren't our addressable pool, to look at services which humans didn't do because they couldn't capture the unstructured data. So the opportunity now on the third vector of taking services and translating them to software, I think is probably the biggest opportunity. So our addressable spend is not tech spend anymore. Okay. Our addressable spend is operation spend of enterprises, which is a much bigger
which is new pie, you're saying.
Much bigger pie. And that's why I'm kind of excited about what the possibilities are.
You know, you talked about how 30% of the software that's being coded is being done by machines at this point in time at Cognizant. The last time we spoke, you also talked about how you're doing about 750 AI-related projects. What's the update on that front?
I mean, you know, last quarter we spoke about 1,000 in my earnings. We are hoping some of those go into downstream. And as they go into downstream, we go to the second vector, which is agentify the work around it. And once you agentify it, you take the service pools around it and capture it. So I'm excited about it. So it is a force multiplier. Every quarter you're going to see the numbers go up.
Let's talk about why you're excited about India. And by the way, congratulations on winning the Pravasi Bharati Award as well. You were in India for a day for the same. But why are you excited about India from an AI perspective?
I mean, India is, you know, it's positioned in such a unique way. And I'm going to push this into 4 broad things. First, look at the demographics. 25% of the incremental workforce in the next decade is going to come from India. India is going to be the office of the world. You and I discussed about it. And in fact, with this agentification, you see these new service pools, specialized work outside of technology. And already the GCCs are doing it. I mean, one third of the exports in India today is from GCCs. The GCCs are already in that process. So you're going to see a lot of new specialized work coming in. So that's a big game changer. I would believe the 5 million IT professionals which work in India is probably going to be 10 million by 2030. Let's take the second big thing which I'm excited about in India. India's digital stack, the India stack, is transaction-based, population-grade, and the amount of data which is there, I mean, that's the foundation on how you build AI models. So that unique opportunity to digitize and diffuse so efficiently, even to rural India, to a farmer in rural India, I think is going to be fascinating. That's the second piece which I am excited about. The third piece, I would say, is the energy transition which is going to go through in India, is going through at a time when the combination of per capita increase of consumption and new sources are going to come together. That's going to be a ton of money which is going to be spent, and specifically CapEx. India is also going to be the consumer of the world because right now the per capita GDP is roughly around 2,500. At 2,500, you're going to see a hockey stick of consumerism, and I'm hoping that that's going to create a trigger of consumer spend in India. I mean, the number of households which actually earn roughly $35,000 will go from 5 million to 25 million is what the forecast is. That's going to create consumerism, and that's going to create more data and more opportunities for the power AI. So, if you put all this together, and I also believe that we're going to go from a globalized world to a bipolar world, or or a world which is more heterogeneous, if I may.
Yeah.
And if that happens, I think a portion of the manufacturing ecosystem is also going to be transitioning to India. So putting all this together, I mean, you think you really think it's a very comprehensive story for the economy. I mean, the IMF has literally yesterday said 6.5% is the growth for growth for India. So we are excited. I mean, 250,000 people, 250,000 employees of Cognizant work out of India. We are moving into tier 2 cities. We opened in Indore. We opened in Bhubaneswar. We opened in Gift City. We just announced. We are continuing to go to places where people are versus bringing them to places where work is. So it is 2/3 of my workforce. That's where the heart of the company is.
Well, since you are in your silent period, we cannot talk specific numbers, but I want to understand from you, in terms of the turnaround that you embarked on when you took over at Cognizant, are you halfway done? Are you closer to getting it done? Where do you find yourself?
I mean, I'm on track. As I've always been saying, we want to be in the winner's circle at some point of time, and I'm continuing to be on that journey. I'm excited about finishing 2 years at Cognizant, and looking forward to taking this company back into the winner's circle.
Well, we wish you the very best of luck with that, Ravi. Always a pleasure. Thanks very much for joining us here in Davos on CNBC-TV18. Well, that was the Cognizant view on what could potentially change for the IT services model in an AI era, and of course why Ravi is excited on both AI and its power as well as India. We will take a break here, but the conversations will continue. Don't go anywhere. We're back in a moment with more on CNBC-TV18. Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to U.S. inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging markets? The conversations continue here in Davos 2025, and back with us in the CNBC-TV18 studio is Brian Moynihan of Bank of America. Brian, it's great to have you back here on CNBC-TV18, and congratulations on completing 15 years as CEO.
Well, thank you, and I remember our interview way back in India was one of the earlier ones, so we've both been at this a long time.
Yes, we have, but let's talk about Trump and what that could potentially mean for the banking sector, the hope of deregulation, and that's certainly what the banking sector is hoping for. But I just finished a conversation with Kenneth Rogoff, the economist, and he believes that any excessive deregulation, especially as far as the financial sector is concerned, will perhaps be Trump's undoing. How do you see the need for deregulation as well as the need to balance deregulation?
So we believe, my peers, ourselves, we all believe in having a very safe and sound, well-capitalized, liquid banking industry. And there's two reasons for that. One was that's good for America and helps it grow. Good for the world, helps it grow, supports growth around the world. And it's one of America's best industries. So who would want an industry that had any other characteristics? The second reason, it's more technical. Within the United States, when banks fail, we pay for it. So we have a higher interest in the regulators who come and go, and the politicians who come and go. We end up paying for it. So last year, we took $2.18 billion over 2 quarters in charges due to the failures of the regional banks. So we want them run well. And so when you think about it more broadly, we've had a problem that that the pendulum swung too far, and we want to bring it back. And the extra capital demands, it was quiet, but what happened is we kept increasing capital. So from 2019 to now, with a company having no more risk in it, no more loan balances, no more trading assets or wholly different anything, our capital requirements went up 25 or 30% by the creep in the system of all the calculations. And what we're saying is we got to go back. If we're well capitalized by Ben Bernanke, Janet Yellen, and Jay Powell's statements over the years, and we are well capitalized at that level, why do we need more capital to get the same capital ratio? It's not what people say, well, your capital ratio there was 11.2 and 11.9 and now it's 11.9. It's the underlying calculation is what drives it. So $30 billion more capital basically means the same capital ratio.
So that's the key ask there in terms of capital requirement from a deregulation perspective?
That's one. I mean, there was capital, and then thinking about the liquidity rules and how you support the market. The pandemic hits, instantaneously we take on $70 billion of loans. We provide tremendous liquidity to the capital markets. The way they've changed some of the liquidity rules, you can't do that because you can't hold the amount of treasuries. You can't, because they start on the requirements that require you to hold high liquid assets or supplemental leverage ratio, you end up not being able to hold treasuries or mortgage backs, which are government guaranteed and support the market. So again, we're trying to get them to put it back in balance. It was there before it moved away from us. And so, those are the types of things. And on the consumer side, it got to be regulation by rule or not regulation by rule, actual lawmaking by rule and extending laws that were not intended. And we have 100 senators and 435 Congress people and 300 million American people who put them there to make decisions, and regulators shouldn't make them. So all that will come true. And our job in the industry is to get it where it should be. It's fair to the consumer, fair to the company, helps drive American growth, helps drive worldwide growth, and focus on it.
Well, let's focus on growth then. What's the expectation in terms of growth in 2025 with the tariffs, the threat of tariffs playing out the way that President Trump has said it would? What would that mean potentially for inflation, and what will it mean as far as interest rates are concerned? Do you expect a rate cut in 2025?
So I think we'll find out here in the next few days. There's supposed to be a lot of executive orders and a lot of clarity ought to come out of the administration as they take office today. And so we'll find out what it all means. But based on the discussions up until now, our research team, which is which is the best research team in the world, and Candace Browning Platt and the team do a great job, basically had that if tariffs were 10, 15%, they would be offset by efficiencies, productivity, margin improvement, and then the price would the value would get passed back through the consumer, because America is a big competitive market. So it would go back to them. And so they were not unnerved by that. So even given some of that, they believe the U.S. grows at mid-twos, 2.4, 2.5 next for 25. And then they believe the Fed is done cutting rates. That's a little more, whatever the conservative, whatever the right word would be. They believe the Fed is done cutting rates. The market believes the Fed will cut the rates. When we look at the consumer information we have, the consumer's pretty healthy. They have a lot of money in their bank accounts. They're earning money. The unemployment levels are low. Their credit quality is good. And they're spending at about a 4.5% clip, our Bank of America customers, comparing the first part of January to last year. But it's kind of in a place where you'd expect 2% growth in the economy, 2% inflation. It's where it was in 17, 18, 19 when the Fed had raised rates. So it's a good normal place. And I think that's where the Fed has to be careful, because in small business and middle market companies, the interest rate pass-through is much more severe. So meaning if I borrowed at 250 basis points over SOFR, when SOFR was 25 basis points, and now it's 450 basis points, that's a big difference in borrowing cost. And so that's slowed down those customers, and we'll have to see the Fed watch that, because they are the employers. And if they slow down, they don't hire. And so right now everything's good. There's some enthusiasm with the new administration. We'll see if that plays out. But the Fed's got to monitor the downside as much as the upside, meaning downside the economy slowing down faster than they think.
You talked about the resilience that we have continued to see for the American economy, and consumer sentiment has stayed strong through 2024. What's the indication as we head into 2025?
Our team has always thought, and our data showed, that the U.S. consumer is in much better condition. You would have had people last year at this time or the year before say, oh my gosh, they spent all their money, there's going to be mass. None of it happened. And it wasn't, and by the way, if you looked at the customers we have, which is not a small sample, we have 40 million checking customers, you could see the money moving in and out. We've tracked the data for 30 years. they weren't depleting their accounts. The people who had money with their accounts prior to the pandemic had multiples of it before. The very high end, when rates went up, of course they moved the money into the money market funds and other places. So we didn't see that. The credit quality didn't, normalize in 2019, which was a very good year for our company and the industry. So a lot of this was just coming off of very low numbers up and then flattening out, and we've seen that. Now we've made it through that. So I think the idea of the risk, the downside, and the risk to the consumer is really if they aren't employed, and this is a U.S.-centric discussion, and that's going to come down to how businesses feel. We, basically have 213,000 people. We hired about 1,300 people a month to stay even with that head count. We kind of manage it down over time, but it's not like we're laying off people and changing our head count. And the productivity comes through, but if you manage ahead of it, and most companies can, it's a slow movement through society.
Well, as you pointed out, it's been a good year for Bank of America. What's the outlook now in terms of net interest margins? Do you expect them to be higher? Loan growth, what's the expectation for the year ahead?
So if we just had our earnings last week, nearly $7 billion, 82 cents, et cetera. The third consecutive quarter of moving north in net interest income, which is our spread business, loans and deposits. Deposits growing, loans growing better than the industry. So we feel very good about that. What we told them is we would move up again in the first quarter, just a little bit because there's 2 less days. And while that doesn't mean a lot to a lot of people, it's $250 million on a base of 14, so it's meaningful. And then we said we'd exit the year end about $15.5 billion. So that's a pretty strong growth rate. It'll be a record year for NII, given all the conditions that we see today. It'll be a record year, and the numbers should grow 5, 6, 7%, which is very strong.
Well, let's talk about India, because this is going to be your 80th year for Bank of America, and India is a significant milestone. How's India looking to you at this point in time, and specifically from a Bank of America point of view, what's the plan?
Well, there's, if you think about India, we have them growing strong next year, consistent with what they grew this year. It's now moved to the 5th largest economy and keeps moving north. All the programs of Prime Minister Modi and the governments over the years have been working. It's becoming hugely digital, 800 million phones, and all the stuff we talk about, and you see the digital impacts with our clients and our customers. Our business there is really 2 things. One is a corporate investment bank and a trading in underwriting and debt advice, and et cetera, and then in corporate lending and treasury services. And the second business is we have a big back office for the world out there, and about 20-some thousand teammates. And we've had that for a long, long time. And so that business, it's great. It shows the world that you can continue to develop. What that business was 30 years ago, probably when I first became familiar with it, to now is much different, and much different types of people, and huge campuses with schools and everything we do. So that's a good thing, and it would be a great backbone. But I think other people see that opportunity, which is the talent in India, the education, the ability to get lots of engineers quickly, and those things is great. When you go to the core business, we are very enthusiastic about India. We expect the economy to grow. We expect our business to grow with it. Kaku and the team do a great job, and we just expect that to continue. Interesting, the one in the middle is we've invested a lot in the treasury services for the real-time payments and things. And I think this is an area that we all got to be careful around the world, is we're dividing up the data about customers into little tiny pieces, and that's not efficient for multinationals. So I think one of the things that we try to talk to the European regulators, or the Indian regulators, or Brazilian regulators is, wait, this idea of taking information for multinational companies and trying to put it in little boxes.
Data localization norms,
is cost you a lot, and is it really going to provide a great service? Because you want those flows of capital. You want that multinational to be able to move money in to support growth, and then move it back out when it needs it somewhere else, because that makes it a better proposition for the multi. If it's money that goes in and gets stuck, or data gets stuck, so we're trying to help get that balance right. But it's a great business. We expect to grow.
Well, speaking about moving money in and moving money out, what do you expect in terms of fund flows into markets like India on the back of what we're seeing happen in the U.S. with the dollar strength?
Well, I think the fund flows in India ought to be among the strongest around the world, because it's sheer opportunity. And so, manufacturing as a major extra source, the services economy, which is strong. And by the way, it's building a huge internal economy. And that's one of the tricks for an economy to really get big and sustain, is to have that internalization of the economy, that consumption-based economy. And as the GDP per capita keeps moving up, and the people have borrowed a little bit more money to buy cars and things that are more capital intensive, but that's all going, and that's good stuff. So I think we believe the country has good prospects. Therefore, money will flow towards it, because what people want to invest in is where they can see growth, where they can see profit, where they can see opportunity, and that's your country is one of the places that people see it around the world.
Well, you know, and the Indian stock markets had a pretty strong year, just like public markets the world over, including the US, but the IPO market in specific had a stellar run in India. What's the expectation as far as public market performance is concerned in 2025?
So let me go back one thing more generally. One of the things that your country's been doing that's very strong is developing a source of energy which doesn't submit it to the world's energy prices through all the sustainable energy they've done, wind, solar, you know, et cetera, hydro, and all that is extremely important. Because in the end of the day, the biggest risk for most countries are oil price volatility. We saw it over the last year, and inability to get supply when you need it to support these wonderful manufacturers, and the environmental piece is the other major issue.
Yeah.
So your country's done a good job of creating energy security through renewables, and that's one of the things that gets lost in some of the discussion is the only way, what makes America interesting is they have energy security. We can produce our own energy. Now, we don't necessarily produce exactly what we consume, but we produce more than we consume, and we could flip it internal if we needed to and create an internal market. But for countries that don't have the core resource, you have to have power, whether it's nuclear, whether it's things to drive it to be energy independent. So that's something your country's done that's very good because it puts on a course to be less susceptible to importing inflation from gas price spikes or oil price spikes, which is important. The IPO market, there are 100,000 startups, I think, in India. There's 1,000 of them that are getting towards, you know, big enough and interesting enough for the public markets. 100 of them, I think, are unicorns or something like that. Some, you know, those statistics. Therefore, the markets will receive them. But I think the key is that with all the markets now, if you're, as we see across the world, if it's biotech or something that's really different, AI, that's different. But if you're a core business, you got to have a path to profitability because the markets won't support without seeing that profitability. So you either got to have pretty good cash flow and profit before you go public, or got to have a very, very understandable task, because you're competing against companies which make a lot of money and are making money. And at the end of the day, your valuation is ultimately going to reflect your ability to earn money and grow it in the future.
But let's talk about the transformational impact as well as the disruptive impact. What are you seeing within the business? You know, what's the take on agentic AI, which seems to be the buzzword here? How are you incorporating that into your business?
Well, so we think about AI across multiple dimensions, and we've been at it for a long time. So we have a virtual assistant and have had it for a long time called Erica. It has 20 million people use it every day. And now we've taken that technology, which was in a parlance of today, but nobody would have called it that back then. 10 years ago, when we built the models with some people, it's a natural language processing model, but it'd be a small language model. In other words, more tailored to financial services, more relevant with our understandings in it and our training in it. That now has been used for like our technology support for our teammates. So about half the calls that would have gone to a human being to interface with a teammate to change a password, order a piece of equipment, all now go to, all handled by the agent, the bot, so to speak. And then we put it into our Cash Pro, to our institutional payments, and it's used heavily. Then we put it into you know, our ability to do credit offering memorandums and the things. So we're seeing that technology go through. So we think this is very provable. In the coding space, we're getting about 10 to 15%. We got 1,000, 1,500 coders using it today, and we're picking that number up as we train them on how to use it. They still have to check it. We still have to have a human between it and deployment, because you can't sit there and say, oh, the model made me do it. What's going to happen? So we keep doing it. We think it has high possibilities, but in a financial services regulated, in a business which holds a, you know, the experience of 60 million consumers and hundreds of thousands of millions of businesses in its hands every day, you have to make sure it really, really works. And that's our experience over the last several years. So yes, customer help. Yes, employee efficiency. Yes, how you deploy the Salesforce, what Salesforce has in coming. We're one of the big users. We get advantage of that. Yes, in terms of any place a lot of data has to move in finance or risk and get thought through and put there in the analyst investment banking. Yes, coding. Yes, and we'll just keep working at it.
Cryptocurrencies, and that has been the big bet for President Trump. I mean, he's been vocal about it, and we're waiting to see what actions the regime will finally take on cryptocurrency. I don't know if you've seen what's happened to the meme coin overnight, the Trump meme coin, but, you know, do you believe that this is going to be an inflection moment now as how the banking industry looks at cryptocurrencies?
Well, there was always this goes back to the regulatory confusion and all this stuff. So not only in our country, but around the world, there's always been this sort of we're letting it go on, but you can't do it because we don't think you should, because it's so. In the end of the day, banks send all their money digitally today of any consequence. In terms of dollar volume, it's way over that. It's 99%. So $3 trillion will go out of Bank of America in the next 24 hours digitally. So it's not like an idea of sending money digitally in digital form transfers as anything at all. So if you think about that, we also believe in the blockchain. We have hundreds of patents. We're still trying to figure out how to work. So we got that. So the real question is, if it's a stable coin type of dollar backed, it's like a money market fund, 100%, can't break the buck and all those things. And we know where those assets are, and we can drive those assets, and our consumers actually want to use it. We think there's value there. And at some point, if it becomes okayed by the regulators so that you can actually do it, and it's okayed in terms of who's holding the money, and we do it, and okayed in terms of the attribution of who's moving the money because of the BSA/AML rules, then we can engage in it heavily. And you'll see bank coins and all this stuff for the commerce part of it, for the actual payment part of it. The investment part, I'll let better experts talk to you about that, because in the end of the day, the money can move infinitely. Today, digitally, this will be another form. So if somebody, instead of using a credit card and somewhere up in the mountains here in Switzerland, they can pay by a stable coin, so be it. That's just another way money moves.
So if the regulatory clarity emerges, are you ready to?
We've been studying it for years. It's not clear what you can do, and we can't do it through people who can't have the attribution to the customer level we have to have. We have to know, we have to know our customer's customer, and that's a difficult thing. So what we did to help in the banking industry, a different type of form of payment in the U.S. was Zelle. So we said we'll form one thing that the network of payees and payors are all bank customers, so we can rely on PNC or JP Morgan or Citi's having done the work with that customer, moving money around. And so I think there'll be ideas like that form as time goes on.
So let me end by asking you, Brian, 15 years, you've seen the bank through many difficult periods, the 2008 financial crisis, COVID, of course, the more recent one. What's been the big learning or the big learnings over the last 15 years of steering a large global corporation through difficult times and emerging stronger?
Well, the team does a great job, and you have to have a great team. That's number one. Number two, we have to, the organic growth engine, which has been really kicking in for 10 years now, continues to take market share in every business, whether it's Jimmy DeMar in the trading business taking more share, whether it's the investment banking moving from the 5th position to the 3rd position, whether it's in the consumer business moving our share. So the idea is we just have to continue to generate, whether it's building up our international platform. When the team took over in 2010, we had about 20 billion in loans outside the United States. Now we have 100 billion. So we've grown nicely. So the idea is that organic growth engine. So the trick was, in the early days, was to keep people focused on the organic growth where you cleaned up the thing. That hasn't been, there's no work needed there for a long time. So now it's how do you keep people driving the organic growth? We earn more money than very few companies that you're going to talk to here at all. I'm not talking about banks or non-banks, and we do it the right way. We do it great for our customers. So the principle are have a good team, drive towards the organic growth. You have to watch the risk because you have to be there for your clients in tough times, the pandemic, the drop in rates, the rate structure movement. And then at the last part of it, you have to have a team that really likes working for your company. We've worked hard on the benefits and the pay and everything we do for our company so that we have the highest employee satisfaction we've ever had.
I heard you say that you're just getting started.
Well, there's a lot ahead. This company has great prospects, and we're all excited for it.
Brian, many, many thanks for joining us. We look forward to seeing you in India in 2025, and we hope we can catch you there as well. But appreciate you joining us here in Davos.
We'll absolutely do that. Good.
Well, we will take a break here, and the conversations continue. Don't go anywhere. We're back in a moment with more. Those will, of course, be the big questions here in Davos. Is it? This is the first India pavilion, so to speak, India, Bharat, and as I pointed out, this is the first time that we have India putting its states together, technically under two roofs. And what we've seen happen over the last several years is that states have come out here in Davos. So it's of course been the central government, but also increasingly the number of states being represented here in Davos has gone up quite significantly. It used to be Chandrababu Naidu. He was the original Davos man from a state's point of view, but now we've seen Maharashtra, Telangana, in fact even UP now here in Davos as well. Of course the Chief Minister is not going to be here, but we do have ministers from the UP government who will be here. So this is the first India house, so to speak, and this is going to be home to UP, Telangana and Kerala. So Telangana, Kerala and UP are going to be part of the India house together, and it's also going to be interesting because this is the federal story. This is the beauty of India's federal story, and it's also its strength, so showcasing its diversity and its unity here in Davos will be something to watch out for. With the next India Pavilion, India, which is going to be home to Andhra Pradesh. Remember, Chandrababu Naidu is going to be here. It is home to Tamil Nadu and Maharashtra. So 3 states, so total 6 states here in Davos, 3 in the house that we just saw, which was Telangana, UP and Kerala. And here we have Maharashtra, Tamil Nadu and Promenade and Andhra Pradesh. Devendra Fadnavis, the Chief Minister of Maharashtra, will also be here in Davos, as will Revant Reddy, the Chief Minister of Telangana. So 3 Chief Ministers will be here in Davos. Let me show you what we are saying to the world here. And of course, all of this has been set up by Invest India. So let's take a look at the themes that India is going to be showcasing. We're going to go right inside. The themes that India is showcasing: the Indian semiconductor market is set to triple by 2032. So semiconductors will be part of the story that India is pitching, from silicon to success. And again, we've got semicon, the mission that the government has announced. We've already started to see investments coming in there. So semiconductors, electric mobility, EVs to account for over 40% of India's automotive market. EVs will be the other big theme that will be discussed here as part of the India story. So this is India, the roadmap to a $32 trillion GDP by 2047. India's economic overview, so some data and numbers and statistics here being highlighted here at the India Pavilion. Good morning. How are you? Good morning. How are you? Are you enjoying your time in Davos?
Yes, we are going to work.
And what are you looking forward to the most?
Meet everyone and for the betterment of the economy.
For the betterment of the economy.
Of the world.
So What?
You come from India?
Yes, from India. Where are you from?
Punjab, India.
Punjab, India. आप कहाँ से? पंजाब में कहाँ से?
पंजाब से मैं वैसे तो हरियाणा से हूँ, अम्बाला से।
अच्छा, तो आप यहाँ पे कैसे आए?
वैसे घूमते फिरते आ गए।
घूमते फिरते आ गए, बड़ी लंबी घूमते फिरते आ गए आप। तो कब आए आप यहाँ पे?
में रहता हूँ।
आप ज्यूरिख में रहते हैं। अच्छा।
20 years living here.
और तो आप ये डावोस में वर्ल्ड इकोनॉमिक फोरम के लिए पहली बार आ रहे हैं कि?
नहीं, हम तीसरी बार आ रहे हैं।
तीसरी बार ही आ रहे हैं।
हमारी एक रेस्टोरेंट है खान्स तारा के नाम से।
जी।
तारा रेस्टोरेंट इंडियन।
हाँ।
तो उसकी कैटरिंग करते हैं हम।
अच्छा, तो क्या खिला रहे हैं आज आप डावोस में? क्या है मेन्यू पे, क्या है? Well, that's lovely.
ये हमारे शेफ हैं जी दोनों।
नमस्ते जी, बहुत आपको शुभकामनाएं। आप कुकिंग करने वाले हैं और काफी लोगों को खाना खिलाने वाले। Welcome back. The conversations continue here at Davos 2025, and joining me now is Sumant Sinha at Renew Power. Sumant, great to have you join us. What's the big Trump takeaway for your sector?
For our sector, actually, the interesting thing was, as expected, Trump immediately withdrew the U.S. from the Paris Climate Accords.
Yes.
And he's made some statements about wind turbines and so on. And I see that, European wind turbine company prices are down, which is not a surprise. So I think, look, the good thing is that we've had the Trump situation earlier, so we have a playbook to fall back on.
Right.
And the playbook essentially is that the US might not do whatever they might have done otherwise, but economics is going to drive the transition, the energy transition forward, even in the US. Solar prices are down, they're competitive with gas. Wind, it's certainly in the Republican states, makes a lot of sense. And so the chances are that economics is going to drive the energy transition in the US. And the rest of the world, I think, is still as convinced about climate change and the need to deal with it as it was earlier. So I don't see that the rest of the world is going to pull back.
So you're not unduly perturbed?
Look, the benefit for us is that we are an Indian company sitting in India. And India is, I think, relatively on a totally different path as far as the energy transition and climate change issues are concerned. So I think we are pretty insulated from what's happening or what might happen in the US. And as I said, multilaterally, apart from the US, the rest of the world carries on climate change issues.
Yes, and that is something that we've seen, but we will have to see what the Trump regime eventually does over the next few years. But let's talk about India, Sumant, at this point in time. And, we have made gains on the renewable energy side, and we are moving closer and closer. Of course, it's a long distance away, but in achieving that target, what's the story looking like at this point in time?
The story is actually getting more robust, if anything. See, in the last 2 years, the government of India, the central government and various state governments, collectively auctioned off, hold your horses, about 130 gigawatts of new capacity. Okay, all of this has to be built out in the next 4 years' time, or 3 years' time, or however soon it can be built out, right? Which means that very quickly we will be on a trajectory to be actually adding 50 gigawatts of new renewable capacity every year. That head of steam is built up. Now it's a question of getting it executed at the
ground. So we've been doing what, about 25, 27 so far?
No, actually even less than that. We've been doing less than 20. This year is likely to be maybe around 25 to 30. And I would say that from next year onwards, you'll start seeing numbers of between 40 and 50, and then we'll maybe plateau off at 50, which eventually, if you extrapolate down to 2030, will take us very close to the 500 gigawatt number. And therefore, I think to all the skeptics of that number, I think we're going to get it done, or we're going to be very close to that. And the beauty of the whole thing, actually, Shireen, is that by 2030, we would have got a very robust IPP business in place with 500 gigawatts of installed capacity, the whole ecosystem, as well as the manufacturing capacity, because behind all of this, the whole manufacturing ecosystem is also getting indigenized, right? Solar is getting into India, wind is already there, batteries eventually. So this whole thing will be a complete end-to-end business opportunity right now with no dependence on any other country of the world, right? And given our needs of energy consumption and growth, and given the transition, we would require almost 500 gigawatts every 3 to 4 years after that.
Wow.
So by 2030, by 2047, the target for us to become Viksit Bharat, we will need almost 3,000 gigawatts of renewable capacity by that time to get to those numbers. And that requires an investment of maybe at least $3 to $4 trillion over this next 15, 20 years. So really, I think the story is starting in a way. Till 2030, we've done all the hard work so far to get us to this point. And I think after that, it's just going to be more of the same. And we'll start getting into things like offshore wind, floating solar, there'll be new technologies, battery installations will be much, much bigger, pumped hydro storage solution will come in. So I think the whole industry is going to change very dramatically from this
Well,
point.
speaking of changes and speaking of new bets as well, you know, on the nuclear side, and that is something that a lot of people here are talking about, especially in the context of the kind of energy consumption reshape that's going to take place because of the data centers guzzling energy at this point. Is that something that is being talked about in India, you know, realistically?
Look, that's a great question. And the thing is, keep one thing in mind, that the narratives that we follow are driven by the Western world. Okay, in the Western world, for the first time, energy demand is actually growing because of demand coming from data centers, which is why you hear so much excitement around data centers and what do we do about it and so on. In India, we've had demand growing at 6 or 7% every year for the last many years, and it will continue, right? So for us, data centers is just one additionality to our demand basket rather than being the only thing that is contributing to it. Having said that, the second difference is that in the US, transmission infrastructure is very limited. That's why they have to produce the energy near the data center because they can't transmit it. Again, unlike India, where we actually have a very robust transmission infrastructure. So we can produce in Rajasthan and have a data center in Bangalore, for example, right? So that is why nuclear is particularly of importance in the US market. And having said that now, let me also say that nuclear is going to be an important part of the solution, particularly the small reactors, of which again India has many already installed. And I think if we can do work on the fuel side and get the fuel sourcing supply side under control, because right now we have dependence on other countries, if we can get that under control through new technologies, for example, based around thorium, of which we have a lot of reserves in India, then you can actually see a fairly good domestic small nuclear reactor industry also developing, where the cost could actually be quite comparable to baseload power.
Okay, that's interesting. But, you know, on the manufacturing side that you spoke of, and yes, the government has been incentivizing manufacturing, whether it's solar or now batteries, etc. as well. You know, where are we in terms of progress? How much has gotten done? Where do you believe work needs to be done today?
So on solar manufacturing, you know, the government basically told us 3 years ago that they're going to stop imports of modules. Today we have a 50 gigawatt module manufacturing industry. In the next 2 years it will probably be 80 or 90 gigawatts. So there's a lot of capacity coming up. Now the government has said we want to stop imports of solar cells from next year, middle of next year onwards. And you'll start seeing the market already is responding to that, and various companies are looking to scale up their cell capacity. Now the government has to now take the next step, which is wafers and then polysilicon. And if they do that in the same sort of manner, the orderly manner that they've been doing it, I'm pretty clear that in the next 5 to 7 years, we'll have a full end-to-end solar manufacturing value chain as well. Now, it'll be more expensive than what you can buy from China, but it'll be a domestic industry with fully domestic value addition, and there is value in that. The second thing is, as these industries scale up, and as the technology starts getting more localized, you'll probably start seeing the delta of cost between India and China begin to come down. You'll start seeing a component ecosystem develop as well. And that's really when India can start becoming an alternative exporter to China as the plus one. And I think that's a point that we can again reach in the next few years' time.
So we've got the budget coming up. What's the expectation? What's the wish list?
That's always a difficult question to answer because, you know, there's so much that is being done in between budgets for us. Having said that, there are always tax tweaks that are possible. You know, one of the simple things for our sector is that we set up every SPV in a different, every project in a different SPV because of lenders' requirements and so on. So we have, therefore, more than 100, 200 SPVs. And we don't have group level taxation. And so it's very inefficient for us. So we end up actually paying a lot of taxes. In the rest of the world, you have overall group level taxation. So that's one simple thing that we can, for example, go towards. And then there are a couple of other tax tweaks. But the biggest one, which is outside the budget, is the fact that energy is outside of GST. So every time any tweak happens on GST in any part of our value chain, it's a net additional cost to us because we can't pass it on. And there are, you know, I think the government very often thinks that, you know, infrastructure is within the GST ambit, and so they make certain changes, and then it just impacts us negatively because we don't have the luxury of
Well, the GST Council is a whole different ball game, separate from the budget. So the headline for Renew Power in 2025?
I think more of the same. You know, we did close to 2 gigawatts of execution last year. We'll probably do a lot more than that this year. How much more, of course, the time will tell. So I think for us, it's very simple and clear. We are expanding our capacity on the IPP side. We're expanding our capacity on the solar manufacturing side. We are looking at the carbon markets, and those are the things that we'll carry on doing. And just given how much the whole sector is scaling up, we'll just continue to scale up along the way.
And plenty of opportunities there to scale up further, as you pointed out. Sumant, always a pleasure. Many, many thanks for joining us here on CNBC-TV18 to give us a glimpse into what the year ahead looks like. Thanks very much for your time. We will take a break here, but don't go anywhere. The conversations will continue from Davos. We're back in a moment with more.
शुरू हो गए तो आपको काफी फॉलो करता था मैं लास्ट ईयर का गीता गोपीनाथ का इंटरव्यू पढ़ा
Thank you जी thank you so much. It's very nice to hear that you're watching CNBC TV18.
कभी इंटरेस्टिंग होता है आपका 2-3 काफी
नहीं बहुत अच्छा लगा आप लोगों से मिलके एंड वी विश यू ऑल द वेरी बेस्ट। बिल्कुल जी, इंडिया वालों को अब नमस्ते, सत श्री अकाल।
हमें कुछ सक्सेस हो जाए,
जरूर होगी आपको बहुत सक्सेस मिले और बहुत शुभकामनाएं।
ऑलरेडी किया कि promenade is captured by the
Indians. Yes. हम पहुंच ही गए, आप बिल्कुल भारत के सामने, और आप लोग को भी डावोस के लिए बहुत शुभकामनाएं एंड थैंक यू। बिल्कुल खाएंगे जी, बिल्कुल खाएंगे। थैंक यू इंडिया की तरफ से, थैंक यू सो मच। It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering from sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC TV18 Budget Headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC. Welcome back. You're watching our conversations here from Davos 2025, and we've been speaking with a whole host of global CEOs across different sectors to get a flavor and a feel for what the year ahead looks like, but more importantly, what will be the mega trends that will shape consumption going forward. Joining us now is the global CEO of Novartis, Baz Narasimhan. Baz, always a pleasure. Great to have you back with us here on CNBC TV18.
Thank you, Shreen.
Before I talk to you about Novartis, I have to talk to you about what's happening in the world today, and President Trump's decision to withdraw from the WHO. Not entirely surprising, but a big step back as far as healthcare is concerned.
Yeah, I think it's consistent with the general pullback from multilateral agreements. You saw also the actions on OECD, on the climate pact. I think it certainly will have an impact on the WHO, given how large a funder the U.S. government is. I think what will be critical is to find ways for the most critical health programs to continue, whether that's monitoring for future pandemics or also critical programs in infectious disease in developing countries. I think it can be managed. It was managed in 2020, but it certainly is a blow to the WHO.
As we see this play out, do you believe that the role of the private sector to sort of provide that bridge, so to speak, in being able to address global health challenges will only increase now?
It might increase. I think anyway, the source of R&D was our sector.
Yeah.
Novartis is one of the largest investors in medicines for tropical medicine and neglected diseases, $250 million commitment, large-scale efforts in Africa and India as well. But I do think there's going to be a gap because I think our private sector can only do so much.
Right.
And I think we have to do it in partnership. I think what will need to happen is government will have to step in now as well as these multilateral institutions take steps back.
Yes, that certainly is going to be the case, that we cannot have the private sector fill the gaps that the governments like the US leave behind. But Baz, let's talk about the outlook for 2025. What's it looking like at this point in time? What do you see as the big opportunities?
For Novartis, we're actually expecting a really great year. I mean, 2024 was really one of our record years, both in terms of financial performance and our pipeline. We expect 2025 to continue that trend. We've really guided to consistent growth through the end of the decade. We're launching 10 new medicines. So there's a lot to be excited about for us right now. A lot of our focus is just getting the next wave of innovations forward, some of our new technologies. But I think it's a very exciting year for us.
An exciting year, but what about India? The last time we spoke, you had announced your decision to review Novartis India. You have almost a 71% stake there. Has there been any decision, or are you closer to taking a decision on what happens there?
I think we're not closer. We continue the process. I think the process is ongoing. I mean, our commitment to India is clear. We'd have 10,000 people in Hyderabad, fully integrated, as you know, into our, you were there with me, I think, last year in our operations. And I think from a market standpoint, we continue to watch and wait to see how the Indian pharmaceutical market will evolve. It's still a relatively small market versus our other global markets. I think hopefully as the government continues to invest in healthcare, continues to invest maybe in new drugs and new innovation, that market will come. It's probably still 10 years out, realistically. I think it's still some ways to go.
Still 10 years out, you think?
I think so. I think when I look at the scale of some of these other markets, if you think about Novartis'
China and
scale,
Japan?
Novartis is a $3 billion business in Japan, a $4.5 billion business in China, and a $500 million business in India. So I think that gives you a sense of the scale of difference. And so I think that will take time, but I think it will come. I mean, I recently spent 2 weeks in India, and I really get a sense of the energy, the booming middle class. I think it will come, but it's going to take some more time.
Specifically marketing tie-ups tie-ups in India? Because when we last spoke, you said you don't necessarily want to put more feet on the ground, but are you looking at more marketing tie-ups at this point in time?
I mean, as you know, we've done a few. We
Yes.
did one with Dr. Reddy's. We have now the sale of the private limited organization. I think for now we feel like we have the right footprint to launch the medicines that we want to come to market with. We've really now focused the launches to medicines we think we can launch in the private sector successfully. So I don't think there's a need for more tie-ups at the moment. I mean, what's interesting now is, of course, with some of the dynamics in the U.S. and China, I think there is now more opportunity for specialist firms in India to take up some of that slack, whether that's contract research organization, contract manufacturing organizations, supporting our research labs. So that's where we actually see an expansion. One of the important expansions we have now is in research. Novartis is now actually bringing fundamental, I made that announcement last year, and now it's really moving forward, bringing research into the country. And I think that will hopefully build a stronger ecosystem for drug discovery in the future.
You know, since we're talking about drug discovery, and the conversation here is either about Trump or about AI, so I want to understand from you what the implications will be of using AI as far as drug discovery is concerned. I mean, how hopeful do you feel, and what are we talking about realistically in terms of timelines?
I mean, I'm cautiously hopeful. I think we have really wonderful partnerships with Google DeepMind's Isomorphic Labs, recently won the Nobel Prize. We're big partners with Palantir and Microsoft. So we really invest a lot in AI and R&D. But I think the reality is, given clinical trial timelines, it will take 5 to 7 years before we really know. But I think I'm hopeful. If we could accelerate even a little bit the process of finding a new drug, or increase the probability of success a little bit, it has such a massive impact when you're investing $10 billion in R&D. If we're 10% more efficient, that's a big impact. So I'll take it when it comes, but we're gonna see how it goes.
But how much of AI or generative AI specifically have you managed to adopt so far already?
We're doing it. You know, when you think about some of the drug discovery work we do with Isomorphic Labs, we're already generating novel drug candidates using their technology, AlphaFold 2 and AlphaFold 3. We're one of their 2 core partners. That's one example. We do a lot of generative work on imaging as well, so radiographic imaging, things like X-rays and CT scans, analyzing all of those and then generating reports. So a lot of that is happening. I still haven't seen the impact yet, right? And I think that's going to take a little bit more time.
Let's talk about some of the trends that could potentially shape the way the pharmaceutical industry moves in 2025. Drugs going off patent, including one of yours, which is Entresto. It's a large one for you. The implications of that?
Yeah, we have 3 significant patent expiries later this year in the United States. I mean, the interesting thing for us is because we've had such a strong pipeline, we expect to fully be able to grow through this. And that's not always the case in our industry. I think companies, when they don't have a strong pipeline, they often see a sales decline, profit decline. That's not our situation. We fully expect to grow through this. It doesn't affect our midterm or our long-term guidance. So I feel really good about that. I mean, many cases, a big drug, you know, a $6 billion drug like Entresto going off patent could be a big issue. I think we'll be able to manage it and continue forward.
How confident are you about the pipeline? You've got 30 candidates that you've been betting on?
Yeah, it's a lot of work, but I think, you know, in the coming years, we're going to see hopefully the data play out. And what's really exciting is there's 3 areas where Novartis is very unique. We're unique in this radioligand therapy space, unique in cell and gene therapies, and unique in RNA therapeutics, where we've built this global capability. And as those medicines start to get successful, that gives us a really unique position. Because I think strategy is all about doing something unique versus your peers. And of course, there are many drug categories we all do the same thing. But it's what makes us unique that will make us win in the long run.
And that brings me to the question when we last discussed it, and you said, you know, I don't want to suffer from any FOMO to get into the Ozempic race. And you're sticking with that.
And I feel even stronger about that now.
Really?
As you've seen some of the recent data readouts where it's been hard to beat the first generation medicines. You may have seen that in the IRA drug price setting scheme, one of the competitor drugs is already now listed. You have generic companies coming in. We're going to look at obesity more from an innovation standpoint. Can we come up with something novel, something different, something easier to use? But I think joining this first wave of innovation is not right for our company. It's not a good use of capital.
Not a good use of capital. So what's the headline for 2025 for Novartis?
I think continued strong momentum and continued strong innovation with hopefully some big breakthrough discoveries along the way.
And do you hope to get the India deal done in 2025?
I hope so, but you know how those go. Let's see.
How many people are you talking to at this point?
Yeah, I don't know. I should probably get an update. But what I can definitely say is our Hyderabad center is booming, and we're incredibly proud of it. And I think that's going to continue to be a place of investment for us.
Well, Baz, we look forward to seeing you back in India. And thanks very much for joining us. We wish you the very best of luck for the year ahead.
Thank you, Shreen.
Well, with that, it is time for us to take a quick break, but the conversations will continue. We're going to be right back with you in a moment on CNBC-TV18. Most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
We own a bunch of these platform companies. We really have been in this space now for a while, and we continue to like it. We clearly believe that these are going to remain the wealth creators and the winners for a very, very long period of time. In between, there could be challenges for a quarter or two as companies essentially either accelerate or tweak their growth strategies. There will be competitive intensity, and in some of the cases, maybe some of the growth strategies may not work for a short while. We've seen, for example, like what the Zomato management itself has said, and we own the stock. Itself said that look, they saw a similar thing playing out in the case of food delivery, where they went in aggressively and then had to pull back later. It's quite possible that quick commerce will also witness a similar situation. So it's honestly not going to be for the faint-hearted or for the more short-term oriented investors. So if you're looking at the next 1 or 2 quarters or maybe 4 quarters, it may not be the right place to be. But if you have a 3-year, 5-year, or 10-year view on this whole digitization opportunity, we have to use these weaknesses to essentially continue to buy and load up on the space.
I think we committed a few years ago that we would invest 250 million. We have made that investment. You are seeing the products, you're seeing the growth. There are more products this year, and with that we'll share more capex plans as well. We're a global company, we cater to so many markets, and we will further that in EVs as well. We have launched iQube in some markets outside India. The electric scooter for BMW is designed, developed by us, and is selling in European markets.
Ladies and gentlemen, the President of the United States, the Honorable Donald.
Welcome back. You continue to watch our coverage here from Davos 2025. And as we've been promising you, it's a wide range of conversations. You just heard from the global CEO of Novartis, and it's time now to bring in Bejal Somaiya of Lightspeed. Bejal, thanks very much for joining us here back in Davos, same spot. But what does the view of the world look like this year?
We were here a year ago.
Yes.
And you couldn't walk down the promenade without all kinds of AI stuff everywhere, right?
And you can't walk down without AI this time around either.
But last year it felt a little bit hypey. I think there was this question of, okay, is this one of those moments, and then a year later there'll be something else. I think we're here this year with pretty broad recognition that it's here to stay. It's going to be very impactful. But there's a lot of questions about what that future looks like. But I don't think anyone's questioning whether or not AI is a thing.
Yeah. No, I think everyone's now talking about proof to, from pilot to proof, and everyone's talking about return on investment. But let's talk about the micro, and let's start with India and how the Indian startup ecosystem is looking at 25. I mean, 24 was a great year in many ways, specifically as far as the IPO market's concerned. What was the 24 headline that you hope to take forward in 25?
Yeah, it's interesting. When you look at 24, to your point, lots of excitement on the IPO side, liquidity, which is really important, especially for the venture asset class. it was actually a slowish year as it relates to new investing, specifically in technology. So that was a year where we saw a lot of firms actually head towards some older business models, including consumer brands and others. Early in 25, we're beginning to see, again, interest in some of these more innovative technology-led businesses, which we're really excited about.
So specifically, you know, the kinds of businesses that you're looking at, I mean, I met some fabulous space tech companies here, you know, Indian origin, and, you know, outside of the stuff that you're already invested in, linked to AI or not linked to AI, what's looking good to you today?
Look, I think the thing to remember is that every year there's a handful of incredibly bright founders who are doing things
and very
that we
young,
wouldn't have imagined.
very young founders,
often young, right? But we're seeing pretty exciting businesses in financial services infra. We're beginning to see what we think of as AI services businesses emerge from India. So this is now attacking, in a sense, the labor automation opportunity, right? Which is much larger, orders of magnitude larger than simply selling software that automates workflow. If you can automate labor versus workflow, the TAM is much larger. So these are areas that we're beginning to now see new businesses emerge, which we really weren't seeing as much of in 2024.
Let's talk about the quick commerce story and how that's playing out. I mean, nobody wanted to buy this story till 2 years ago, and now nobody can get enough of it. I mean, you're an investor in Zepto, which is, of course, hoping to go IPO in 2025. What do you make of the way that quick commerce is shaping up, given how competitive it's already starting to get?
Yeah, well, look, I think this is one of those markets that is extremely large, and you have a value proposition for consumers that is unbeatable. And I think we've seen this over and over again in India or globally. When you have a value proposition that is not incrementally stronger, it is orders of magnitude stronger. Consumers adopt it at a pace that one couldn't imagine. And when consumers do that, investors usually get behind it too. There were early on some questions about whether the economics of this business can be viable. I think we're beginning to see, just as we have in food delivery, that the economics of quick commerce, if you execute right, can be actually quite compelling.
But there's a question mark on the back of what we've seen happen with Zomato's results, you know, and that could perhaps just be a short-term thing. But the concern is that if this ends up becoming a price battle, you know, what will it mean eventually as far as economics go? Do you believe that we're possibly heading into a price battle, given the competitive landscape?
I think, given how important this sector is for Zomato, Swiggy, Zepto, and then perhaps even some of the e-commerce majors, because one way to think about quick commerce is not that it ends there, but that it is the insertion point into commerce more broadly, in which case this matters to a lot of companies that have deep pockets. So I think we have to assume, and we're certainly expecting, that there will be a period of capital intensity driven by market share build out and perhaps some price competition. We'll get through that. The question is,
how long will it last?
How long will it last? How much capital will be required? And which companies will come out of the other end as winners? We obviously are a little biased, but we think Zepto will be one of them.
Yes, I would imagine. But, you know, we've got Blinkit, Zepto, and Instamart in the race, but you've also got the big baskets of the world now coming in, Flipkart and Amazon getting into the fray as well. So is the market large enough to accommodate as many as, you know, a dozen odd players?
Well, the answer is the market may be large enough, but the capital that is going to be needed to see this through will not flow to that many players, right? So in the end, there will be a sorting. Look, if you think about food delivery, if you recall, there was a time when there were 5 or 6 companies. Today there are 2. And one of the companies was Uber Eats. Right. So I think you'll see something similar. Right now, there's a period where, as I said, this is an important market for many companies. There will be consolidation. There has to be. Capital will flow to the companies that are emerging as the winners.
You know, IPOs in 2024, and I think a recognition by the public markets of what new age companies bring to the table, but also an acknowledgement by new age companies to price right. And we saw that play out. As you look at 2025 and the pipeline, and it's a diverse and exciting pipeline that we look at, what would your hope be?
I just want to add one thing, Shireen, to the progress right of these companies, which is the companies that got public in 24. These are real businesses, right? When you look at the attention that these companies have paid to their economic profile, generating real cash flow, that's a distinct difference from the first wave of internet companies, and that's really healthy to see. The one caution I have is there is a sense now that any company can IPO.
Or every company should IPO.
Or every company should IPO. Yeah. And I think we have to be a little bit careful because the reality is the bar is still high. Once you're a public company, there has to be visibility. Yeah. There has to be predictability. You don't want to just get out and then have a new set of problems.
No, absolutely. But, the global trends that you're watching out for, America, what's happening in the Valley, and of course, more importantly, in the region as well.
Yeah, look, I think it's going to be a very exciting year. My sense is that we're going to start seeing investments shift from what have been overwhelmingly on the infrastructure and tooling side of AI to the application layer. We're going to start seeing applications show up in a whole number of different industries, defense, healthcare, financial services, and a long tail of smaller verticals. I think that's very exciting. I think it's also an exciting opportunity for India. At the same time, what we feel as a venture firm is the pace of innovation is changing at a rate that we've never seen before. And what that means for us is we have to keep reinventing ourselves at a pace that we haven't done before.
So what is the reinvention going to entail?
Well, I think it entails reading a lot of white papers and developing real expertise in the underlying technology, combining that expertise with knowledge of specific industries so we can have a point of view not just about the technology, but also how it will play out in a specific industry. So it's getting more complex.
An acceleration of funding in 2025 and deals?
I think 2024 was pretty hot. So my guess is 25 is going to be relatively similar. I think what you'll see is a shift of dollars to more application layer businesses from the infrastructure layer.
So what's the headline for India going to be for Lightspeed?
More of the same, Shireen. We're here to build companies for the next decade. And I think we're going to keep, whether the cycles are up or down, we could keep looking for great founders, building strong propositions. And if we see them, we'll fund those, whether the market's hot or it's not.
If the market's hot or not, you'll find the bets that you want to back. But always a pleasure, Bejal. Thanks so much for joining us here in Davos. It's been fun talking to you, and we look forward to seeing you back in India. Well, we will take a break here, but the conversations continue. There's a lot more that's coming up. You just got a take from Bejal Somaiya of Lightspeed. We'll be in conversation with Axis Bank's Amitabh Chaudhary right after this. Stay with us. We're back in a moment.
And Mrs. Trump.
Having witnessed another successful moment in the experiment that